Good morning, everyone. Good morning, good morning, morning. Happy Tuesday. How is everyone doing? Welcome to another live stream in the Fivers. So share with us, how is your week so far? Any trades that you have opened already this morning during the London Open? Share everything with us in here. So welcome to another live stream. And don't forget, guys, to subscribe to the channel. I think we are this close to reach 70. Well, good morning, Anastasiia.
75. Good morning,
exactly.
Pedro. Good to see you.
Good to see you as well. I think it's the first time that you are on the stream together.
Yes, it's the first time.
Mistaken. Yeah,
first
I think it is.
Time.
Mm-hmm. I'm curious. I'm interested to listen to your thought process, to see the way you trade. I've seen, of course, several streams that you have been on, but now it's going to be my opportunity to ask you questions about it. So I'm interested about it.
Likewise. It's a pleasure. It's honestly the pleasure to be able to host the stream with you. So good thing Jonathan is away for this week, so we have the chance, and also
exactly.
we have and the chance to stream together. So only good things. No offense, exactly. Jonathan. I still love you.
Yeah, let him enjoy his well-deserved holidays. Exactly. Meanwhile, we are reaching records. So as you mentioned, we are this close to reach 75,000. So subscribe to the channel. When we reach it, it's not an if, for sure we're going to reach it. We are going to give a really big giveaway. That's for next week. So giveaways all week, and next week as well, maybe another big one. So do you want to talk a little bit how the giveaway works this week, so everyone knows how to participate and potentially how to win an account with us?
Yeah, sure. So you need to be able to go to the link, which is pinned in the description of the video and also pinned in the comments. You go through the link and you answer a couple of trading related questions. Please do not ask us in the chat what is the answer, because if you are a trader, you are supposed to know the answer for those questions. Once you answer them, you will be automatically participating in a giveaway, and the giveaways will be hosted every single day of the week, like Pedro said. So Monday, Tuesday, today, right? We have one tomorrow and Thursday as well. And then all the winners are going to be drawn together. So make sure that you are here today and you fill in the questionnaire for the giveaway, and tomorrow and the day afterwards as well, so you have more chances to win. And besides this, of course, 75,000 subscribers incoming, and the next week we're going to have a huge giveaway from Jonathan when he's back from the vacation, very, very special one. So make sure that you go to the link right now and click on it and answer the questions.
Beautiful. That's it. So good luck for everyone. On Thursday you'll find out who the winners are, which is great. How are you, Anastasiia? How is your week so far? How are you dealing with all these news related to the situation in the Middle East, potential ceasefire or not? We'll see. I think just came out some news that maybe Iran is still doing something even after the ceasefire hours. I'm not really sure if that's true or not. But how is everything? How is your trading and how the situation? And I know that you like fundamentals as well, so I'm curious to see or to listen to your thought process as well. How are you interpreting this news?
So I'm just actually looking at the news right now. So normally that there was an information that the Iranian rockets were just launched again to the Israel. Now later, I said that they completely they reject the fact that there was a rocket. So they're saying there was nothing and they weren't attacking. And now just 5 minutes ago, Iran announced the victory over Israel. So it's actually, I don't know how long it's going to last, the ceasefire. It's very interesting. To be honest with you, yesterday I had one stop loss and I haven't traded afterwards, because the problem with this is that you do not know how it's going to end. You can approximately, in my perspective, you can approximately analyze, are they going to answer yesterday, for example, is Iran is going to answer US, for example, and start targeting their nuclear stations, which they did. But then you cannot predict how they're going to hit also the basis of oil, for example, and oil supplies. Is the oil supplies route is going to be closed or not? So those are the things that we can only closely analyze, but the outcome is not predictable. So with things like yesterday, especially in the first days, I prefer to stay away from the market. So after the first stop loss that I got yesterday, I was like, you know what, I'm just done. But I think it's very interesting when something in the world escalates. Have you noticed this before? That when something in the world escalates, it's like something else is happening underneath. So like trying to cover one thing with like another thing that is happening. So now, for example, last week we had the FOMC meeting, and they were saying no rate cuts, like in the next months, and perhaps we only have one rate cut this year coming. And now, since yesterday evening, when the situation escalated in the Middle East, FOMC started to say that, you know what, actually inflation is cooling down. So if we're going to continue to see the progress with inflation, so far we're actually thinking about the rate cuts in September already. And up until now, if I'm not mistaken, the probability of the rate cut increased like to 80% in September or something. I need to open.
Yes, I saw that increase as well.
Yeah.
1 second.
So it's very interesting. Yeah, it's no, the Fed isn't showing it yet, but I was just seeing the information from the Fed that they have like 70 or 80% chances of the increase.
I saw it as well. I think that's the problem, right? Because this fluctuates during the day, and maybe then it stays the final result of yesterday. But I think I saw yesterday as well. I think during those news of the attacks, when I looked at it, it was at around 78 or 80, which is interesting. It's something though to pay attention to. Of course, what is affecting, how is the probability is changing based on whatever news it's happening, right? Now, yesterday I think there was someone from the Fed speaking. That's the thing. When we see some of the Fed members as well, they have their own opinion. And they have their own views of maybe what the Fed should do. And then, of course, Fed Chair Powell has a little bit more of a weight on actually what's going on. But I think that Fed member specifically, I think it's a she. She has been always more towards starting to cut rates, I think, more recently. That's why she mentioned that most likely, if everything goes well with the CPI, maybe in July could already have the first rate cut. But there you go. Today is going to be interesting. We are going to have the Fed Chair Powell testifying. It's going to be today and tomorrow in front of Congress. It's a little bit more of a boring conversation. It was almost 2 hours. I don't know if you also watch that. I watched a few times. It becomes too political. You can see literally the two campos between Democrats and Republicans. The type of questions that they ask, they are literally based on whatever interests each party has. For sure, something related to the war is going to be, or to attack to Iran is going to be questioned. Because the last time we hear Fed Chair Powell, it was on Wednesday. The attacks happened Friday night or Saturday night. So that's a new thing that we're going to hear from him. Of course, the situation with oil is going to be a big question mark if that actually escalates or not, because that would have a direct impact in inflation, as we all know. And then, of course, the comments from Trump continue to make pressure for the Fed Chair Powell to cut rates. So most likely there's going to be pressure as well from most likely the Republicans towards the Fed Chair Powell. Why are you not cutting rates? When are you doing it? Like you're not helping the America, let's call it like that, by not cutting rates. Yeah, we'll see. It's going to be an interesting one. It's much more political. Of course, there's maybe something in there that Fed Chair Powell may say that moved the market, but it's a little bit more of a political conversation or questions than when comparing with the FOMC meetings, for example. Yeah, that's one of the big red news or big events of today's market. Something that just to finalize in there, just something that is interesting is that the market, it looks like is looking for good news. Like you can even look at the way the indices reacted, even oil, the way it dropped yesterday, as well, as soon as saw some kind of resolution. Even before the resolution was kind of reached, oil was already moving down after gapping up at the opening. But it looks like the market is looking for positive news. We saw the US indices also, NASDAQ at this point really close to achieve all-time highs again, and yesterday was a really positive day across the risk on asset, which is interesting. When maybe there is a lot of uncertainty still, but the market is reacting. Any small big news or positive news, the market reacts quite aggressively to the upside, which is interesting. Market is desperate for those big news or good news.
Yeah, it's actually very interesting what you said. Yeah, I got several questions yesterday. Why are indices going up if the attacks are happening, from the Irans as well? And I think it's like right now the market desperately, like you said, wants good news. So any good information and a good outcome that they see, it's actually pushing the market higher. They didn't hit their oil supplies. That's a positive information. The Trump intervened and seized the fire. Like that's a positive information, and the market is, yeah, Mike. Yes, you were asking how am I accurate like that? That's all his fault actually. Like that guy.
Yeah, that's not for sale. That's literally just a private signal. Yeah.
Insider information.
Exactly. But perfect, guys. Let us know what trades are you looking for, what assets you want us to pay attention, so we can take a look at as well at those assets. Yeah, personally, the way I was looking at what I've been looking for the market, yeah, what can I say? I think I'm still a bit bearish on the dollar index. I've been a little bit. I don't think when you're looking at the dollar index, maybe we can start from there. I don't think these lows that we created last week, we kind of created a triple bottom there when you're looking a little bit into the war time frame, 30 minutes, 1 hour. I was never really convinced that maybe this could be the bottom when you're looking into the bigger picture of this bigger move, now price moving to the downside. I don't, in my opinion, the way I see the market, I don't think this is a level where price is ready to just make a big reversal. Yes, we're going to have oscillations in here, price moving up and down, but I'm not really expecting price to just completely reverse from this level. I think dollar index could go a little bit lower before finding those buy orders that eventually can take us into a bigger level. I know that some of you likes to use Fibonacci, so let me see where we are in terms of Fibonacci levels in here. We already crossed the 61.8, so yeah, we'll see what the next level is going to be. But personally, I don't really think this is still the bottom. And same thing on euro. I think euro dollar can still go a little bit higher before finding more selling pressure, or a bigger selling pressure that actually turns completely the market. I believe that maybe many people are going to be looking at these lows in here as liquidity. So maybe many people are going to be targeting this structure in here and potentially try to break this structure, and only afterwards maybe start looking for longs. On the other side, yesterday we did manage to slightly break a little bit this structure in here. So this, in another circumstance, for me could mean a little bit more of a break to the upside, and maybe potentially price would go higher, but not yet, just because I'm not really convinced where these lows are still reacting on the left side as a good level to look for a move up. So yeah, that's a little bit more of a bigger picture. Intraday, of course, we can have oscillations. Maybe price can even come back into this previous structure here as well. Maybe there's another sell opportunity or selling pressure on the dollar index from there. And we'll see, of course, how price will eventually react from these lows, right? This can always be a level of support, which means that maybe price can actually find some buying pressure in here. But I'm not really convinced at this point that maybe that's going to happen. Yeah, that's a little bit of my view on the dollar index, and maybe just to finalize with euro dollar because of the correlation. Euro dollar, a little bit of the same thing. When you're looking at the daily time frame, I think maybe euro dollar does want to continue to move a little bit more to the upside. I'm even looking potentially for this around 1.2 after 1.2 something as a potential final target for this move to the upside. But in between that, we may have some oscillations in here. But I'm still not convinced that this is the top at this point. Even when looking into the lower time frame, I think that price respected quite nicely this demand zone, bounced from it, and now is starting to move to the upside. So again, I'm not really expecting price to hold this level again. Maybe can have a little bit of a reaction, but eventually I can see price taking these highs and trying to find some selling pressure a little bit higher before moving down. But from this move, what we don't have, at least the way I look at market, we don't really have a break of structure just yet to the downside. So I think we are still a little bit more bullish in here.
I saw you were looking at the VTI, so the oil. What do you think about that concerning everything that's happened so far already?
Yeah, oil. To be honest with you, it actually reacted from a great level technically when I'm looking at the charts. So basically came all the way back to this top in here that we created all the way back in January. This was, in my opinion, one of the most recent highs that kind of pushed price down. And for anyone that maybe tries or trades Quasimodo, this was also kind of a Quasimodo pattern in here, because you do have a left shoulder in here, we have the head, and then price kind of came all the way down and now kind of retraced back into this left shoulder in here. Usually there's some kind of reaction happening when you do have this kind of pattern. So the problem for me is that it happened at the opening, right? If this move had gone there any other time of the day and maybe not so aggressively, I would have liked to look for a short. I think you mentioned yesterday as well during the stream that you were potentially looking for a short on the back somewhere in here. I think you mentioned that with Dirk in yesterday morning. I think there's maybe some. I know that you like to look at volume. Maybe there's enough volume here, but price never got there, right? Price kept respecting the previous high, sorry, and then eventually just crashed. So yes, this could have been a level that I could have tried to look for a short, but price never got there. So yeah, now that price basically reached one of the levels that I was looking for in terms of this move to the upside, which was in here. And now is a little bit of wait and see what's going to happen. I could see maybe price having some kind of reaction from this, maybe from around this structure in here as well. Maybe this 63 something, 63.5. I think it could have some reaction. I think would be natural. Yesterday was a really negative day, and we are actually finding, 1 second. We're actually starting to see a little bit of a bullishness in here. I actually have maybe a level underneath that maybe price hasn't touched it. Maybe this one already touched it. I think in a different server, this demand zone hasn't been touched just yet. Yeah, different server, this one is still fresh. And actually, I was looking to potentially find an opportunity in there because I could see some reaction here. Now, I'm not sure if this is the level to push price up again or it's just a small reaction. I wouldn't be completely eager to look for price to test out the back to these highs or to break the highs. I think any type of trades in here now, I think it will be more of a lower time frame until we get a better perspective of what's the next direction on oil. Of course, if everything escalates, if everything goes badly, definitely oil is going to go up. So it's maybe more if we are in that campus, and if the piece is still not really arranged, and if it's going to be more conflict, it's more of an opportunity to try to see where you can go long again. Yeah, that would be a bit more of my perspective. But technical wise, I think you could find some buying pressure somewhere in here, and then of course I'm going to be interested at the lows as well if price does go there again.
Yeah, I have the same.
What is your take? Where is your volume? Yeah, maybe you want to share. Yeah, I'm going to share your monitor. 1 second. Yeah.
Exactly similar levels that you're looking at high time frame. I'm actually looking for potential buys as well. So if we look at the daily time frame, we will see that pretty much all of this area was a huge support for oil already for a long time. So that's level 64.00 to, let's say, 62.00. So something like, so this is already by default, as we can see, the price return that comes here has been rejected. So we see from the upside and also from the downside, the moment the price broke it, we also got the rejection. If we can see lower per time frames as well, that from my view, right? I use volume. So from my view, we are almost at the really high volume node here. So I'm looking for the price. The price can come a little bit lower because it feels like on the 4-hour time frame also we get closer to the candles. We see that the buyers are trying to step in, but still failing. So those 2 weeks to the upside are still telling me that there is a selling pressure active and the buyers are not able to push the price higher yet. So we see also the daily point of control is here, which means the majority of the volume for today still so far has been traded above the price. And that's also is acting as a resistance and is also pushing the price down. We see how the price is rejecting it continuously. So on the hourly time frame, we also see the same resistance being created at this high volume node. So this is a daily. And I want to see if the price comes closer to, let's say, 63.70, this here to 62.15 somewhere, and then looking for the reversal back to the upside. So some very similar to actually to what you're looking for. Well, I think
exactly that level that you marked in there, it's still fresh in another server, and exactly where you just draw that black line. But apparently on this server that I have in here, price already touched it. Because I'm interested as well exactly where you have there to see some reaction.
Yeah, I understand. So yeah, so yesterday actually, that is a very interesting thing. Yesterday I was waiting for a buy on oil. which and then a sell from those levels, which, as you can say,
Exactly.
you said yourself, we didn't reach this zone. However, the price went to the upside about, from my level of entry, about 140 ticks. Yeah, 140. And now a lot of people ask me, like, how do you get out? How do you manage your trades? So, come on, that's enough. Sorry for that. One of the ways that I manage my trades, and I make my decisions about entering, closing the trade early, for example, is waiting until the price has some kind of shift with the developing point of control. So on TradingView, it's a part of the PVP indicator. So if you go to PVP, usually what people use is a volume profile, normal histogram, and the point of control, eventually value area high and low. So it looks like this. Now, besides this, I also use the developing point of control. Developing point of control helps us to see how the liquidity is distributed in the market. So basically, where is the money moving? And it helps to see the momentum when the big amount of money is transferred somewhere. So this has been above the price. So the overall pressure was bearish for oil. But then it came closer to the price, which means that a lot of money was first invested at the level here at 75.87, and then it moved to 74.44 and 74.29. And it shows us that the investors were thinking that the fair price for this specific asset can be lower than the market price right now. So they started selling. They started to put their entries lower than the market price at that point, or the previous prices of their short entries. So at this point, that was already a sign for me to close the trade, for example, here. So this is one of the ways I manage my trading. If I see that developing point of control comes closer to the price, and if it's above the price and it's acting as a resistance, if the price is not able to break through it, I'm going to be at least securing partials or moving my stop loss and profit just for this to not happen, so not get completely stopped out on the profitable position before. At the same time, the developing point of control can serve me as an entry. So if the price does shift and it crosses it, like people use EMAs, that's pretty much the same principle, but EMAs are calculated on something else, and the developing point of control just calculated on the amount of contracts that are traded. So it moves with a significant amount of volume in the market. So that was my yesterday's position, actually. This one wasn't a loss. There, GBP USD was. That completely kicked me out yesterday. Oil was quite good still.
Yeah, that's a good way to manage the trades. Kind of like look at price as well. Like don't ignore what price is doing. You may have a bias, you may have your analysis maybe pushing one direction, but then there is a way to, especially with experience, and if you do know the levels that maybe you are looking for and the ones that you would like to see being respected and not rejected in order to continue to build confidence that the trade is going to go your way, there's definitely a way to manage the trades more actively. Of course, everyone's going to have their own strategy. Everyone can backtest how this journal, how the ways to manage their own trades. But that's a good tip that you just shared now. How to manage actively the trades and to come up with some profits instead of maybe a break even or eventually a loss, which of course helps the equity account to stay up. Yeah, which is really good.
Back to what the price is doing, sometimes we get so attached to the outcome, and in the end of the day we lose even the small parts of the profit that we could have gained, just because it was 20%, 30%, 50% more just a couple of minutes ago. But there's never a guarantee that the price is going to return there. So for me, it's better to get out, and then if eventually the price goes and crosses the developing point of control, I can always re-enter the trade afterwards and catch the continuation of the movement to the upside.
Yeah, that's a good point. Yeah, most people when they are in the trade, they are they're in the hope mode. What's the guy from the Best Winner Loses? He mentioned several times that when people are in the trade, they kind of are in a hope mode, and that's why kind of they just hope that the trade eventually is going to get to the target, ignoring everything else. And that's usually it's hard. It's hard to make decisions to close a trade when you are in that moment. But yeah, being not emotional, but having the capacity to deal with the trades and to see what price is doing. It's it's a big plus. It's a big plus. Someone is asking here actually a good question in terms of strategy. Guys, you think that the global crisis and tariffs affects one strategy, especially if you build your strategy when the market was not manipulated by present tariff? What's your take on it, Anastasiia?
To be honest with you, we talked about this yesterday a little bit with Dirk, that when the market change, like the background of the market changes, macroeconomical, then you will need to adjust the system always, right? So if you build your strategy when it wasn't like this, eventually you will have to twist around and perhaps change the timing of your entries or the duration of your average trade or the stop loss and take profit size. But even if the tariffs wouldn't happen and the war wouldn't start, it would still need to happen once at a time, like once in a longer period of time. People try to find the system that is going to work forever. So they're going to try to develop the system, the strategy, the way of entering and exiting trades that will serve them profitable for many years to come. But it's not possible because the macroeconomic background always is in a shape of like waves, right? It even depends on the circulation between the high and low interest rates, the high and low labor market, and the housing market. It's going to depend on the tension between the countries, and the Trump is not the only cause of it, right? There's always something happening, and if you develop the strategy in one aspect, it might not perform as well in another ones. For me, what personally really helps is backtesting and getting as much data as possible. So over a longer period of time, you can see also not the only positive sides of your strategy and the fact that it's profitable overall, but also get the realistic view on that sometimes for some period of time the market is not going to be good and strategy is not going to be profitable. Because I think we all come into the market, well, I don't know about you, Pedro, but almost everyone I met comes into the market with expectation that they're going to be profitable months after months, or at least aim to be as much as possible. And of course, it's good to aim to be profitable, but in the end of the day, it's not always possible. And if you see by the history that some months are going to be not profitable, some weeks are not going to be profitable, and overall, you still will be good, profitable, like overall system throughout the year or years to come, it gives some time, some peace and some understanding and comfort with your system that you just need to stick with it and not over leverage, not lose yourself in losses and sometimes losing streaks, because after a while it's still gonna calm down. Now, another thing, if I have my backtest data, it's easier for me to adjust to the changes in the market. So the only things that I need to do is to go and backtest the previous week or 2 weeks, for example, and see where am I losing money compared to where I was winning in before. So maybe I need to use a bigger stop loss size, for example. Before I was, for currencies, for example, I could use like 15, 20 tick stop loss for euro or for pound. And now I'm not using less than 35 tick stop loss. That's almost double, you know, and some say, oh, the system stopped working. And I'd say, no, I just need to adjust my parameters slightly because of the volatility. But it's easy to get lost if you don't have the data, if you are working in the blind. And if you have it, it's much easier to know which aspects to twist to make it profitable again. So that's my opinion. What is your opinion on that?
I agree with you basically in everything you said. I just wanted to add as well another aspect, and this may be a little bit for people that has a little bit more experience in the market. I'm not a big advocate of backtesting. I know how important it is, especially for some people that are still starting, and for everyone that actually wants to try to create an automatic strategy. Yes, go do backtesting. Maybe you can run an algorithm and you're going to get your backtesting done quite quickly, even on TradingView or any other platform. But anyone else that has a little bit more of a discretionary approach, backtesting for me, it will be more of I advocate backtesting because it trains your your brain to recognize the patterns that usually you are looking for, and you can practice by that. Like you can basically do 3 months of backtesting in 2 days. Like, so it's basically, I don't know, you have 3 months of that in 1 day. That's leverage, and if you continue to do like that, it's going to be quicker. But what I wanted to say in these circumstances, when there is a big shift of market dynamics, maybe because of tariffs, I remember really vividly the 2022 market. It was based on CPI, right? When CPI was the most important indicator that came out. Anytime CPI was coming, like in half a second, price would just either crash to the upside or downside. There was no manipulation. There was nothing which it would be just one direction and a big move, right? There was like 6 CPIs in a row, 6 months in a row of market just moving like that. And you cannot study that. You cannot backtest that, right? That's something that you need to adjust as soon as you see it happen once. If it happens twice again, like the next month, you need to start realizing that, okay, this is actually something that the market is really paying attention to, and you need to, for someone that would try that, what I mean here is there are edges in the market that goes and comes and goes depending on the market conditions that you have. CPI was one into 2022. Now is usually a Trump or volatility that maybe Trump can do. For example, the tariffs, the threat from Trump announcing tariffs, initial market moves one direction, and then it comes out, oops, let's postpone everything for 30 days or 90 days, and all of a sudden the market corrects. If you start noticing that pattern, it looks like that Trump was more bluffing than anything else. You can start fading the market in that direction, but you cannot backtest it, right? That's something that only you can recognize in the moment. You can study what's going on right now in order to actually being able to take advantage of it. Now, you cannot really just create a strategy based on this, but if you already have some kind of experience, you can add these nuances to actually help you to find a specific edge in that specific moment. And that's something that you need adjustment. This is not with backtesting, maybe it's more with journaling and continue review what's going on, what kind of opportunities are happening right now. Because yes, as everyone knows, the market is dynamic. As Anastasiia mentioned, there's going to be fluctuations between what's more important in a specific moment. We are in wars, we are in tariffs. Is it unemployment? Is it CPI? Whatever it may be, it's interest rates, whatever it may be. And not every strategy that you are backtesting from 2016 to 2020, that's maybe a different market. And now when you are coming and trying to trade today's market, it may be slightly different. And now there are strategies that can adapt to all those circumstances. However, there are edges, there are specific moments that maybe you can try to take advantage of it. So yeah, that would be my point, is try to identify what kind of small shifts happening in a specific moment, like maybe that last 3 months, and then they disappear. Like CPI, for example, if I'm about to try to trade CPI like I did in 2022, it's completely different. CPI almost doesn't move now. It spikes up and down. Like there's more uncertainty. Before it was virtually direct. As soon as it comes out, if it is kind of lower than expect, or in this case higher, because in that moment CPI, the inflation was going higher basically every month. That's why the moves were so aggressive. And the Fed was increasing interest rates based on CPI, so that was massive. But now it's different. I couldn't trade it like that. But yeah, that goes into you need to be always active and try to journal as much as possible the moves that are happening and try to define those edges.
I think it's also really important. The most important in any situation when you feel uncertain and you have losing streaks, make sure that you do not lose your account. Because after the losing streaks, after the craziness like this in the market, there always comes a series of good trades. And the worst feeling is to be able to lose your account on the bad streak. And then the next day you wake up and there would be a series of amazing profitable trades, which would make you a bunch of money. But because you didn't manage your risk correctly, over leverage, revenge traded, there is no money on no account left to take those good setups. It's a horrible feeling. So make sure that whatever you do not over leverage, do not revenge trade, or at least if you feel uncertain and you feel the urge to like get your money back, just step away from the market and take some distance before you're gonna get back. And then what Pedro said, reanalyze how you can actually adapt to the certain market conditions.
Yeah, and someone is asking about your which indicator to use in which platform tool for volume profile.
He's asking another one than TradingView, and it's not launched, so I can't really show it. But I use I would need to show it, I think. So maybe later in the stream if I'm going to launch the platform, because in a TradingView I use a PVP I have 3 PVPs for the different period. It's basically the weekly and the monthly one, with developing point of control included. And I use the VRVP, which is on the right side. It shows the distribution over the visible range of the price, so all the candles that are visible at the chart at the moment. And then I use the fixed range volume profile to determine the breakdown of the volumes during certain zones. Like, for example, if I want to see the specific volume distribution over the zone that I'm interested in, then this. But I use more things, but on the other futures platform, because TradingView unfortunately doesn't provide the level 2 data. It's impossible for them to convert, like how the way they take data out of the markets.
Yeah.
Not too long.
Let's exact with Simon. Yeah. Okay. I think someone mentioned, unfortunately, Amal, we said that your new 5 hours evaluation account is stopped out and they're not going to give up. Yep. Amal, could just continue. Okay. I think one of the most important things that everyone can do when they use an evaluation or an account, instead of just jumping into another evaluation, try to reassess a little bit. Okay, try to understand what went wrong or what you could have done better. Don't just jump into new kind of, don't repeat the same thing without journaling or reassess what's going on. Like, it's again, I don't know if the analogy works, but it's almost the same thing as jumping into new relationships with someone without really understanding what went wrong with the previous one. Most likely is going to repeat the same pattern. So yeah, as long as you kind of try to understand what went wrong and how can you improve, for sure you're going to come up better on the other side. So yeah, keep on going, don't give up, for sure. This is just a small block in your journey, but yeah, try to understand what went wrong.
Yeah, I really love this analogy. I really love it. Question about the USD cut earlier from Joe, and someone else was also asking here, Warren 2944. You were asking about the USD cut. Actually, I'm looking for the sell in the USD cut right now, since if we look at the higher perspective, we see that the price has reached the highs, had a huge sell-off yesterday. We have the majority of the volume here and this high volume node as well. The price rejected it perfectly. We had a weak rejection of this volume on 30-minute time frame. It's perfectly visible how the price is reacting on the daily point of control and the visible range. It's the biggest volume since the 19th of July so far, so for the past week. We had the rejection. And if I'm going to place my volume profile over this move to the downside, that's also going to be the biggest volume, where the biggest volume was distributed over this downwards run, starting from midnight in Asia. So I have 2 targets for this one. The first thing I'm looking for is here. So that's a level, one second, that's, let's say 965. Yeah, 965, the rejection I'm looking for. And another one is going to be, one moment, let's move it further. And another one is the developing point of control of the week right here. It's 670. And the dog is confirming the USD right now. I don't know what's happening with him today. I'm sorry for that.
That's perfect.
So talkative today. So that's 965 and 670 levels. I'm looking for the USD cut right now. I entered a little bit higher, so 165, when the top was already open. So you guys seen it, but it's still a good run. I'm expecting something around 1 to 3 risk to reward if this one works out for me. Again, remember, not as so do your own analysis.
Yeah, I like it. Unfortunately, I struggle to open these continuation trades. I think I could see exactly the same that you are working in terms of maybe a further move to downside. I was about to bring my chart. Yesterday I was looking for a short, but the price didn't really make the final move up that I was looking for on dollar count. Actually, let's just do a little bit more of a bigger analysis or higher time frame analysis. So dollar count reacted really nicely from this demand zone last week. This was something that we actually were talking about as well, at least during my analysis. I've been almost patiently waiting for price to get closer to this level, even when it was in here or in here. I was still a little bit more bearish, and then price finally turned. And one of the targets that we could have been looking for, maybe somewhere close to this top, or then I do like this. I like this supply level. It was also kind of a daily level as well, if I'm not mistaken. Yeah, somewhere around here, where price could eventually see some kind of a reaction. Unfortunately, what I was looking for a small, an extra fake out in here. What the price created out of the structure, I was looking for an extra move up, and then yes, then I'll be looking for the short. That never happened. Price kind of hold, and then it just dropped. Now good reaction also in here from the supply after this initial move down, and now I could see maybe price getting somewhere closer to this level, or then eventually even going a little bit lower. In here, it's a little bit more in the mix. Maybe with this break of structure that we had a little bit from this level, maybe eventually price can go higher again. That's something that we can anticipate or look for. But for now, I think price can go a little bit lower before we have those long opportunities. At least somewhere around here, I would like to see it going to. So at least a little bit more to the downside. But yeah, I do struggle. This is not my trades. I trade kind of a bit more of the extremes. In these ones in the middle, I struggle. I wish I could do them, but I really struggle with it. I always I always expect kind of fake out. When I enter in this type of trades, there's going to be always one fake out that stops me out, and then price continues. So I end up giving up on this type of moves, and I just patiently wait for price to get closer to the extremes to look for trades. But I think I kind of agree with you, Anastasiia. That dollar cut could go a little bit lower. On the other side, actually, I don't know if you look at the other CAD pairs like Euro CAD or Pound CAD as well, because I think Euro CAD in particular, I think did a massive move yesterday. I think it's close to some kind of highs. Where is Euro CAD? It's in here. So yeah, it's kind of coming back to these highs in here all the way back in April. And when you're looking even into a higher time frame, it's more of a kind of a level of resistance all the way back from 2017, 18, and who knows when. So that's going to be interesting to see if EuroCAD actually wants to continue to go higher. And yeah, it's going to be interesting to see if that's going to happen or not, or if it's going to find again some selling pressure somewhere around this level at around 1.6 or not. I could see it, to be honest. I could see EuroCAD maybe finally taking out these stops in here and trying to go a little bit higher. I think I could see that, but I still need confirmation for that. And maybe one of the trades is after price starts breaking some of these stops, maybe there's a continuation setup in here, and maybe gain some momentum after price finally breaks above this level. Maybe there's an opportunity there as well to look for.
Swing and reversals.
Sorry?
So you are trading swing reversals mainly.
Not just swing. I can also look for something in the lower time frame and more intraday opportunities. But I do like to have my higher time frame analysis and try to see where there is space that price may wants to move towards to. And based on that, then I try to position myself accordingly towards that direction. I trade a little bit liquidity as well. So when I start seeing, for example, when I start noticing that price already created one top in here, then fake out, okay, that's good. So this one could have been a short opportunity for me. Price already reached the target. Like if I was about to just describe this, when do we have this move in here, and then price actually managed to break some structure in here. This could have been a good short, and price reached the target. Target is basically coming back into the previous, basically the origin of this move up, and the origin is basically here. It's basically the demand zone that we have in here. So now that price reached this target, when price now comes back into this top in here, I'm not really enthusiastic in looking for many sells in here. I'm actually expecting now for price to go up and break this structure, maybe now aiming towards more of this direction in here. So of course this is a weekly time frame, so there's still opportunities maybe to short in here on a weekly time frame. But what I mean is from here I'm not expecting price to just come back into this level again. Maybe I'm expecting for some reaction, respect the next structure, and then just continue. And maybe to have that situation happening again until we eventually get now to the new extreme, which is here, at least on this chart. It's basically, yeah, looks like that we are within this range in here. We fake out this top, then we fake out this low, and price is basically ranging in between this 1.7 to 1.28, 1.29. Yeah. Yeah, it's a little bit my thought process with many variants in between.
Yeah, I can see it happening as well. Interesting how different approaches always, but you can see similar outcome approaching the market, completely different perspectives, you know? I find it really fascinating. Guys, by the way, you keep asking where are the questions and when are you starting the giveaways. The giveaway link is pinned in the chat and also in the description of this video. You can find the link. So what you need to do, you need to click on this link and answer a couple of trading related questions. And after you answer those, you will be already participating in the giveaway. And we are doing them every single day of this week. We did one yesterday. We are doing another one today, tomorrow, and Thursday. And then all the winners are going to be drawn on Thursday afternoon. So make sure that you participate in it. It's a special week. While Jonathan is on holiday on a well-deserved break, we are doing the special giveaways for you to make sure that you don't miss out. And I think we are really that close to hitting 75,000 subscribers. Like, I think we have like 100 or a little bit more people left. So make sure that you hit the subscribe button on the channel, because if we do this, or whenever we do this, as soon as we can, we are going to make that huge giveaway for all of you next week. So make sure that you do it, because you really do not want to miss out on the prize that Jonathan has for you whenever we achieve 75,000 subscribers. And for just as a note, we really appreciate every single one of you, your engagement, your comments, your trust, coming on this live streams as well, being with us, and make sure that you share it with your fellow traders, whoever can benefit also from this live. We are trying to build a really nice community of traders here, so make sure that you share it, and we have our community growing.
Yeah, exactly, guys. So keep on going. We have been growing a lot, to be honest. I think since the beginning of the year, I think we were like maybe 55 or 60. We know we're already at 75. And of course, the goal, I think, is the big 100, but it may take a little bit longer. But for now, of course, 75 is the next target. So that's the one that you are aiming for. It's like in trading, okay, step by step. We don't need to start aiming to, maybe we can write in a trading plan that we want to be funded with X amount of money under capital. But we need to celebrate step by step, and you need to focus on daily progress. And that's exactly what you are asking here, you guys, to do. Keep subscribing. Keep pressing the like button as well, okay? That's important as well to show that you guys are enjoying what you are doing in here. So keep on doing that as well. Anastasiia, do you trade the yen pairs? Is that something that you trade?
I do, but only the main one, so only USJPY. So in general, I trade only major section, because I can relate to them in the futures market. So even when, for example, now I'm looking at the EUR. So normally don't trade. I open it because you were covering it. But now when I'm looking at USD CAD, my base analysis is made on 6C actually. So that's why I only trade majors, because I can check it on the futures market. Otherwise, I'm feeling like I'm a little blind. I have not enough data. Why are you looking for setups?
I totally understand what you mentioned in terms of not having enough data. Yeah, 1 second, because I saw something on your chat on EuroCAD. Can you go back to your EuroCAD? Just something that you saw. Is that EuroCAD? Which time frame are you looking at? 15 minutes. Okay, got it. Okay. Yeah,
right
I was not looking.
I'm actually looking for the potential sell from the zone here, perhaps. So I can see this happening even in the EuroCAD. I would need some confirmation though, but I think it's quite possible that if we reach back, 159, 195, retest this, I think it's a good entry for a sell, perhaps.
Yeah, that looked like a Quasimodo to me. That's why kind of, where is she looking at? Because I didn't see that on EuroCAD. But yeah, you were looking at 15 minutes time frame. I was looking at 4 hours. That's why I didn't notice that one. Because that looked like a Quasimodo to me, and that would mean a short as well, if that was the pattern that I was looking for. Okay. But in regards to the dollar yen or to yen pairs, what's your take on dollar yen? Are you bullish? Are you bearish? What is your take on dollar yen? What are you looking for? A few guys also asked, I think, about the yen pairs.
Let's have a look at this. I haven't looked at it for a while. The last that was actually perfect. I didn't trade that though. You know how you like draw it and you completely forget about it? That was an analysis from last week apparently for me for the US dollar yen. I'm overall bearish on the dollar. So I'm actually expecting the continuation for the short for the USD JPY right now. However, not perhaps yet. So I would be I would be entering the short positions if the price would break this zone here. The same zone I was last week waiting for a long from, and so it's pretty much what happened because of the volumes as well. But if we are able to break this, I don't think it's going to happen yet today because we had a huge sell-off. I would expect some kind of pullback first, and then after the pullback, maybe the continuation to the downside. Now, the major, probably the best entry for me would be to wait until we break 144.560, 144.750 zones, then wait for the pullback and the continuation. So from those two zones here towards the downside, if I would be a little bit more risky, I would probably go long here to catch the correction, which I really don't like doing. So I'm gonna skip that. But overall, I'm bearish, not because of yen, but because of US dollars, to be honest with you. With everything is coming to some kind of conclusion regarding the rates. I think the market has been really hungry for this positivity regarding the rate cuts for a while already, and they've started giving, the Fed started giving hope to the market since last evening already. I think it's gonna continue because we don't really need to wait for the rate cut for the US dollar to lose the strength already. It can happen out of the voice intervention, which has happened already. So you've covered also the DXY index before, and I'm quite bearish for the DXY. I was waiting if it breaks up, I would be buying it yesterday, and then the information about the rate cuts happened, so it actually never broke the level and never held above it. Right now we are at the zone where I can expect the pullback from. So from this zone here, some kind of correction, but the same as for USD JPY, I would expect the pullback to the upside, and then the continuation lower. So something like this probably would make sense for me for their dollar index. Or perhaps the other scenario is that it's going to just break, retest, and then shorten. That's going to be aligning with this situation on USD JPY. But normally I would wait for something like retest here or even to the previous zones here, and then the sell from those zones. But I don't have the entry yet, at least for the USD that I would like to take.
Yeah, now on my view, dollar yen at this point is a bit in the middle. So it was an interesting move last week or something like that, with after respecting this level of support for so long. Then we had to move to the upside, and actually yesterday was a good reaction also from this top in here, from this level of supply. But the pair that I actually like, or something that has been working really nice with the dollar yen, is when you're looking at dollar index and the yen index. I think anyone that does the analysis on those two indices I've been managed to predict a little bit quite nicely the market, because the dollar has been quite trendy, and the yen index as well has been quite trending and kind of in the different positions, which had helped actually the dollar yen to make really interesting moves during these last few weeks. Sometimes, especially in the past, when you were kind of trying to cross to 150 and then whatever, dollar yen was a difficult asset to trade a few months ago. I was kind of just ranging a little bit without much momentum. The dollar and the yen were doing different things, but now recently it has been quite nice. So before I even analyze anything related to dollar yen, I like to take a look at the yen index. And we have been bearish. We have been bearish for quite a while, since basically price reached this top in here, that have been a bit bearish on the yen. As a consequence, the yen pairs, the individual yen pairs would go up, like they're doing the opposite of what the yen index is doing. And now we managed to break this important level of support in here yesterday, I think, or 2 days ago. I think it was yesterday that we managed to break out this important structure. So I think that can mean that maybe price does want to go lower a little bit more. Okay, the way I look at it is kind of open the door for maybe price eventually to go a little bit more to the downside. But before that, maybe price needs to find a new level to find more selling pressure in here. So that's something that I'll be paying attention. So bigger picture, I think the yen index, the DN index, yes, can continue to push a little bit lower. So that means maybe that the dollar yen may go a little bit more to the upside. I'm still not sure when, but meanwhile, this one needs maybe to correct a little bit more. Let's see how price may react within the structure to see if there's going to be anything in here or not to continue to push lower. So yeah, maybe price, for example, needs to go a little bit higher in here, the yen index, and maybe the dollar yen may follow exactly what you mentioned, maybe continue to go a little bit lower. I could see that happening, and maybe somewhere from around this level, maybe can find new buying pressure. So that's something that I'll be paying attention. I don't like anything in particular in here. I think price already kind of, when it was moving up, it already reacted from the demand zone. So I'm not the biggest fan of now any level in here in particular. I'll prefer actually if dollar, most likely dollar yen is not going to drop just like this, right? There's going to be some kind of movement in here. But I would like to see it coming all the way back close to this low, and then with some kind of PM, we can find some buying pressure, which most likely can mean that the yen index is going to go a little bit lower. And by the time that dollar yen may makes this move down, maybe dollar index may continue to go a little bit lower until we find the next level of support that maybe find some bullishness, and that's maybe the moment that dollar yen may finally make this move up. Okay, again, many variables in play in here. But definitely an asset that you can analyze between yen index and dollar index that helps tremendously when you're looking then for to look for trades on the dollar yen. But now it's back in the middle, so we're looking a bit more within this range. Yep, extreme. Now it's middle. So I don't really trade that much in here. Yeah, we do have euro yen. Like if maybe can pay attention to euro yen. Euro yen also made a massive move, so this was maybe a nice move to the upside after breaking out the structure. Also respected this was here quite nicely, and it's getting closer to this top. So I was actually looking a little bit higher as well on euro yen. I had my level a little bit higher in here, so maybe I'm still waiting to see how euro yen may react some around this level, or you can drop a little bit more before pushing higher. So that's also something to pay attention. And of course, the yen index can also help to determine when we can expect those moves. But there you go. Maybe I can expect a little bit more of a move to the upside in here on the euro yen. But euro yen in this case it's getting affected as well with the euro. So there's maybe a little bit more of a ranging market, not so much of a direction market when looking at the dollar yen. So that's the tricky situation with the yen pairs, which is quite interesting. Sometimes it's a dollar yen that is ranging, euro yen and pound yen is moving quite nicely, or the opposite, dollar yen is moving quite nicely, and euro yen and pound yen are moving a little bit more in a ranging way. Yeah, it's just dynamics of the assets. Yeah. Someone is asking as well about the pound. I think, yeah, DJ mentioning about the pound in here. I think DJ likes to trade a bit more of a swing approach. So DJ, tell us what you are actually looking for in the pound. Are you still looking for shorts? I think you're looking for shorts in the more of a swing position. So let us know what you are looking for. And yeah, someone passed the funded account. I think so. So congrats, Akash. Let us know what account was it, and what's your plan. How are you going to approach now that you got funded? What is your what's going to be your risk management approach? And good luck, all the luck, and I hope you get many payouts with the funded account. Yeah. I think you mentioned as well, I have realized the fibers have a very small spread, those that matter a lot, because I tried another company at the same time, but I fell as kept eating my stop loss. Akash, spreads are a cost of trading. Okay, so spreads remove your profits. If you pay more spreads, you need to wait for price to get a little bit lower or a little bit higher for it to get filled, and that differentiation of the difference where you get hit or you get filled in your order, that's a cost. So the lower the spreads, the more benefit for you, because you're going to, first of all, most likely you're not going to miss positions or entries. Sometimes because of alpha pip or a pip, sometimes you may miss an entry, so that's already another big factor. But mostly you are going to manage to have better entries, which means you are going to make more money out of it. It's like basically you're going to reduce your costs, and that's always a good thing in trading and everything. So yes, the fibers have the best spreads in the industry. That's a fact. It has been tested by different We have different software, different programs. Prop Format, for example, is always testing the best spreads in the industry across different prop firms, and the finders have the best one. So that's perfect. All right. Congrats, Avash. Yep, many people. Congratulations. What's up, Henry? How are you? What's the condition to get the giveaway? It's all the instructions. So just click on the link. You have a question. You need to answer that question. You can, if you don't get it right on the first time, you can repeat the answer until you get it right. And then you are in, and then you can follow the next steps to get more entries. And all the giveaways are going to be announced on Thursday. Okay, Thursday after 12 p.m. So in the last hours of the live stream on Thursday, we are going to announce the 5 winners of the giveaway. And as you mentioned several times, we are really close to getting 75,000 subscribers as well. So when you get to that mark, next week with Jonathan, that's going to come back from his holidays, he's going to give us, all of us, a big giveaway to celebrate the 75 mark. So subscribe to the channel, guys. Press that like button as well. Keep sharing with everyone you know about trading. And if you're enjoying, as I mentioned, keep pressing that like button. All right, more guys. Of course, many of you already shared gold. So let's take a look at gold. And anyone that has a trade on gold, feel free to share with us. What are you looking at? Are you bullish? Are you bearish? What are you guys looking at? And yeah, let's take a look at gold now. Question, 1 second. There's a question for you, Anastasiia. How do you use the PVP and what are the settings and what I'm looking for? I believe you get this question maybe every week that you are in the stream.
Every week. Well, let me just briefly go through this because otherwise it's going to take a very long time as well explaining. But briefly, I'm using the PVP indicator with those settings. So you can take a screenshot of that, and the period is different. So I use a daily, weekly, and monthly. I'm an intraday trader. So if you're a scalper, you can go even to minutes, and you can set, for example, for an hour or 15 minutes, PVPs and the developing point of control. You can play around with the period. Now, I leave the value area around 70%, and for the style, I completely turn off the volume profile, which I don't recommend doing if you are a beginner. Then you might need the histogram and the visualization of the volumes distribution. And then the point of control and developing point of control. The whole point of volume is that you're looking for the big volume areas as a rejection zones and as a magnet, basically, and you trade from volume to volume. So if you have a very big volume area somewhere, like for example, for gold right now, everything is above the price. So this is the whole huge volume area right here. We broke this downs, we broke this point, the value area low as well. This move to the upside. Right now, I'm waiting for their gold futures to come closer to 32.66 area. So somewhere right here. Okay, so that's pretty much what I would be looking for the continuation. Because if I trade from the volume to volume, then this is the high volume node and this is the next one. And another perhaps stop that I would be considering is this, but for the rest, it's a free fall for until 32.67. Unless something else crazy doesn't happen in the world, which it can, of course. But by the volume profile itself, that's the whole idea.
Yeah. So what is PVP? It's a private party. So that's a private party that only Anastasiia has the power to invite some guests into it. So you don't. If you don't know it, it's because you didn't get the invitation. That's basically it.
Only by the guest list.
Okay, DJ. Okay, we are going to be looking at the pound dollar in a bit. So we are looking for shorts. Okay, we're going to take a look at that in a bit. But before that, yeah. But before, exactly, private party. Exactly, that's what I mean. And again, just Anastasiia has the power to invite anyone she wants. So yeah, maybe you need to you need to be more present in here on the live stream to be able to be part of those parties. And
yeah, the secret access word, the secret access word is hidden somewhere during the live stream. So make sure you watch it all from the first minute to the last one. And click the subscribe button and the like button. That drastically increases your chances of getting the entry pass.
Exactly. Somebody is asking, so do you target support or the next POC? What usually is your targets?
I do not use the support resistance terminology a lot at all in my trading, actually. I think those are the things that we usually try to implement as traders. We talked about this with Dirk yesterday, that we as human beings are trying to simplify the complexity of the market, and we use support resistance, trend lines, to just simplify it, whether it has actually nothing to do with the price itself. So I use the volume areas. I use the accumulation of volume and where the biggest interest was for them from market participant as a targets. So that would be the next volume area. So on this example in gold, the next big volume area is here, right? This one, and then the next this one. So those two zones here would be my targets.
My analysis on gold is basically the same as yours. I'm just looking. This was my wishful thought. Okay, whatever I have in here, it would be for price to break below this and come back, because my perfect level to look for a short, it will be back into this top. But most likely that's not going to happen. This is a wishful thought, because my bias also is expecting price to go down on gold. And I'm looking also at, I think you have this 3,280 or something like that. I think that was one of the levels that you're looking for a potential target. So yeah, I think price and gold is going to most likely just continue. Everything in here for me is a bit compressed, so I'm not really seeing price kind of stopping in there. I think price eventually is going to target this low, somewhere around here at least. So yeah, that's more or less what I have on gold. Price kept respecting this structure. Sometimes it happens. Price creates kind of a range in here. It keeps respecting. This was maybe enough to create this kind of liquidity quite aggressively up, and then kind of retest it again. My favorite, as I mentioned, it will be somewhere back to this 3,430 something. Yeah, whenever price gets there, that's a different story. Until then, let maybe gold continue to move down, and who knows, maybe it can even go all the way back to 3,180. Who knows? But I'm a bit more bearish on gold than long so far. Now there are different ways that price can do that. Maybe price can just respect wherever it is, where it is right now, and just drop. Maybe can even retest this level one more time, but then drop again. Yeah, it depends on the strategies that you guys use. But I could see gold also aiming towards that level, just as Anastasiia mentioned. And you can maybe take a look at silver as well, because silver, I think it's getting really close to an interesting level. I've been waiting for it. Where is silver? Yeah, we are getting close to this level here. This back 2011, yeah, basically 2011. That's been a long time. So we moved away from this range, and I was looking. Yeah, price I think already fake out this top in here. Or should maybe didn't. 1 second. Yeah, it didn't. I was looking for price to go and fake out that this top in here, but it didn't yet. So I'll continue to be patient a little bit. Yeah, that's basically the drawing that I had in here. So that ended up never happened. So we'll see if it's going to happen in the future. Price is respecting some kind of level of support in here. Of course, if gold goes down, maybe silver eventually is going to follow as well. But maybe before silver needs to, it's going to make another leg up before it's moving to the downside. So that's something to keep an eye on. We do have this level of support resistance in here that maybe silver can bounce from as well, and maybe continue to push a little bit more to the upside. So we could do something like this. Price then takes these lows to respect this level, then pushes higher, and then finally we can target this top in here and create some kind of liquidity, and then maybe finally have a bigger move down. So we'll see what will happen, but I'm still waiting for a potential short on silver as we get higher and higher and higher. So yeah, around 38 is more or less what I'm looking for. Do you also look at silver, Anastasiia, or is something that
I actually look at silver. I love trading it, and I use it sometimes as a catalyst for gold. So if the silver is at a bad point or they have the divergence, I'm probably going to stay away from trading gold. And between those two, you choose usually the one that looks better and has a better entry. Whether it's the direction, for me on both of them has to be correlated to take a trade. that's like the approach that I take for silver. And I think honestly, long term, silver is a better investment than gold right now. Like if we're talking about long term buys, you know, for gain much higher price than it is right now. And right now, silver for me is it's been testing this volume zone for a while now. I think I also think it's a little, it can push a little higher, or at least I'm waiting for the break back and then the start of the continuation. So I want some kind of confirmation basically here. So it can, I don't know, like some kind of consolidation or something, and then the exit, and then a continuation to the downside. But I want to see some kind of confirmation when the price breaks. For me, silver right now can still push up higher. Overall, I am looking for the short, like right, at least in the next couple of weeks, let's say like this. Although again, for the long term, I would wait for the pullback, and I'm expecting silver to gain value, because realistically, silver is a very interesting asset in a sense of for production, for example, and it can, like for the being actually used as a metal in the production or in, you know, anywhere pretty much, it has a very big potential compared to gold, where there's gold is already more as a, I find it more, looking for the word in English, electronic asset than actually the physical investment at this point.
Yeah. Yeah, I could see actually silver making that move, and then I'm curious to see how it's going to react from the next level. Maybe it can go higher. But overall, yes, I would still like to see it going a little bit higher in the higher time frame before the massive sell to happen. So I'm aiming around 38, and after that I'll try to position myself as a short. Intraday, I think there are opportunities for both directions, to be honest, to look for. So that's nice. Any other assets? I think everyone is looking. Okay, DJ mentioned the pound dollar, so let's take a look at pound dollar as well, and then we go into the US indices. I think that's maybe something that we can do. So let me just take a look at pound dollar. What do we have? So pound dollar continues to push higher, basically in the higher time frame. I think DJ mentioned something in regards to looking for shorts until the next Fed meeting. Yes, price on the weekly time frame. Yeah, I think we're going to take the highs. All right, let's take a look at the pound. So pound tried to go a little bit lower. It started to show a little bit of a weakness. At least it broke a little bit of the structure. But now it found again more buying pressure, and it just continues to go higher, and most likely is going to take this most recent top in here that was created last week or 2 weeks ago. So I wouldn't be surprised if the pound actually takes that. Then, of course, we do need to start looking a little bit more to the left side to see where are those orders, where maybe there are still fresh orders in here on the pound dollar. I don't know if price already touched this level or not. I think price maybe have missed this level. Maybe there's something in there. But then like around here, price already kind of reacted from it. So as price was going down, as you can see, price retraced, took those orders. Price went down, retraced, basically took those orders. Did exactly the same in here. Price went down, came all the way back in here. Maybe there's a little bit of a fresh level still in there, but got really close to it as well. So in the higher time frame, most likely there's not going to be the level to look for the bigger short. Price went down again, kind of retested once again, kind of this supply, and then it moved again until it finally never came back, right? So now price reacted a little bit from this level when you're looking left in here. Right, you had a little bit of this reaction in here, and now if price starts breaking, in my view, if price starts breaking a little bit above this level, I could see going almost all the way back into this close to 140, and maybe after that, that's where we're going to potentially find a little bit more of a bigger selling pressure. Of course, we are talking about daily time frame, so intraday there's going to be some oscillation here, up and downs, but I cannot be surprised if price does a big reversal anywhere in between this level. I think price will eventually go a little bit higher before a bigger reversal as soon as you get into that compression. One of the trades now maybe can be just price breaks, retest this level, and potentially can continue, but we'll see. We'll see what's going to happen at around this level. It's going to be some kind of fake out setup and price kind of comes back into this range again, or it's going to be more of a continuation. What usually defines when I'm looking for that type of setup, I try to look for the structure that is created before we break it. Okay, at this point, this will be maybe the structure. We price management stops in here and starts creating something else in here, and then breaks. Now, this may be the next structure that I'm going to be looking for. So what I'm expecting is to see if price when comes back, if the respective structure goes higher, there you go. Price wants to go higher. I'm not really fighting it at this point. But if price kind of breaks to the upside and then starts breaking the structure back again, maybe now price is ready to go back into the structure again. So that's something that I pay attention. So I need to see which structure is going to be created, or kind of range or demand zone or order block, whatever is going to be created before actually price breaks these stops. Because usually those are the levels that price tends to react from after it breaks as a breakout setup, either the previous top or the previous kind of demand zone that was created. If those levels are broken, then I can start looking for potential shorts in here. But for now, it looks like the pound wants to continue to push a little bit more to the upside. I like the fact that we start breaking a little bit of some lows in here. So that's nice eventually for the future, for a bigger target. But we are far from it at this point. So that's something to keep an eye on. What's your take on the pound, Anastasiia?
I'm looking for the continuation to the upside as well for pounds right now. But I also don't have yet the entry because we are on the previous highs that the price has been already testing several times. I think I would like to see either the further push up before looking for their some kind of pullback and taking the continuation trade, or an opposite, their rejection to the downside, which I'm not sure if it's possible because right now the DXY is trying to break lows. So if DXY breaks, I think the GU is also going to surge higher. So I'd say I'd wait because I'm like, hello. Well, I wouldn't know where to enter the trade after it already moved, like 240 bips to the upside, and we are testing the same levels. So I'd say I'm long, but without an entry point right now.
Yeah, I think I need to see more structure being created before that.
I think so.
Before taking a position.
When you have such a move to the side or the drop, such sharp without any correction or pullbacks, it's quite challenging, because every time the higher it goes, the higher the chances you're going to start the pullback right now.
Mm-hmm.
So considering for the continuation, I prefer when it tests. Before I had the system, well, it was the first Trump's presidency term where I traded Fibonacci. And I used the golden ratio 50, 61.8, 38.2, and 76 actually to the correction size. And for indices, it worked perfectly because all the things that it was doing, it was surging up, correcting back to the zone, surging to the upside, correcting back to the zone. But from this period, my system changed and I started using volumes, order flow, and things like this. But one thing that never changed is that I always wait for the pullback before I enter the trade. So at least some kind of pullback to get a better entry. You cannot, for example, enter trades in the continuation, like you said. I cannot do this. I can't, when the price already went, my psychology is just push it away from it. It's no, I can't do this. So I would need to see more here.
Yeah, same thing. One of the first strategies that I traded was harmonic patterns, which is a lot based on Fibonacci's. Bats, crab, I don't even know the names of the harmonic patterns anymore. Gartways as well, whatever. And yeah, they were based on Fibonacci. So whenever price reached the 618 or the 78.2 or something like that, I had to buy it regardless of if there was structure, if there was no structure, regardless, I would just buy it or sell it. And that was one of the main frustrations because I was still not aware of kind of supply demand or something like that back in the days. And I would just buy it and I would just continue to see price falling without any rejection whatsoever. We just literally continue to go against me. And these were sometimes patterns on the higher time frame. So at least some kind of reaction was at least expecting. but there was no reaction whatsoever. So eventually I transitioned. But I do believe that maybe if I was implementing that kind of strategy with the harmonic patterns with some kind of structure, I think that would have been a good strategy, to be honest. But yeah, that's what it is. Someone is asking about pound yen. I don't know if you look at pound. You mentioned that usually we just trade dollar yen, but
Yeah.
Igboku is asking in here for pound yen. I don't know if you can take a quick look at it or not.
Absolutely, I can take a look at it. Just for myself, I usually don't trade the currency first. Okay, we had a huge range. It finally broke back to the upside. I don't think it's ready yet to continue higher. So I would say I'm bearish right now after the rejection of this volume here. So I'd say at least for like the current moment, I'm going to be bearish for the GBP/JPY, probably BJ. Right here would be the volume that I would be waiting for the retest. We have the high volume node. It's the previous highs as well at the same time. This is one of the biggest volumes. So the weekly, sorry for that. The weekly point of control right here. So the price just rejected it. We have a huge week, and I think we are going lower here. So from this zone, I would be starting to look for some confirmation and then continuation. I think higher. But for the moment, I would be bearish. Now for the entry, I think it's already gone. So here was the perfect entry for me for my strategy. So we had a range. One of the setups that I use is I wait for the price to break outside of the range and then return to the value area of this range and the point of control of it. And then I take a sell. So in this case, the perfect entry would be if I would wait until the price reaches this level here, 197,495, or this zone. So this would be my perfect entry zone for GJ. And since it's already gone, the next one would be if we break this consolidation. So I'd say I would wait until the price breaks this zone now, the value area from this consolidation to the downside. And if it does, then I might, I would be looking for the continuation lower and see if it can give us a good risk reward, because I'm not quite sure how to look. But something like this. And then that is what is like another 75, 70. So I think definitely want to free risk reward here. So that would be my approach in GJ. Have you looked at it today, Pedro?
I can look at it as well. So just one question. So when you are looking at this, at those rectangles that you draw based also on the volume, for example, if price created that level before it dropped. If price by any chance had spiked into that zone, basically maybe that's the question on my here. So basically you're looking for the shorting here, right? Because that's where the volume kind of was high. Let's pretend this is volume around this level. So by any chance, if price had gone down in here and kind of spiked already at this level and then moved down again, would you still looking for this entry as well? Basically what I'm asking is, do you try to trade just only fresh levels, or if the price had already kind of retested that level before, you kind of are not interested anymore?
Normally from the same zone, I trade only once. I know people that keep trading the same exact volume many times until it's broken. Now, I prefer to trade it once, because the more time the price rejects the same level, the lower is the chance that it's liquidity left orders that can stop it. But if the price would break it to the upside, assumingly, right? If it breaks it to the upside, I would be able to take a trade from the opposite direction at the same zone. So long story short, from the same zone, I trade 2 times. One for a sell, one for a buy, if the price gives me the chance to do that.
Basically like something like this, correct?
Yeah.
Either the upside or this one. Yeah, okay. Yeah, the flip zone. It's exactly the... Okay, I kind of do the same. And that's why I usually don't place a sell limit or a buy limit into the level. I like to see some kind of initial reaction, because I don't validate or invalidate a level based on being rejected or not. I think it's maybe what you are saying as well is that just because maybe price instead of being a 7 here, if price kind of just breaks through, it doesn't mean that there is no volume in there. Maybe the volume now is actually positioned more to the upside instead of as a short. So I think we may actually do the same in terms of swap zones, let's call it like that. Zones that are interested or important, but instead of working maybe as a short, if it breaks, then it can be used as a long. Exactly the same, almost exactly the same level. Yeah, that's nice to hear, to be honest. All right, in terms of the pound yen, we have actually our yen specialist, which is the what's his name? I always forget exactly. Abdullah, I think, is a specialist on trading dollar yen. I think he's usually quite correct on this analysis on dollar yen, and apparently trades more yen pairs aside from dollar yen. So he's mentioning that look for short on pound yen. I think this was already a few minutes ago. So maybe he's already short at this point, maybe with this move. I could see that. I could see pound yen moving a bit more to the downside. I think price got really close now to this top, so it's maybe a strong level of resistance back in the days as well. So it's finding some structuring here, and I think the normal target basically just try to find or try to go back into this previous level somewhere in here. So maybe there's that opportunity to look for a short. This is a nice move. I kind of like these ones as well because we do have this liquidity. Price basically collects the liquidity. This is a nice supply level in here that managed to break all this. So price moved down. We have the liquidity in here. Price even managed to break this level. This is something that I like as well in terms of the pattern. So when you don't have a move, instead of price just creating one wall, come back into here and drop again, I prefer to see kind of a zone in here. Kind of price creates that move down, tries to go up, breaks again, kind of confirms that maybe wants to go down again, and then it comes back, fakes out this level, reacts from the supply, and then it can drop. Right? It's a bit more of this, what we have in here if you follow the sequence. So yeah, I kind of like it. I think price can continue to push a little bit lower, maybe getting closer at least towards more of this direction here. Of course, you don't have this demand zone, so be careful with that one. Maybe we should be expecting some kind of reaction from here, but eventually we could push a little bit lower in here. So yeah, that's a nice one. There were maybe already a few other possibilities of selling pound yen even yesterday as price was creating this top in here when price was retesting. Maybe there was another opportunities, maybe with better risk reward because of it was a little bit higher. But yeah, I could see pound yen also moving to the outside, but be careful with this demand zone in here. So yeah, manage your trade accordingly.
I have exactly the same analysis on GJ as well. Good to see it. It's a good one.
Yeah, I think from what we have analyzed so far, I think we kind of share a lot of the same ideas.
I think so.
Yeah, it's just honestly, I think you have a better entries kind of technique in the middle of something that I struggle a lot. I've seen even in the past some of the streams that you took kind of some trades in the middle and price is kind of slowing down, but then it crashes and you manage to catch this move. I usually don't. It's maybe something that I need to investigate more. I try to find some kind of an edge in there. I usually just trade trend continuation setups in a specific moment, and sometimes even after some big news event. Sometimes Friday is a great day to do so. After around the US Open, when you, for example, after NFP, maybe there is a big move, then price kind of retraces, and when price starts to gain momentum again, to trade the break of destruction, then kind of discontinuation. Usually it's quite nice. There is an edge in there. You cannot feel the market, especially because also the market is fully aligned. It's maybe because of a dollar move. So you see euro dollar, pound dollar, Aussie dollar, dollar yen, whatever. They're all doing the same thing because of the dollar. So when I look for trend continuation setups, I like to see dominance of the dollar. That kind of increases my confluence. Yeah, that's one of almost the only times that actually I try to trade trend continuation setups. And maybe Mondays also is a kind of a good day in the afternoon to try to look for some kind of a move. But Mondays afternoon, usually the market are a bit slower. Not these Mondays, okay, with all this news and everything gets too choppy or too volatile. But a normal Monday back in the days 1 year ago, yeah, that's usually a good opportunity.
Yep.
Yeah. All right. More questions, everyone. You trade NASDAQ and US indices as well. Is that something that you trade?
Yeah, I normally trade S&P 500 or NASDAQ depending on which one looks better at that very moment.
Okay, because we haven't analyzed US indices yet, so maybe we can do that. I can see that Victor is on behind the scenes. I don't know when he's going to join us or not. So whenever you are ready, Victor, if you want to join us, feel free to do so. But yeah, let's take a look. There you go. Okay, just kicked out. Okay, there's the DJ Victor in the house. What's up? Good morning, Victor.
I'm trying to fade my way into the stream. How is everyone doing? Anastasiia, a pleasure. Pedro as well. Everyone at home, I'm glad to see you. I hope you are same. I hope you respond similarly. Go ahead, Anastasiia. You are going to do the equities. Don't let me interrupt you.
let's do equities, and then I'm gonna have to leave you two actually for today. But equities is a must, especially after yesterday and how we are, like the world we live in right now, at least. So, like you mentioned, actually, Pedro, that they are almost at the all-time highs already. Despite everything that has been happening, the market has been desperately waiting for the good news and reactions. Now, I think the better approach is to see it from the higher perspective, because then at least we can see what is actually happening. Now, we see that one of the most important things for me is that we had a V-shaped recovery. Like the last time we had this recovery was during COVID. So the price crashed to the downside and we had the quick recovery back to the upside. Usually if equities recover so fast, is the sign of the upwards continuation. So yeah, like last week still I was mostly bearish midterm for equities because we were below these highs and because I was waiting for the escalation in the Middle East. Right now we already had it happening. I feel like the world is already ready for the things happen like this and they're like accepting it. Hence it didn't cause the more sell-off for the equities as well. And we finally did break to the upside. I'm bullish until the price reaches the previous highs around 62.35 for S&P 500. So this zone here would be the most interesting for me. So pretty much the previous all-time highs. Until that point, I would be more bullish. Now, regarding the entry, that's a different topic. Now, usually if I look for the entries, I look for how the volume was distributed on the move to the upside. And if we see right now, the majority of the volume was actually lower. I wouldn't be comfortable buying it immediately right now. Also, the reason for this being a 2-hour time frame. If you look at the 4-hour time frame and the 4-hour candle, we see the huge wick to the upside. The daily point of control is above the price right now, which may act as a resistance currently. So, which means that mostly the volume from today compared to yesterday is right now bearish. So what I would be waiting for is those two zones. I would be waiting for the price to either reach this zone here, this box, and react from here. So that would be this. So approximately is 61.12, and another one would be 60.81 to 60.66. So those two zones would be my continuation entries for the trade continuation. So that would be either like this and a buy, or any entry here and the buy then. But I would need to see the confirmation from the price first. So that would be S&P 500 so far.
Yeah.
And regarding NASDAQ, yeah.
No, sorry. I think on the futures is maybe slightly different from CFDs at this point. The distance until the all-time highs. I think on the where you're looking right now, it's a bit lower, or is maybe the same level? Because on my it looks like there was a little bit more space on the futures market to get to the highs. Okay, it's maybe the same. Okay, got it.
No, it is just more space, I think.
Yeah, I think there is more space to look for longs. Yeah, that's just the. Yeah, for someone that trades space, yeah, when the space is not the same in both assets, it's it creates confusion. Just to see if there's actually more room or not to go higher.
Yeah.
For longs.
the initial entry would be here, like for me,
Uh-huh.
for the same zone here, and then I would still be looking how far to take it, because perhaps it can break the all-time highs depending on how the situation is going to evolve. So I think the entry would be the most important, and then perhaps letting it run and trail the stop loss, or and see how the price reacts when coming closer to the all-time highs would be my strategy for this.
Yeah, and you're about to mention NASDAQ, just to finalize maybe your thought process on the indices.
Yeah. So for NASDAQ, I usually also go for the futures initial, and again, I think the relevant is the higher time frames for now. So at least I would be targeting back again the all-time highs previously, and if they'll go lower, my way of thinking would be similar. So we broke the previous highs, we broke the previous structure. I don't trade the break and retest classically. So here is a high volume node. I can already see it. Even if we use the volume profile over it, we will see there one of the high volume nodes in this zone because of the consolidation. So let's say that I would be, again, this situation and the analysis would be very similar for me as S&P 500, which is a good thing, because if they have a very big divergence, it's a sign for me that I'm missing out on something, on some information. And I usually I'm very careful with this kind of situations. But here would be a very similar approach for me, actually. Those two zones as an entry. If this one doesn't work out, the next one would be here. So I wouldn't be afraid to take a loss on this one, to try it out and take a buy here. And then for this, it would be around 22,095, 22,051. And then on CFDs, perhaps it looks different. Yeah, it does. It's literally almost at the all-time highs already. But
it's really close.
The point wouldn't change for me, to be honest with you. I would still be waiting for this zone here as a rejection zone initially. So for some kind of pullback here, or in the worst case scenario, perhaps here. But normally this is my zone for entering, both S&P 500 and NASDAQ. Actually, the previous small consolidation on 15 to 30 minute time frame. Yeah. And then I would let it run. It would be the same approach right now for me for equities as with gold when it was going up like crazy in the end of the last year and the beginning of this year. So just let it run and see how the price reacts when getting closer to all-time highs and major levels.
How much would you let run when you say let run?
Until I see the reason to exit the trade.
And the reason is a fixed rule? Is it, or is that more a combination of different things?
I'd say it's a combination in this case. I'd be looking out for the macroeconomical, the geopolitical background, but it would be a combination with technical. So normally exit the long trades if the biggest volume moves up higher than the current price. So then I would say, okay, there's a massive pullback incoming, and then I would exit the trade for a long. In this case.
And do you when do you make that decision? Do you have like a specific time? Do you check it once an hour, once a day, once every 4 hours, or is it just whenever you see it?
No, I check it normally at the same periods when I enter the trades. So my period of entering the trade is around 8 a.m. to 11 a.m. Central European time in the morning. And then it's the second half is half an hour after the New York session opens. And I check if I enter this, I'm gonna check it before the New York opening, and right after the New York opening, because that's when the majority of the volatility kicks in. So I want to see how the price is gonna establish itself after the volatility of the New York opening. And then in the evening, 2 hours before the closure of the market. Because if you look at, that's a very interesting thing actually. If you look at the pattern for S&P 500, for example, for volume, just a normal volume, we're gonna see several spikes, and one of the hours for the closure before the spike of the volume is 1.5 hours to 2 hours before the overnight layover. So that's when the next volatility kicks in, the second half. A lot of people exiting the trades before the overnight layovers, and I also want to see how the price reacts. So there are 3 windows during the day, mainly when I check the market.
I see. And it doesn't make sense for you. Let's say you wake up during Asian session, and you look at the chart, and if you do, would anything happening on the Asian session while not being high on volume, will they be able to trigger you to exit your position?
Considering entering, I never enter trades during Asian unless it's Monday. So when the Sunday market opens, and the overnight trade from Sunday to Monday, it's the only night when I trade ever.
Okay.
It can be literally 15 minutes after the market opening. And then the closure, yes, I usually sleep during Asian the week. But if
we all do.
Yeah, exactly. If I would wake up, perhaps the same thing, because sometimes during Asian we have lots of things happening with China as well. And the same principle, if the price would be below the majority of the volume and I would see a huge rejection to the downside, it usually is supported by the specific geopolitical events. Then if I see the combination, I'm going to exit the trade as well.
I see. Thank you for that insight in your way of trading, Anastasiia. We are very happy to have you. I always say this. You have been here. It feels like a much longer time, because we know you. We have come to enjoy your analysis. I think I speak for the audience as well. But thank you for giving us that insight. One question: what are you looking at? Perhaps you guys have talked about this already, but what are you looking at? You specifically, Anastasiia. All spotlights on you. What are you looking at? Are you looking into any opportunities on GU or EU as they are getting near their previous swing high? Are you looking to do anything?
I actually really have to run.
Okay.
My apartment, but we talked about this, and
okay.
now I actually don't have any entries because they're on the previous highs, and I struggled to find entry points after the price surged up like this without any pullback. So my risk tolerance is pretty high, but it doesn't let me believe that it's going to continue going up indefinitely. So I feel safer if I see the pullback first and then re-entering the trades. So right now it's especially GU is at the point where I don't see any kind of possibilities here. EU looks slightly better for me, so I'd say if EU gives me some kind of pullback into this zone here, like here would be great. This would be perfect. Then I would be looking for a buy. But GU for me, I think for the rest of the week, I'm not gonna trade it. At least how it's forming right now, I don't see anything good coming out of it for my strategy.
Thank you for your time. I know we are pressuring. It is you have extended your stay with us, Anastasiia, but thank you anyways, and we wish you a very, very successful day today.
Thank you. No, it's always a pleasure, Victor, Pedro. It was really a pleasure to host the first live stream with you. I do hope we have many to do so. It was great to have the insight as well on how you trade and see the market. It's also very incredible always how different approaches can lead to the same conclusions. Victor, we also have it from time to time with our analysis, and I think it's fascinating. So thank you so much for the stream together, and I'm hoping to see you guys soon again on the next stream.
Thank you, Anastasiia.
Our pleasure, Anastasiia. Take care.
Have a good trading day.
Same to you. All right, so there you have it. We have it is we're going for the next segment. Pedro, how long do we have the honor to have you with us?
Yeah, until 12, so 40 more minutes. I think then the big boys from Alphabet Club are going to take over. So until 12, I'm going to be here with you. We're going to be talking about the market, euro dollar for sure. Someone is talking about the first trade is talking about our language. I think he's mentioning quasi-modus and stuff like that. So I think he's already short. I can maybe just mention also my analysis on the US indices because I think he mentioned that he's shorting it based on a potential quasi-model that is seeing on the higher time frame on NASDAQ and the S&P. Yeah, exactly. A daily Quasimodo level. Yeah, he's short. He's looking for shorts on both S&P and the NASDAQ. He also mentioned the CO2 report. Actually, that's something that I looked for a while, but then I kind of stopped looking so much. But I think there's value. There's value in that information. But because there's always that delay, the report is made on Tuesday, the data comes out on Friday. We know our price already moved quite a lot. But for swing positions, maybe that's good. Maybe that's a good report to pay attention to. But yeah, so looking at US indices, as Anastasiia mentioned, she's looking a little bit more for retracement before looking for longs. We are definitely, at least on the CFD, okay, NASDAQ is really close to all-time highs. I think the Quasimodo that he's maybe mentioning is like the left shoulder, basically the head, how they moved downside, maybe broke some structure here, and potentially right shoulder where price is right now. Yeah, I could see maybe price still going a little bit higher when price is trading such a close to all-time highs. We need to have that in mind. There's maybe magnet that maybe price does want to go and challenge all-time highs before dropping. Something that I was looking to confirm a little bit more into looking for sales is actually price and managed to break below this low. That was something that I was looking for, and price respected in here, and even respected yesterday all these structures. So if I had seen kind of a proper break of one of these structures here, I would have been a bit more bearish in here, but price managed to respect it quite nicely. Now, what we can try to find is there any fresh orders still within this level, especially on the lower time frame? On the weekly, this is actually kind of a nice one. It is nice week, fresh week in here on the weekly time frame. This is not exactly an order block on your end, right, Victor? You kind of needed to, if all this was a candle, this would have been an order block, correct?
Correct.
Yeah, but because it's just this candle, then may not be an order block in there. But I do like those weeks as well, and on the weekly time frame, that's kind of a nice one. Then in the lower time frame, actually already took that situation. This is how it looks like the top. Okay, so basically this top in here. 1 second. So this top in here, this is how it looks like on the 5 minutes time frame. This is what we have in here. Okay. Meanwhile, after this, price dropped. 1 second. So after this, somewhere price dropped, and a few weeks later, couple of months later, we are back at this level. And I think this is where price is reacting right now, where I have this line. This was kind of one of the supplies that I had, but maybe price already even reacted a little bit with this week. So yeah, I'm curious to see how price may still react a little bit within this level. There's maybe another extreme. 1 second. There's maybe another extreme somewhere in here for a potential Quasimodo with this left shoulder. Who knows? Or maybe price already spiked it a little bit from here. But on the lower time frame, it doesn't really look like it's totally fresh. This level in here, because price before it dropped actually reacted from it. So that makes it a little bit weaker. Today, what you can see is that price, yeah, exactly. So price reacting from that white line. Price reacted a little bit and now is respecting the next structure. So to be able to look for any kind of short in here or a bigger short in here, intraday or lower time frame, you maybe can find. You can maybe bounce in between these levels. But for a bigger short, I would like to see at least this level being taken to the downside. This one is the one that managed to break this top. It was created this structure, so I'd like to see at least this level being taken, so it could start opening a little bit more of space for price to go at least maybe towards this level, or kind of retest somewhere in here. If this level keeps holding, then maybe price wants to continue to push a little bit more to the upside. So that's something that I'll be looking for. I want to see how price may react a little bit in here. I'm a little bit cautious that we are close to all-time highs, and maybe price is going to end up taking those all-time highs on NASDAQ. S&P, just to finalize in here, S&P is a little bit different just because it's lagging a little bit. Okay, so S&P still has a little bit more room until it gets to until it gets to all-time high. So basically, NASDAQ is already reacting from here. S&P is still in here, so there's a little bit of a space in here or a gap that S&P can still go a little bit higher before breaking all-time highs. And you do have this supply, this nice supply in here. Let me just maybe zoom in a bit. Yeah, we may have this level in here. This may be a bit more of an order block for Victor, at least on 4 hour time frame. I don't know if Davey is also. 1 second. What's going on here? Yeah, maybe on the word, maybe on
that.
the S&P. Is it an order block in there for you on the S&P? At the highs?
In this, well, the thing is with the equities, you have to. It's much more easier with forex pairs with assets because you have the price feeds don't differ that much. So when you're talking about equities, you have to watch out with CFDs, with futures, with the actual index. So you have to figure out for yourself which one you're going to follow, because you may have little differences in price feeds and in levels, and that will distort your either the in my case, that is, it will distort whether a certain thing is constructed or not when you're looking at the OHLC that data points. So it depends on the if I were to look at the one you're looking at, you're looking at Oanda, so I have the same on as well. So which one? What is the actual question? D1?
It was the order block at the all-time highs back in February, 20 February. If this is a order block or not.
It is one. I have it here at Oanda. I consider that an entry order block actually. So I will be looking for a short there. For everyone who is wondering, why do I want to short a price that is looking very bullish, testing all-time high, possibly even breaking it? It's all about the probability, right? And the risk in comparison to the profit, potential profit, right? It's not a verdict or a prediction of what price is going to do. It just makes sense that from this point, if it reverses, it will go way, way lower. Even though that's a low probability event, it makes sense because it has edge if you know how to cap your stop very tightly, because you're right there. Either it goes and it continues, or it will drop and the drop will be significant.
Yeah, just to continue the analysis, similar to the S&P or to the NASDAQ, price managed somehow to respect this level quite nicely, and not just once, but 1, 2, 3 times in here. And it happened exactly the same thing on the S&P. Price kept respected. So for some reason, there was a really strong level of support at around these 5,921, something like that. Again, I would have been a bit more bearish if we actually had seen at least some break of the structure to downside. Because we didn't manage to break it, it kind of shows a bit more of a strength on this move. So when I'm trying to sell kind of a double top, let's call it a double top, because we have on topping in kind of another one. I know there is maybe a Quasimodo in alignment with that. Maybe there's an order block that can influence the potential sell of a double top. But aside from that, I like to see price already on the way up. I like to see price managing to break some structure before potentially gets to the level that I want to short from. In this case, it still managed to respect it. That shows a little bit of a strength in here on the indices. That's just something on the daily time frame that I'm aware of. But there you go. It's a little bit of the same situation. We do have exactly the same structure now created in here after price managed to break this top. So S&P and NASDAQ, they look quite similar at this point. And let's see how price may react from here. Price already got really close to that level, reacted already from this demand zone, and now is bouncing in between. So yeah, we may have a little bit of a if we do break this level, maybe can open door a little bit lower, at least towards this level in here. So it's going to be interesting to see what's going to happen around the US Open. Maybe we can find some selling pressure before price goes up again. What happened since we closed the market yesterday is basically Trump mentioned that there's a ceasefire Okay, so that was after the market closing. So we haven't really seen in the indices. Of course, in the equities indices here, yes, we did, but not in the stock. So there's going to be maybe that information to be added into the opening, into the US opening in here, which is going to be interesting to see price reacts to that positively and try to go higher again, or the opposite. So yeah, I'm curious to see how price may react around this level. I can look for some shorts as well. I think I can do that, but I'm still cautious in terms of looking for the biggest reversal ever. For that, I'm still a bit cautious in here. Yeah, that's basically
Awesome.
what we have.
Awesome. That is as S&P. That's the equities. Actually, I'm very interested in that little slither of a order block up there, because if you were to go to that order block, that top order block that created that all-time high, or was created after that all-time high was created, how wide is that order block? It's only 18.9 or 20 or so points. That is very, very small when you're talking about the daily time frame. So that gives us a lot of opportunity. I mean, it's very easy to take a trade from there, because you'll get your answer. It will either trigger or not very quickly, because there isn't a lot of space. So and that's a very favorable position to be in, where you're very selective when it is easily invalidated, right? So you don't have to take the trade, or when the trigger will probably come. Whether or not it triggers, I don't know, but if it triggers, you're probably gonna see it quite quickly. I want to ask you, Pedro. How is before we continue? How is the sun in Lisbon?
No, I'm back.
Oh, you're back.
To the UK. Yeah, I'm back.
Yes, you said that.
To be honest with you, it was actually hotter when I actually arrived on Thursday. So Thursday and Friday it was quite hot in the UK. I think Saturday as well. But it was really hot in here. It was kind of close to 30 degrees. And 30 degrees in the UK is not exactly the same as 30 degrees in Portugal. But yeah, but the last week in Portugal was really good when I was there. But now I'm back in here. I think even the performance of my PC and everything, it shows that like there's no gaps. I can move quicker. I can laugh as well without any interruption.
Yes, we noticed the difference. You're much more smoothly. Your frames per second has gone up.
Yeah.
But that's a good thing. I asked you how are things in Lisbon, but of course we can see your background, your usual background. So you are in your home base. Silly of me not to point or to see that, observe that. All right, so no, but before we continue, would you be taking a short from that order block? That's the next point I was gonna take. Are you interested in shorting that? I mean, the S&P is. We had a very frightening fall for those who are long only, and for portfolio holders, buy and hold and etc. Previously we had that, with the trade issues, trade war and so on, and we're going to come back and regain these levels. So automatically a lot of people will have fright of heights, right? We'll have a fear of things coming down again, making a possible double top, and those fears are actually. Let me ask you: are those fears justified?
The situation with in the Middle East.
I mean, the general fundamental situation of the equities. Do we have reasons to believe there might be a double top, where we don't break out, or we have a fake out, and then it just goes back maybe lower than it went before, or just lower?
That's a good question, right? That goes into more of kind of fundamental perspective of how the world is, and eventually the market. We commented with Anastasiia before that it looks like that the market is really eager to any kind of positive news, and anytime there is any kind of positive news, the market jumps. We even saw yesterday with when Trump kind of announced the potential ceasefire agreement, and all of a sudden we had another impulse move on the risk on assets, inclusive not just the indices but also even crypto. However, there is still a lot of uncertainty. Like the rates are still quite high. The risk of inflation, we don't really know exactly how it's going on with the tariffs, if that's going to be implemented or not. The real effect of the initial months with tariffs, we haven't really seen that being demonstrated on the CPI. But the reality is that the interest rate is still quite high, and there's maybe some industries or sectors that are being affected by it, especially the housing market in the US. Now, one big factor is that actually, especially when we had the earnings last month or a couple of months ago, especially the big ones, there was a lot of enthusiasm still with AI. I think AI is still moving the market quite a lot, and as a consequence is helping also the S&P, NASDAQ, and so on to go higher. So that I think that's still a big factor in here. However, there's still a lot of uncertainty, and wars and our situation that we are. Let's see for how long we're going to have this ceasefire or not. Logically, it looks like that we have somehow lots of uncertainty with some wars going on and interest rates quite high. It wouldn't maybe make sense to see the US indices again breaking new all-time highs. However, the market is finding any opportunity to just move higher. Now, is there going to be a big correction? We'll see if that's going to happen. Yesterday, we also have manufacturing services PMI is still quite strong in US, above 51 or 52. So the economy is still kind of working. Unemployment is still low as well. Inflation is a bit sticky. So yeah, we will see. On one point, even if you do have new all-time highs, I'm not expecting a break and the move non-stop to the upside. I think even if you do break new all-time highs, I think there's going to be some kind of correction, and you may compress a little bit until eventually have a new correction. Then price may go again. I'm not expecting a break and then price all of a sudden to go non-stop to I don't know where. Most likely are going to break, maybe come back again, and then kind of ranging in between, just like we have been doing it in the last few months. Maybe something similar even before we had this big sell-off, right? So we may break a little bit, then price may come back into it and goes again, retest a little bit and break again, or even in here as well. Well, price broke new all-time highs and then kind of found some selling pressure, and then eventually goes again, finds new buying pressure and breaks new all-time highs, but then comes back into it instead of a clear break and go. Like, I'm not really expecting something like that in this particular case. I think it's going to be more something like this. Until we have a bit more clear, until eventually the Fed starts actually cutting rates, and until we have more clarity on the tariffs and all the rest of the world geopolitical situation.
Thank you for that. So to you, there are still enough uncertainty to not make it completely a bullish case, but it's holding up quite strongly, or the undertone is still bullish, because you see that the market isn't quickly or easily spooked, right? We had the US and the Iranian, how would you call that, confrontation, military confrontation, and the market, it happened over the weekend, but the market, you would think, right, when we were growing up, I remember Bush Jr., calling Iran part of the the axis of evil of the world. And now you have, do you remember? That was a long time ago.
Yeah, it was thousands, right?
Yeah, and now we have a little clash. Well, I don't know if I should call it a little, but you have an actual clash of these two, agents or figures in the geopolitical world, and the market, of course, volatility is out the window. My volatility strategy is going haywire, but it's relatively mild from what you would expect, right? I mean, the implication of such a confrontation are far-reaching, and still the market is although we know the news, everything seems to be subdued, and it's, seems to be contained and ceasefire, and it's, it didn't go to become anything much than what it currently currently is. But the market, typically the market would react in an exaggerated way, and I don't see that. And that's exactly what you mentioned, that it's holding up quite nicely, even though things of greater significance have just happened. The market seems to have been able to digest that quite. Apparently the market has a strong stomach nowadays. Right? I would expect the market to be much more jittery, much more spooky, even for shorter period of time, because that's how investors typically are. Whenever there's something big happening, the first thing is they retreat, and then they decide whether they want to be come back or not, right? And that's I didn't see that very at all. I don't know about would you say that is a fair assessment?
Yeah, I kind of agree with you. Even the way we recovered, even as Anastasiia mentioned as well, we had kind of a strong V-shaped recovery. It's true that we created a double bottom in the year, but it was still kind of aggressive. The way we came all the way back after dropping around 20% in S&P and NASDAQ, all of a sudden basically in 1 month, if you look at the monthly candle, look at this. It looks like it was about to be a really negative bearish candle, and all of a sudden it closed basically at the opening, right? So it was this is a doji candle or something like that. The completely recovery within the same month. I think that's actually historically the biggest recovery. I think month we were down 10%, and we kind of end up almost finishing positive for the month. So we can see how aggressively that happens. Right? And as Anastasiia mentioned correctly, the last time we had something like that, it was COVID, and that it was kind of as well a really strong move to the downside, and then price just completely recovered, and since then it was quite of a strong bullish market. I'm not really expecting again price to just break and continue like this. I think price is going to kind of slow down a little bit at the top. But yeah, it was quite aggressive, and it looks like that the market is still quite. The market, as I mentioned, it looks like it's looking for positivity. And anytime there's anything new, even though we had kind of that attack from the US in Iran 2 days ago, as soon as there is the word of ceasefire, boom, everything looks happy. The oil market all of a sudden looks like it was about to go to 120 or 140, even with some investment banks in the US predicting that in case that that channel kind of would be closed or not, and all of a sudden it completely reverse happened. Right now we have this big move just yesterday on the oil market. So yeah, everyone seems really happy as soon as there is a little bit of a positive news, and when there is some kind of negative news, the move is not exactly a reflection of that. So yeah, the bulls are in control. Let's just call it like that. The bulls are actually in control. Until when, we'll see. But the reality is that the buyers are in control in this market at this point. Yeah, we'll see until when.
Yes, as we are speaking, indeed, there is some news coming out that Trump just stated that both Israel and Iran have violated the ceasefire. I don't know what this means. This happened 1 minute ago. There's news coming out from Trump. I don't know what it actually means for anything on the geopolitical arena, but this is the news, right? We bring it. We're not a news channel, but of course we have to keep our ears close to the ground in these things, because these are the things that actually make the market move, right? We tend to think it's technicals. Right, this level, this order block. I say that a lot. It is this order block that's changing it, but it's actually the drivers of the market. It's what's happening out there, right? That's the technicals. They come in later, showing the reference points and where they're points of breaking structure and things like that, which is true, but it's actually the fundamental driver is what's happening out there and how that affects our risk appetite, right? Are we going to go better in this situation or not, in terms of risk, military confrontation, and so on. So there we go. Pedro, okay, so you're not looking to but maybe I failed to
No, I
question
can answer.
ask.
I think the question is if I wanted to still sell around this level, right? Around
Yes.
the order block. Yeah, so I was just looking, so I draw a line in there to see exactly where price is reacting right now. Let's see if I can go there in 15 minutes. Yep, I can. So at this point, the price is still, this is where price is reacting right now. Okay, and maybe price does want to go. I think on the daily time frame, I think your order block, it just to confirm the level, is it around 6122? Which level are you looking at on your daily time frame?
Let me check that to be exact. We can share that with everyone. Let's see. My order block is from the 6134.2.
6134.
Yes, 134. 6134.2.
Okay.
And the high of the top. So that's 6152.5.
Okay. Yeah, I actually like that one because we do have this, at least on the war time frame, we do have actually this kind of supply level, which is maybe still fresh. This top may have not really reacted from it. So I actually like that. But before that, we may even have maybe some other levels in here. So at this point, the S&P is reacting from here. Anything that I see in here is maybe a little bit of this structure. And this was maybe a demand zone that price could have respected, but it didn't, and just broke it. Like, I mean, in here, price could have respected or should have respected. It didn't, it just broke. So sometimes those demands maybe work a little bit as a supply. But in this case, I could see the S&P also moving a little bit higher, closer to this level, or eventually to that zone that you kind of mentioned within this level. So at this point, I could still see the S&P moving a little bit higher. So that's one point. So something that I would like to see, again, as I mentioned, I would like to see as price. 1 second, where is that level that you mentioned? Yeah, yours is still somewhere around here, I think. 6134, yeah, somewhere around here. So that's your level. So I would like to see price starting to slow down a little bit in here until it gets to that potential zone to look for a sell. And slow down is, yeah, maybe creating some kind of a double top, eventually maybe even breaking some structure, then kind of go higher again. So we could have a bigger reversal afterwards. So that's something that I'd like to see. I'd like to see maybe price even creating some kind of trend line, whatever it may be, then break some kind of a low, trap people into shorting a little bit too early, so then it can make that fast move, and then I'll be looking for that short. So that's what I'm going to be looking for eventually to trading here as a short. I'm not going to jump straight away. There's definitely maybe some reactions here that you can take advantage from, but if I'm looking for that bigger reversal, I want to see price starting to slow down. I want to see price starting to break some structure and some kind of fake structure to attract as many people as possible to sell it in there, and then have that last fake out, maybe closer to that level that you have, and sell it after that.
Yeah, I like your idea. I like how your idea, while you're thinking as what I think should be the way a trader should think, which is not thinking black and white, like this is the area I'm gonna short it. Think about it, what should happen, what could trigger a sell-off. Thinking trap traders, that's that, slowing down. Now, I like that. There is another situation where I would want to sell this if we have a spike. If for any reason, if we have a spike for any reason, and we go very, very quickly to that area without any, without building, the order flow, because that's what you don't want. You don't want to see these levels being approximated while price is, building order blocks upon each other, mitigating them, and very strongly building a staircase into that level, because that's a sign of strength. It is very, very likely that it's going to be very difficult for price to break that structure, because it will have multiple layers of lines of defense to hold that levels up, so hold price up. So what you want to see is things getting a little jittery, breaking structures, continuing, making sideways movements, structures up and down, and then breaking both of them. That's going to trap traders, and then and while that level may not have been reached yet, and then go to the level, that would be perfect. Or something happening that makes EU goes very, very quickly, in just a couple of hours, reach that area, and then and slow down. So not break and continue, obviously, but slow down there, and you will see the everyone who is afraid of heights will have the outlook, the perspective, the panorama of all the space they left behind, that could be that where they would fall back, because there isn't any support or demand zone nearby. And that could be something that trigger, right? Thinking in scenarios is a very good thing as traders, not thinking black and white, but okay, how, if A happens, what does this mean? If B happens, is it likely or less likely to break or reverse from that area? I like that, Pedro. It shows you you've earned your stripes in as a trader.
No,
Perfect.
because just to finalize on that point, and that's important, because when many people are trying to reanalyze their trades, winning or losings, sometimes it's just to look at the most obvious thing, and maybe sometimes it's, okay, was this a valid order block or not, or was this an order block or not? And sometimes there are more factors than, for example, even if you're just trading out of an order block, there are more variables that can go into place to see if actually this is a good level or not to take a trade from. And the approach is one of those factors. Like the way price approaches that level, it's it can be determined to define if that's actually maybe a good level or not. Because just as I mentioned with Anastasiia before, let's just give a quick example in here. Even first, let's pretend that this is kind of a order block to look for a sell. Okay, maybe this order block itself is not going to work as a short. Maybe price actually is going to break from it and now use it kind of as an opposite level and maybe look for a long. And one of maybe the reasons to try to define if it's going to hold as a short or it's going to break and maybe work then as a long is maybe the approach, the way price is moving towards that direction. Is there any confirmation or not? Or maybe where price is coming from as well, if it reach kind of a good, if price by chance reach a daily order block in here, and now this is a 4-hour time frame order block, and maybe the daily is upstairs, no, it's higher. Maybe price does want to go all the way towards that level. So this level may not be the level to short, but maybe more as a continuation to go into the next zone. Or if this one doesn't exist and maybe price actually broke something on the to the downside, maybe broke something in here, and now price may actually wants to go lower. Maybe this is not the level actually correct to look for that continuation. So there are many factors that can determine if a level is end up going to work or not when you're trying to reanalyze your strategy or the levels themselves. And many people don't look at it. They just look at the simple stuff, and sometimes it's on the small nuances where something can be validated or not.
And the difficult thing is that even though, well, that's a more of a personal approach, personal preference, I like to have everything rule based. And even though I see that when I'm building strategies, when I optimize the main strategy as well, even though I think the best way is to have an open mind, read price action as it goes in, have different scenarios for a certain structure, even though I think that is the proper way to do it, the most effective way, because you're using current data, current price action, which is the best. I still believe that at least for me, this is true. Since I'm not I would say far from completely. I'm, even when I trade discretionary, it's only a little bit. Most of the rest is just most of the rules that I use are still very rule based. And even though this is true that reading price action, tape reading, up to that moment, having different scenario is true, and that is very powerful. What needs to be done is that you need to convert that. That's my opinion. As I said, you need to convert that into some kind of rule. At least that's my recommendation for everyone. Bring it back to some kind of rules, which I know it makes, those are two opposite or may seem two opposite worlds. One is you're flexible depending on what happens, but the other one is you're going to be acting upon rules. Because to me, and I think this is true for a lot of traders, if you don't have clear rules, what is a trigger, what needs to happen, scenario A, what rules govern scenario A, what rules govern scenario B, what rules govern scenario C, right? So even though you have multiple scenarios you could, playbook, you need to have very precise rules: when they trigger, when they invalidate, when not to take them, and where's the stop, things like that. You should not leave them, very, very open, because that's going to work against you at the heat of the moment. That's not the moment to be deciding, where you want to be putting your stop. Those things need to be, you need to have had a rule, my opinion, a rule for that beforehand. If this happened, I'm going to put my stop there. Even if it's a variable, meaning you don't know the exact level, but there is a rule behind the rationale, meaning it's going to be last high plus whatever adjustment you need to make on it, or wherever the structure broke, that's where I'm going to. You don't know where the structure is going to break yet, but that's where you're going to be putting it. Those kind of rules where it's still variable based on the structure, but there is a rule. It's held by rules, and I strongly believe that is the way to be successful in trading.
Yeah, no, I agree, and it's possible. It's possible to definitely create out of the analysis that you do, to create an if-then scenario where we have those rules. If price breaks this level, then it goes. Then this is going to be my entry, or this is going to be my trigger to start looking for entries, and so on and so forth. Or this will be my target, or this is the level that I want to trade from, or this is my stop loss. Yeah, definitely, I agree. I agree with you. Many people are interested in. Many people are interested in trading oil recently. Apparently, after maybe over the weekend, they're maybe planning to see if oil actually is going to go higher or not. It's interesting. I've been seeing many people mentioning oil. The bargain is to long gold and oil. That's what Rogaret mentions. I'm also mentioning about oil. So that's an interesting asset all of a sudden.
Have you done the analysis? Maybe one of us can do that. We still have 4 minutes before the big guys come in and take over. Oh, speaking of which, Mike is in the background. For those who can't see, of course we can. Mike is getting ready for the next segment. He's the one. He and LJ are the ones who we were referring to. They will be taking you to the next segment. As you can see on the banner, or it's not a banner, the banner is moving. As you can see on the top part of the image you get from us, the visuals. Today we have, all these days, this whole week, we have giveaways. One 10K high stake account is being given away every day, and what you need to do is in the description of this video, there is a link. You go there, you answer a multiple choice, very easy, a multiple choice question. And by the way, if you get it wrong, you just, try it again until you get it right. We want to make it really, really easy for you to win this. So you get in, and there are you have to sign in through different mediums so we can register, and you can get extra entries. And on this Thursday, not next week Monday, as I was saying yesterday, but this Thursday, there is the drawing, right? It's going to be 5 accounts, and you say, hey, y'all, hold on, Monday, Thursday, that's 4 days. Yes, it's 4 days. It's going to be 5 accounts. On the last day, there's going to be 2 accounts. All right, all of that, easy for you to win. The only thing you have to do is click that link in the description of this video, answer those questions, sign in with your accounts as it, just follow the instructions, easy peasy, and you will have a chance to win one of these high stake accounts, all for you to pass, get funded, and get a lot of money. All right, maybe we can, we have a minute and a half. Do you think we can do a minute and a half? I think that's like a pit stop from Ferrari. 9-second pit stop. Can we do oil analysis? What do you say, Pedro? Shall I go? I'm very bad
Uh,
at doing this very quickly. When I start my analysis, we're gonna be here like 30 minutes still. I'm still at the dailies. Haven't gotten to the intradays yet.
Yeah, just quite quickly. To be honest, price is a bit in the middle now. Maybe it's getting closer to a potential zone to look for longs. I think yesterday with the gap up, it was a great level to actually look for a target for longs, or and maybe even to look for a short. Maybe for some, this could have actually been some kind of a quasi model in here with this beautiful left shoulder, the head, and then the right shoulder. So that happened yesterday, and fortunately, it was with the gap. So it was really hard to enter. To be honest, I was trying to see if price would retrace back to this level to look for a short, but never happened. Meanwhile, it just dropped, and now it's back into this previous level support resistance. So we had all this structuring here at around 64.50. Also previously we had also this strong level. So this looks like it's a level that price has found some agreement to stay around these levels for a while. Maybe that's a level to potentially look for some longs. However, at this point, I'm not really saying that price is ready to come all the way back in here and start breaking highs. I'm not sure if that's going to be the level or not. Even if on the other side, if price starts breaking a little bit lower than this level, I'll be looking back at these lows in here for new longs. So yeah, so somewhere in here, maybe there's an opportunity to look for some longs depending on the price action. Price needs maybe to break something, and then maybe you can find something to look for. Otherwise, a little bit lower. But any trades from here at this point, I'll be looking more for intraday targets before starting to move for a bigger move in here. That's a little bit more of what I have to say on oil. Yeah. What's your take, Victor? Quickly.
Yeah, well, quickly. That's a big word for me. What I say is we are currently in a. I'm gonna skip to my. Thank you for that quick switch, Pedro. We make a good team together. All right. So on the higher time frames, the monthly, what do we see? We do have a fresh order block. This one has been invalidated already, and I see Mike is ready. So I'm gonna do this super quick. Now we do have an order block. We actually have one which is even fresher, but this is the extreme. So I would like to hold the extreme. That's on the monthly time frame. The weekly, what do we see? We haven't created this order block yet because the candle hasn't closed yet, but you can see how beautiful, very beautiful price action is in terms of the order blocks being respected. I mean, this is just money. I just see dollar signs here, all these wicks. Because on the lower time frame, you can go deep in and start selling that, knowing that the weekly order block is there. The demand area is a lot lower. And let's see, what else can we say? So on the daily, I would break this. Would I consider? There is obviously, that's the break of the neckline. So I'm going to be looking for that possible bullish quasi, that is from this being the head, the left shoulder, the neckline, and a possible right shoulder being created right here. So let's see if that's something on the daily, and I'm gonna finish with that. Let's see, do we have the number of order block? That is one. Actually, we have one all the way from here. It's just one big entry order block, which is not good because you want it to be as tight as possible. But hey, what do we see here? We had a little fellow here who is telling us we might get, actually we already got the reaction from it, but this could be, yes, it is below the beyond the 50% retracement. So it is a valid entry order block. So you have a price reacting to a daily entry order block. So then I want to go to the H2 to see, do we have a reason to go long? And I don't see that reason yet. So it's still to wait out. I think in the coming sessions, coming days, we should see if the price wants to do something similar to this, perhaps something like that. And you want to be getting in on that right shoulder for that continuation higher. We're going to see that. It all depends on the world arena, what's happening out there. But for now, we're gonna be watching what's gonna happen in the next segment, because we have two gentlemen. I think, yes, we do. We have the very respectable Sir Griff waiting as well in the hallway. Let's see. Any short, not short, any last words, Pedro, before we zoom out and these gentlemen take over?
Thank you very much, guys, for everyone. On my hand, it's everything. Thursday, we are back. So, guys, don't forget to subscribe to the channel. Maybe already crossed the 75,000. I'm not sure, or we're that close. So, keep on doing it. For everyone else that speaks Portuguese and wants to join the live stream later on at 5 p.m., feel free to join. And then I was just going through here the comments of what is a quasi. Well, we pronounce quasi in so many different ways that I'll let Vitor try to pronounce them.
Yes. Go ahead. Finish, then I'll do the switch.
Yeah, I'll just say you guys are going to have a great time with the next segment with the great Mike and Griff in here. So thank you guys. Have a good rest of your day, man.
All right, Dubakur. If you stay put, I'll come back in 1 hour. Actually, in 55 minutes. And I'll talk all about quasi. Whatever way you want to write it, that's all fine by me, as long as we mean the same thing. We are going to switch. Let's see, where's my mouse cursor? Hey. Oh, there it is. Couldn't find my mouse cursor. These things happen as well. All right, so see you guys in a bit. But in the meanwhile, you guys will have the honor, the privilege to have these gentlemen discussing their ideas with you, and here they are. Don't go.
And we are back. Griff, good to see you, my friend. How are you doing?
Yeah, all good, Mike. How are you?
Yeah, I am very good, thank you. I'm very good. We're going to do something a little bit different today. We've had a lot of questions, a lot of requests to learn a little bit more about the way of Griff, or I don't know how we describe it. So we're going to do something a little bit different today. So it's just myself and Griff this segment, and we're going to go and do a bit of a deep dive into the way of the Griff. So Griff, maybe we can kick things off by you've been on the stream a few times, but we'd love to have you to kind of do like a proper intro for everyone. Tell us a little bit about yourself, your trading journey, and how you got to where you are now.
Yeah, sure. So I started trading about 5 years ago, probably the same as a lot of people around COVID, a lot of spare time and looking for ways to make some money. And I started practicing a couple different strategies, and I found one that resonated with me. And I'd learned early on that it's worth sticking with one thing whenever you're trying to get into a business or an industry. You want to practice one thing and master it. Because in my life, I've always been a bit of a jack of all trades, master of none kind of guy. So I was like, right, this time I'm going to be a master of one strategy. And I found this strategy, and I back tested it for a year. And then I started live trading it about 4 years ago. And since then, I've never had an unprofitable trading year. I've been profitable every year that I've traded this strategy, just because I over prepared, I guess, and because I've been trading one way this whole time. Yeah.
So when you say you back tested for a year, do you mean you back tested previous data, or you forward tested live market data but just not on a live account?
So not on a live account. I back tested. And when I say a year, I mean like I spent a real life year back testing. I didn't just do 1 year worth. So I went from like 2018 to no, it would have been even more, because it would have been around 2020, 2021 at the time. Yeah, so around 2018 to 2021, and then I back tested like all the pairs I was trading 2 or 3 different times. So I really got to learn them really well, and I really studied them carefully. Yeah, and I just practiced that really thoroughly, and made sure I was over prepared before I started trading with real money.
Sure. And so then now, so where you are in your trading is you're a funded trader, right? And you've had obviously multiple payouts. You said you're consistently profitable for the last 4 years. You're obviously a trader with the fivers as well. So I know you've been funded with the fivers. So tell us about your experience with getting into prop and kind of going from, okay, I'm going to go live. Did you go straight into prop?
I didn't. Prop was kind of the ultimate goal. I was a little bit keen, shows I wasn't as disciplined as I should have been, because my first ever month live trading, I made 17% profit, and I thought, wow, this is easy. And turns out I just I hit a bit of a lucky month, I think. And yeah, the following month I tried taking a challenge and I failed it first time. Because my original plan was to do my first prop firm challenge in January of 2022. And I started live trading September of 2021. So I thought, right, I've got 3 months of live trading to kind of practice before I take my first prop firm challenge. But that first month went so well, I got ahead of myself a little bit.
Excellent. And so then you went into prop trading. Started with the five. When did you start with the fivers?
I think I started with the fivers. It was pretty early on. They were high on my list. I think that would have been early 2022 as well. But I did the bootcamp challenge, which took me ages to pass, because there's obviously 3 phases. And to make sure that I didn't exceed the max drawdown, I did really low risk. So although, is it a 6% profit target? I can't quite remember. I think it's quite a low profit target, but because I did a quarter risk per trade, it took me, I had to make like 30% to be able to pass it without exceeding the max drawdown, because I was doing such low risk per trade, if that makes sense.
Yeah, absolutely. So then you say it took you a while to get yourself through that boot camp, but you got yourself through it. You got yourself funded. Is that right?
Yeah, I did.
So that overall progress, or that process, sorry, how long did it take you to get through that?
So I think from start to finish, it probably took me just under a year to get funded on the bootcamp challenge. One challenge, trading it for like 9 months.
Yeah. Okay, fantastic. Well, listen, I mean, would you mind sharing us your Fivers dashboard? Let's have a look at your boot camp and your equity curves at the moment. So I know you're working on a few bits and pieces right now. So your funded account, which was the 100K, was it, or the 125K?
Yeah, here it is. So this is my bootcamp 100K account. And I actually hit a $5,000 profit on this, and I managed to scale it up to a $125,000 account. Maybe I can hop over here actually, and you can see the payouts I've had from the fivers. I've had around $7,000, and that I think that was just from the one. Yeah, that was all at once. So that was very nice. And you can see based on the equity curve that it was pretty much just from like a handful of trades. I think it was maybe 2 or 3 trades that took me to that profit target. And that's just the nature of my trading strategy. It's the reason it took me so long to pass. It's because I have quite high risk reward, average win rate and very low frequency. So you can see
Yeah.
there's a lot of trades here, just trickling around until eventually I did hit that big win. And yeah, that's my trading strategy. I have maybe 2 or 3 big trades per year that make up the majority of my profit.
Fantastic. So you're obviously still trading with the fivers.
Yeah.
What's your current status with the fivers?
At the moment, I'm not funded, and my reason for that is because when I got scaled up, Fivers later introduced a 250k bootcamp challenge, and I realized it would take me, because of the nature of my strategy, it would take me so much longer to scale up to 250k compared to just starting over. So I basically just stopped trading on this account and started a 250k bootcamp, and then this challenge died. And if I go over to my evaluations now, at the moment, I'm focusing on passing a 250k bootcamp challenge and a 100k high stakes, which I'm documenting on YouTube in a road to 100k series.
Brilliant, fantastic. So your high stakes, you're on phase 1 or phase 2?
I'm still on phase 1, but I have hit the profit target, so I just have to hit the profitable days now, which is I think that's a new thing. I didn't know that was there, but yeah, I have to get 2 $500 days, and then I get to go to phase 2. But yeah, the high stakes challenge resonates a lot more with my trading style because there's a bit more room for drawdown, whereas on bootcamp challenges, the drawdown is like 5%, I think. So I have to reduce my risk quite a bit because I can have drawdowns of up to 12% sometimes, which is fine on a personal account. But obviously on a prop firm account, I want to be extra careful because I paid for the challenge. So I use really low risk and I really take my time.
Yeah, absolutely. What's then the way you work it? Because obviously 12% is quite a big drawdown to go into, and obviously it's beyond the overall drawdown that you could get on a high stakes account. Are you talking about your drawdown in equity or just at any given time?
So 12% is the maximum drawdown I've ever had in my 4 years of trading, and I risk 1% per trade. So I know that my biggest drawdown is around 12. It's worth around 12 losses. So the way that I approach that with prop firm challenges is I basically just make sure I have enough room for double my max drawdown. So for example, on this bootcamp account, I want to make sure that I've got enough room for 24 losses, so that I never exceed like half of the drawdown. The maximum, if that makes sense.
So then you're essentially taking, let's say for example, hypothetically, you've got 5% max drawdown. Okay, so then you're essentially splitting that 5% down into 24. Let's say, and each of those is then your maximum risk that you're prepared to give yourself per trade. And then you're comfortable with your strategy that's even if you go into drawdown that you can get yourself back out.
Yeah, exactly. It leaves me plenty of room. It's great because 5% actually has relatively low spreads and things. Sometimes I find that even though I've set it up in a way that I shouldn't really exceed half of the maximum drawdown, sometimes I can come close just because I'm not actually being taken out for like 1R. I'm being taken out for maybe negative 1.1 or negative 1.2 just because of spreads and slippage and things. But thankfully I don't really experience that with the fivers because the spreads are quite tight.
Yeah, absolutely. So if you don't mind, we'd love to know a little bit about your strategy and how you actually do it. Like, how do you enter your trades? Because being comfortable going into drawdown is quite a skill in itself, right? And it's obviously something that you're somewhat used to. So maybe you want to kind of talk the guys through what is it you're essentially trading, how you're trading. And then we can maybe see if there's some examples on the charts.
Yeah, sure. I'll just bring that up now.
Perfect.
Here we are. Let me know if that's showing. There we go.
Yeah, perfect.
So the trading style that I'm trading is primarily just raw price action. I've practiced a lot in that first year, and all the years after, of course. I've practiced a lot just focusing on the way that the candles interact with each other and the way that they break each other's highs and lows. I'd call myself a price action or momentum trader, but I do primarily just focus on the shapes that the candles show. And then the way that I kind of describe my entries are as vehicles to get into good price action. So the muscle that I trained is identifying good price action, whether that's coming from a channel, maybe a really clear trend, staying out of range bound price action. So by identifying good price action, I can then use my entries as a vehicle to get involved in this good price action. So that's kind of how I classify my trading strategy.
And where did you learn it all? How did you learn it all? Was it a particular course? Was it a particular guru that you followed?
Yeah. So I followed. I was in a trading community called Guerrilla Trading. And they actually have gone down now. They no longer exist. So the strategy, I think I'm one of the few people that's keeping it alive, which is quite funny. It's a great strategy. It's really simple. It works well in other years. It works better some years than others. At the moment, it's kind of slow, but I've kind of refined it over the years to a place where I know when to be patient, which Mike, I take no trades sometimes. If we knew each other in like 2021 or 2022, I think you'd think I was quite a different trader because there's just way more setups.
Excellent.
So yeah, here are the 3 patterns that I trade. And I also kind of trade a combination of the flag and these 2. So these 2 I would call a break and retest. So I'm just looking for price to come back and retest this high. In the case of this reversal, this is a continuation. I'm looking for price to come back and test this high before continuing. So kind of like this, if I'm to illustrate that. And then a flag is just I just market execute a flag. Obviously, these are very simple patterns, and it has to start simple. It has to go complicated before it can get simple, if that makes sense. So this looks really simple at the moment, but then the more you investigate it, the more complicated it gets, and then the more complicated it gets, the more you're able to refine it back down to kind of being simple again. So people who are just learning the strategy can sometimes be just as good as people who have spent years trading it, like me. So these are kind of the entries I trade, but I also trade, just to touch on it, a combination of the flag and the break and retests, which would look like this or like this, if that makes sense.
Yeah, absolutely. And so looks like you're particularly looking at longs, but you're looking at shorts as well, right?
Yeah, of course. I have no directional bias whatsoever. Just wherever the market takes me. I think I'm just better at drawing longs. Could try.
No, absolutely. I mean, the reason I ask is because some people do just trade longs and some do just trade shorts because it's it's easier to spot it on the eye for some reason. Some people can see longs more clearly on a chart than they can see shorts, right?
Yeah, that's true. I do often invert my charts because I have the exact same thing where this shorts doesn't look so good, but when I invert it, it looks great as a long.
Yeah, exactly.
I do that all the time.
So time frame that you're trading this strategy is a single time frame, right?
Yeah, that's right. I trade exclusively the 1 hour time frame, which is quite unusual. I think a lot of people are multi-time frame traders or even lower time frame, higher time frame. I'm right in the middle, and that's the way I like it. I think there's definitely an edge in having multi time frames to analyze, but personally I've just found it really easy just have 1 hour, just the 1 hour time frame, because I can quite easily see what's happening on the lower time frames and on the higher time frames. And I can give you an example. Say over here, these 3 wicks just barely breaking higher. On the lower time frame, this is an ascending channel. It's doing that, you can imagine, because the highs and the closes, high, close, creating an ascending channel. And And the same way, I can quite easily see the entire week's price action just by zooming out. You know, I can kind of get a good idea of what the daily candles look like as well. So I find the 1 hour is a really nice in the middle time frame, and it just keeps it simple for me.
Okay. So you don't look at the other time frames whatsoever. You stick to the 1 hour. You don't look at the daily to think, right, we're going to have a bullish day or a bearish day. You're 1 hour and that's it.
Yeah, literally 1 hour and that's it. In the trading community where I started learning, it was almost taboo to navigate between the time frames, which is quite funny.
Wow.
Obviously, I don't mind having a look on the 4 hour if it's hard to tell. But I only really put weight based on the way that I've been trading. I only really put weight on the price action on my screen. So about the last week's worth of price action. So going on the 4 hour or the daily, I'd be considering, you know, way more candles, which I wouldn't otherwise be considering based on the way that I've practiced over the last 5 years.
Got you. And assets you're trading, I know there's particular assets that you've back tested. Is that right? So there's only particular assets that you would trade.
Yeah, that's right. So I've backtested a lot of different assets, and I've ended up narrowing it down over the years to 6. So I don't know if you can see on the corner of my chart here. I've got AJ, AUD JPY. I'll say the full name: AUD JPY, AUD USD, Euro JPY, Euro USD, GBP USD, and NZD JPY. Those are my 6 currency pairs. But I think, as I've mentioned, like the trade frequency right now with my strategy is very low, and I'm looking for ways to increase the trade frequency. So I do have a few other pairs which I need to test and consider introducing. But these are the 6 that I've really mastered, and I know like the back of my hand.
Yeah, absolutely. So I mean, new NZD JPY, I'm really curious about that one, because that's a bit of an outlier compared to the others, right? It's a little bit obscure. It's I mean, okay, you've got Aussie JPY, so I'm assuming it's kind of off the back of having Aussie JPY. Is that kind of the reason for that?
Yeah, exactly. AJ, it has it can have really large moves. It can be quite a volatile pair. But when it goes, it really goes. And the nature of my strategy, a lot of it is break and retests. The break and retest entries I showed are my like highest risk reward strategies. And on AJ, I find that it will literally tag me in by under a pip and then just fly. And so I introduced NJ a couple of years after the other ones. And I've actually found it outperforms AJ now, which is quite interesting. In the future, I'm looking at introducing NZD USD, because AUD USD is my best pair, and sometimes it'll nearly have a setup, and I go over to NZD USD and the setup has formed there. So I'm thinking of introducing that as my next pair, my 7th currency.
Okay, excellent. You mentioned Aussie USD is your best performing pair, so maybe that's one we can go and look at and see if you can give us some examples of your setup and how you would look for your trades.
Yeah, so I've prepared some. Here's some I made earlier.
Blue Peter style, excellent. I like it.
Yeah. So these were trades I took a while ago. Obviously, I've selected them carefully because this is just such nice price action to be able to show off. And there's a few different types of entries here. So I've got actually two different types of trades than the ones I described. This is a bit more experimental. This is I think a sweep entry, kind of trading highs and lows. This is something I was experimenting with a little bit last year because I noticed the markets were going so range bound. It's something I'm looking at a little bit more again now as a way of increasing my trade frequency. But yeah, I think this is a really good example where the price is just really ranging, going super sideways. And I'm basically just taking shorts at the highs and buys at the lows. Really simple, really easy, and just going for a 1 to 3. And the only requirement for this entry is just to be able to read price action. And obviously, like I said, price action is my like bread and butter. I'm really good at identifying the different phases of the market, when to stay out, when to get involved. So yeah, there's a couple of things here which I can go over. The first of which is this downtrend. So I really like the idea of taking this short trade just based on this downtrend. But the main thing I'm looking for is I'm looking for breaks, not just above highs and lows, specifically breaks in the case of shorts, breaks above highs of momentum, like highs behind these pushes down. So for example, this high over here, I wouldn't put a lot of weight on it because there's not really a lot of support from sellers in the market. Whereas over here, I really like this high because I know that there's a lot of sellers in this market. So I'm kind of just looking for a break above where sellers got involved. And I guess if you want to break it down, the reasoning for that is if sellers getting involved, then price is overvalued. So by getting involved at a level higher than where sellers considered the market overvalued, I'm getting in at a very good price. That's kind of my logic. And you're also getting involved with some sort of support and resistance, which is great. And then I'm just waiting for a shift in momentum. So I'm waiting for price to not just break above the high, but I'm waiting for a clear shift back down. I want a confirmation to the downside. And that's what I'm seeing in this candle right here on Monday morning.
Right. So that bearish candle that you saw on the Monday morning, that kind of significant push down, that was the signal for you to get in. Is that right?
Yeah, exactly. That was enough of that candle was significant enough for me to see a shift in momentum and to be confident enough that the market wasn't going to move up. And this is the same over here, where we're breaking below these 3 pushes up actually. So I know that these lots of buyers means that at these kind of levels the market was considered undervalued or discounted. So by getting in at an even better price, I'm getting in at a very good position, and then I'm just waiting for a confirmation. I know there's a few people that trade similar entries like this, where they look for a high or a low to be broken, and then they'll drop down to a lower time frame and kind of wait for a break of structure or confirmation. But I found that if your stop loss is big enough, it doesn't really matter if you're entering here, or here. It doesn't really have a huge significant impact dropping down to the lower time frames and having a really precise entry, because quite often you can just whack a market execution on the 1 hour and achieve like 80% of the same entry. So I don't really that another reason that I like the 1 hour.
Sure. So your entry would have been what, a sell stop order at the bottom of that candle at the close of that 1 hour?
No, just a market execution. So
Okay.
the way that because I'm trading exclusively the 1 hour time frame, I'm basically just checking the charts once an hour at the end of each
Okay.
hour. And
Right.
if there's not really a lot going on, I know that I don't have to check the charts. And the fastest entry that can form is my continuation model, because that requires 1 big impulse candle, 1 pullback candle, and 1 continuation candle. So I know that if there's nothing going on my 6 currency pairs, I don't have to check the charts for 3 hours. And I come back 3 hours later and see if a continuation's formed, which is uncommon. Yeah, that's the way I do it. And then just on the last 5 minutes of the candle, just as it's closing, I'm getting my phone, I'm getting MetaTrader set up, calculating my lot size, and then just as the candle closes, I hit market execution.
Okay, interesting. So you're kind of scanning through all 6 pairs in that last 5 minutes, essentially. Is that what you're saying? So if you, because obviously candle, 1 hour candle can change a lot in the last 5 minutes. So you're kind of assessing it, getting your lot sizes ready, and then deciding, right, okay, are any of these even close to being ready? And those that are, you're then waiting to see, right, is this actually going to close as I expect it to? And then you're kind of getting in that way. Is that the idea?
Yeah, exactly that. It can be a bit tricky sometimes because you only have a few minutes to make a decision. I found that 5 minutes is optimal. Otherwise, I'll end up overthinking it and spending too much time looking at the charts. Quite often, straight away because the way I trade is quite intuitive. So I am just listening to my gut a lot of the time. I don't have. I used to have a very clear-cut trade plan, but now my trade plan is a bit more open-ended. And I have quite strict rules not to check the charts during the hour because the candles can change so much. So say I'm a bit uncertain on a trade, that is a sign to just stay out, because otherwise I'll be there watching the candle, weighing it up.
Yeah.
So yeah, the last 5 minutes, and that's it.
So you'd say you become more discretionary over the years in terms of having, like you say, that gut instinct to get in, rather than being very, very strict with your rules about what structure you're expecting to see. Is more instinctive and discretionary based on just the years that you've spent trading, essentially.
Yeah, exactly. So similarly to the way I drew that normal distribution of, it goes simple, then it gets complicated, and then it goes back to simple, and it's like beginner, intermediate, and kind of like master.
Yeah.
I kind of did the same thing with my trade plan, where I started off with no trade plan, and then I built this really elaborate, complicated, mechanical trade plan, which was just, I think it took me about 15 minutes to decide whether or not I was entering this trade, just reading through all my rules. And then eventually I've been able to simplify it to the kind of a position where now it's just all in my head, and it's mostly feeling based. The way that I kind of will weigh up a trade is by looking at the pros and cons. So take this flag, for example. It fits my plan, first of all. And then I'll look at all the like the pattern is valid, and then I'll look at all the things which is wrong with the trade. So first of all, we're kind of coming from a range, but there is this sweep down here where we kind of broke this low. Prior price action is kind of descending, so I know that price action is kind of doing this, and then we go flat, and then we impulse up. So this is a good sign to me that price action is kind of slowing down, and then we reversed. So prior price action, very important. In this case, it's pretty good. It's fine. It'll do. Big impulse, the impulse is fine. Large wick on the top, that's a bit of a concern. Normally after a wick, I want to see a range. I have a different tolerance for different wick sizes depending on the currency pair. On AU, like this one, I'd say this is a medium to large wick, which isn't ideal. It kind of brings the rating down a little bit. And then after a large wick, all I'm waiting for is I want to see, after a large wick, I want to be extra sure that there's no shift in momentum. And that's normally in a range, but in this case, it's by loads of tiny candles retracing. So rather than having just a regular flag, I've kind of got this little trickle down like this, which really gave a good sign that price action is struggling to pull back, because all of these candles fit within about one of these bullish candles. So that shows me no shift. And then, based on that, I'd say kind of weighing up everything about this trade, I'd give it a grade. And if it's above a 9 out of 10, I would take it. And in this case, I'd say this is about a 9 out of 10. So it fits my plan.
And that kind of that grading system, did you, because a lot of it we've already established is now discretionary, it's not like a physical checklist, but did you do something like a checklist to, when you were saying about that complexity curve, should we call it? Was that kind of how you were doing it? It was like, okay, check that off, and then it almost becomes muscle memory, and you just know what to look for?
Yeah, it did end up becoming muscle memory, because I did make this kind of system where I was trying to give each variable a different weight, which is nearly impossible because the weight changes depending on like the pairings. So for example, maybe a large impulse counterbalances the positive of a large impulse may be counterbalanced by the negative of a wick. So I would be trying to give the size of a wick a weight. So maybe this is this takes away 2 points from the trade. But yeah, it was really, really hard because different variables have different weights in context of one another. So in the end, I was just like, this is I felt like I was programming a whole, I felt like I was writing a whole language. It was really tough. And in the end, I was like, this can't be quantified. And now I'm a bit of a believer that trading is a bit more. It's a bit more of an art for me now. It's definitely a science as well. But I was treating it before as like 100% a science, whereas now it's a bit more of it's an art and a science for me. if that makes
Yeah.
sense.
Yeah, absolutely. So, I mean, you've obviously gone through this journey from 2018, 2019, done all your back testing.
Yeah, from 2020. Sorry, I back tested back
2020,
to
sorry.
2018.
Back tested, sorry. Back tested data from 2018, started in 2020, actually doing the back testing. Got funded in 2022, 23, something like that?
Yeah, so I started in early 2020 and I was funded by early 2022. So I was funded within 2 years of finding out about trading, or within 3 months of beginning my live trading.
Yeah. Okay. So throughout that journey, what would you say was kind of the biggest challenge or the biggest hurdle for you to overcome?
The biggest hurdle, I think for me, I can be a bit of a perfectionist, there's no such thing as perfection in the markets. Every moment in the market is completely unique, and perfection just does not exist. So I think I would be quite tough on myself if I made a mistake, which would, ultimately lead to more mistakes. So I think learning to accept losses, accept mistakes as part of the game, probably my biggest hurdle. Yeah, and the way that I did that was just by being a bit kinder to myself, taking walks when I'd made a mistake. I think it's easy to beat yourself up. Yeah, I think just being a bit kinder to myself and accepting losses as part of the game. I think one way I did it actually was with a bit more of a data-backed way, kind of proving to myself that it's okay to take losses and make mistakes. Because say in 2023, I made like 80% profit. And I think by taking that into account, I was like, wow, that means I can afford to make like 80 more mistakes, So making more mistakes, taking more losses, it doesn't really make a big difference on the larger scale. But if you're looking at trades on an individual basis, you can really be quite judgmental of yourself and say like, oh, why did I take that trade? But obviously, it's hard to see the larger sample size. Keeping that in mind is very important.
Excellent. Since then, obviously, you've been funded, you've had payouts, you've had some sizable, nice payouts as well. What are you most proud of in terms of your trading journey?
Oh, that's a good question, Mike. I think my resilience, I've like more than any monetary reward, trading has made me a better person for sure. I think I was somebody that would, like I said at the beginning, jack of all trades, master of none, and that's because I would never stick with anything for more than more than a few years. So with trading, I'm really proud of myself that I was able to stick with it for this long, and that's kind of the discipline of doing something when it's hard, when you don't really feel like doing it anymore. I think that transcends trading and goes into all elements of life. I find that now I'm able to stay disciplined in all sorts of other places, which otherwise I wouldn't have if I hadn't become a trader. So yeah, I'd say I'm most proud of becoming a more disciplined, like resilient person.
Yeah, and those kind of milestones that everyone kind of more traditionally talks about. So first payout, first getting funded. How did those feel?
Oh, it felt great. Yeah, it felt really great. I remember there was one payout I had. It was actually a 6-figure payout, and yeah, I remember I like fell to my knees and I was like, yes. I could not believe that it was real. Yeah, I think being able to celebrate is quite important, because otherwise, otherwise, what's the point?
Yeah, absolutely. That must have been one hell of a feeling.
Yeah.
Brilliant, Griff. One last question then. For everyone watching, for everyone who's maybe still on their journey, maybe some people have been funded but haven't had payouts, like myself. Some people haven't even gotten funded yet, but they're at the very beginning. What's the kind of the one piece of advice, the way of the Griff that that they should take away from maybe your journey that can help them on theirs?
Let's see. Well, I've already mentioned being disciplined and just sticking with one thing. So I won't mention that again. I'm going to say having the skill of self-reflection and being able to be honest with yourself is a very, very, very valuable skill as a trader. And I'd say arguably the most valuable skill as a trader. And the way you can kind of train that muscle is through meditation. I think meditating a little bit definitely helps. Just being a little bit more aware of your thoughts and also where those thoughts are coming from. Because if you're an aggressive trader, there's a reason for that deep down. You know, and if you're a fearful trader, there's a reason for that as well. And if you can get to the root of where those emotions are coming from, then you can eliminate them, or I wouldn't say eliminate them, but you can become aware of them. And then once you're aware of them, they won't cripple your trading anymore. So I'd say that's the number one thing. Because like I said, I became aware that I can be a bit of a perfectionist. And just saying that isn't enough. You need to really dig deep. When did I become a perfectionist? Like, how old was I when I became a perfectionist? And then once you fully understand yourself, and you can start being a bit more honest with yourself, then you can trade a lot more freely, I think. Yeah.
Brilliant. Griff, it's been great to have you on. Thank you ever so much for taking the time. We'll be right back right after this, guys.
Listen up, traders, we got a new competition with massive prizes launching at the Fivers. The top traders, they will win high stakes accounts, and everyone in the top 100 will get a prize, including hub credits and bootcamp accounts. We're actually doing this every single Wednesday, week after week, so you will always have a chance to win. It's fast, it's free, and it's easy. All you have to do is just sign into the Fivers Hub, click on the contest on the left menu, and join the upcoming competition. We hope to see you all there. Good luck.
And we're back. We are back, guys. Hopefully you guys enjoyed that little segue away from what we're usually doing with Griff. Guys, those of you just joining us, welcome to the Fivers Live trading room. We are live every Monday, Tuesday, Wednesday, and Thursday. And this week we are doing something extra special because we are doing a giveaway every day of a 10K high stakes account. So you can get involved in every single day, which is even more impressive. So if you missed out yesterday, you can still get involved in yesterday's giveaway. The link is still in the description from yesterday's live stream, and that link is still active. The link for today's giveaway is also in the description, and it's pinned to the chat as well. All you've got to do is go in and answer the question. The question is the secret. The answer to the question is the secret code that you will be looking for, and you will then have multiple other options to get yourself entries into the giveaways. We're giving away 5 accounts in total, all of which are going to be drawn this Thursday afternoon after midday UK time. So you've got plenty of opportunity to get involved in all 5 giveaways. So plenty of chances for you to get involved, plenty of chances for you to take part in this. In addition to that, we are currently standing at 74,836 subscribers. So we are currently 164. 164? Yeah, 164. 164 subscribers away from 75,000 subscribers, which is amazing to think. All of us would love it if you would hit that subscribe button. Make sure you hit that bell where you get all the notifications. If you are not subscribed, then you can't find out about all these giveaways. You can't find out about all these events that we're running literally every day. So make sure you hit that like and subscribe button. We would love to be bringing you more live streams, more live trading rooms, more videos and content for everything that you guys are looking for. But we can only do that if we're building up those numbers. So hit that subscribe button, click the link in the description, follow the instructions on there, and let us know what you're trading today. Griff, we normally, aside from our chat that we have just had, we normally have a bit of a back and forth about whether you've taken any trades this week. So have you traded any trades this week?
I've not, Mike. I've not taken any trades this week.
Oh shucks. Oh well.
Yeah, I know. I'm coming to the end of the month and I've not taken a trade. I'm watching the charts really carefully because obviously I've got to make the monthly Road to 100K series, and I want to give the people a trade. Exactly. I don't want to have another video with no trades again. But yeah, it might be the case, unfortunately, because I'm just so patient.
Yeah, that patience, my God, that patience would have probably given me a heart attack by now, I can safely say. So yeah, but no, kudos to you for doing
Thank
that.
you.
I was going to ask you, so you've obviously done your back testing, you've done all of the kind of the work behind the scenes to decide your 6 currency pairs, right?
Yeah.
I have a suggestion.
Oh, love it.
Suggestion, right? Rather than picking a particular currency pair, okay, now this might be a terrible idea, okay, and the guys in the chat will tell us if this is a terrible idea, but have you thought about using the strength score meter?
Is that RSI?
Not exactly. It is. So I use there's loads of them out there, right?
Okay.
But I use the baby pips one because it's nice and simple to look at, right? So what it does is it gives you, for example, on a given day, it will give you where the strongest currency is and where the weakest currency is. Raf, just let me explain it, Raf. Just let me explain. Right? You see, I knew this was going to happen. I knew this was going to happen because Anastasiia and LJ give me a. We don't know. We don't. Every strength meter has its own calculations. Right?
Oh, really?
It's when I've looked at them, and I've got my own formula for this, which I'm building on my own platform separately. But that's a whole different story. They're a culmination of different metrics across all 28 currency pairs, right? And so they determine on a given time scale whether a currency is particularly strong or particularly weak. So it takes all 28 currency pairs and pulls it into this algorithmic calculation of whether a currency is strength or strong or weak, and so on. On baby pips, what you can do is you can look at it both in real time, but also at the last closed candle. But you can also look at different time frames. So you could, for example, theoretically look at the 1 hour, right? And so, for example, the 1 hour right now is saying the CHF is really, really strong, and that the US dollar is really weak. Now, I'm not saying that this is the way for you to look at it, right? You could look at it on the daily, you could look at it on whatever time frame you want. I personally look at it on the daily, okay, and I will look at it in real time, but I'll also look at the last closed, because, for example, if I see that there's a big divergence between Euro and GBP and, for example, the USD and the CAD, well, if I take that out to, for example, let's say, for example, Euro USD on yesterday, well, sure enough, yeah, we had a big pump. And so the idea is that you might then see, for example, your flag patterns or something like that on the 1 hour. You might see some of those setups appear that you wouldn't necessarily have checked otherwise. So rather than you kind of sticking to that one particular additional asset, might be worth just give it a try, maybe, you know, maybe in some back testing, and just see, right, if I'm going to look at currency pairs. And the idea is not, because LJ and Anastasiia give me a hard time about this, the idea is not to say, right, okay, euro is strong, USD was weak yesterday, so therefore we're looking at longs on euro USD. We may just as well be looking at shorts, right? It's just about the fact that there's a big divergence between the two currency pairs, and so therefore you're seeing something significant.
There's movement there.
Exactly.
Yeah.
There was movement, and so you might see a pull.
I know what you mean. Yeah, thank you. I appreciate you mentioning that. Yeah, I can understand how that would work well with my strategy, because if I've got, you know, I don't have to be monitoring just these 6 pairs. I could just look at that, see which pairs are moving a lot, and I can look at, like, for example, I think CHF was, or USD was moving a lot, wasn't it? So
USD,
I could just look at all the USD pairs. I could look at all the CHF pairs, and I can see if I can find any trade opportunities like that. And obviously, like here, this would be a valid continuation over here. Not sure if it's one I would take, but technically that is the break and retest model, you know?
Yeah, exactly. So I mean, in theory, it could be. I mean, it's maybe worth just having a look and, you know, journaling some back test ideas, you know, forward testing it essentially, and see if it does give you that. Because obviously, to back test the strength scores, you have to have your own formula and all this other stuff, and it becomes a bit complicated. But just an idea, just something to maybe digest and think about. Because I'm determined.
New ideas.
I am determined to get at least one person converted to the concept of how the strength meter can give confluence, or at least give you the window of opportunity. Because I keep getting ribbed by Anastasiia and LJ that, Mike, you know, it's not telling you anything, it's all lagging data and everything else. And that's the point. It is lagging data, but it's showing you divergence of which is the strongest and which is the weakest, to see, right, is there maybe something else, you know, coming back, or is it a continuation? So anyway,
thank you. I'll let you know if I use it.
You've not completely laughed your head off at me and dismissed it entirely, so I appreciate
I
that.
would never do that.
Thank you, my man. Thank you. Raf, you just laughed at me a minute ago. I'm not taking any word that you say ever again. Vinicius, I'm telling you that there is validity to the strength meter. If you want to trade just one currency pair, some people do that, that's fine. If you want to have opportunities abound and endless opportunities when your currency pair is just sitting there doing nothing, languishing in the depths of despair, strength meter, telling you it's going to open your eyes to opportunities that you would never have seen before. Because who's got time to go through 28 currency pairs? Nobody's got time to go through 28 currency pairs. Strength meter does it for you. It's like a beer with too much froth, right? It just scrapes the froth off so you can get down to the real juicy nectar. So yeah. Venetia says Griff is just too polite to say no. Yeah, he probably is. To be fair, Venetia, I know Griff is incredibly polite, so he's just saying, Mike, I'll let you know if I ever use this. I'm never going to use this.
No, I'll keep it in mind. I'll always keep it in mind. I'll put it in my daily routine, Mike. I'll wake up and I'll check I'll meditate, I'll do my forecast, and I'll check the strength meter.
There you go. You see. Griff, Gibran saying, I don't want to lose my prop account. Gibran, we don't want you to lose it either. Protect it by reducing your risk, my friend.
Reduce risk.
Exactly.
Hippopotamus. That is so cool.
That's a great name. Hippopotamus. You got to, dude. You got to go and check if that domain name's available. Hippopotamus.com.
Yeah. Oh, it's a sad question though. Today he lost 4K. How can he help himself? How can he stop himself from executing impulsive trades? You got to practice discipline in and out of trading.
What
would you? My best way.
What would you suggest in that sense?
how to practice discipline. It's about doing the little things, you know, like, oh, I've got to go and do the dishes. Just do them, you know, no excuses. And if
Yeah.
you can have discipline all in your personal life, it's so much easier to bring that into your trading life as well. And then just stop acting impulsively. I mean, for me, I'm like, you know, the answer is to just don't, you know, and the only way to just don't do that is to be disciplined, you know.
Was there anything in particular that's worked for you to kind of instill that discipline? Whether, I mean, I'm assuming you did it personally and then brought it into your trading, or?
I guess just starting small, you know, not I could never be disciplined because I was setting such high expectations for myself that I would never reach. Like, by setting just little goals, it's actually counterintuitive because you can achieve those little goals so easily. And once you have, you're inclined to do a little bit more. So like when I was writing my dissertation at university, you know, rather than being like, right, I've got to write 1,000 words today, I would just write like 200 words. And, you know, sometimes I would just write 200 words. And other days I'd be like, oh, I'm in the flow now, I'll do 500. And I end up doing 2,000 words, you know. Whereas if I were to say, I've got to do 2,000 words, I would have just never started. So yeah, setting little targets and working your way up to, you know, not taking a revenge trade.
Yeah, exactly. UK Swing's got a very good point, saying, look at your favorite snack and don't eat it, give it away.
Wow.
And that's behavior therapy. Do you know what? I really like that one. I think that's a
cool.
really, really good one. That also means I can't go and have a Snickers bar after this. So yeah, thank you for that. UK Swing says, don't allow the dopamine hit, encourages impulsive behavior.
Yeah, dopamine detox.
So yeah. And yes, Griff is incredibly humble, and we love him for it. It's great to have him as part of the live trading room here. So that's absolutely. And Gibran saying, no revenge trading. That's the biggest discipline. Or delete the app by the time you reinstall. You'd be called down, or call your wife and argue about something. Yeah, that's one way to do it. Deleting the app and reinstalling it is an interesting approach. And yeah, Pippopotamus, we love it. That's a genius name. I recommend you go out and nag yourself that .com domain if it's available.
Yeah, so, not if I beat him to it.
Yeah. Oh dear. And Raf saying, I started by thinking about my miserable days and if I want to go through it again. Yeah, that's also another way to look at it. You know, kind of, you know, think about where you've come from and use that as motivation as well. So yeah, no, there's plenty, but yeah, I think Gibran's a lot of people are liking your advice.
We'll all be calling your wife Gibran.
Yeah.
And arguing with her.
Exactly. How are you finding parenting is affecting your trading, Griff?
Oh, well, I've not traded since she was born, so not much. I'll let you know.
So becoming a father has made you really protect your capital, basically. Is what you're saying.
Well said. Protect my capital, protect my babies.
Yeah, exactly that. Brilliant stuff. Guys, we will have Victor coming on with us very, very shortly. Griff and myself will be signing off. But those of you who are just joining us, first of all, welcome to the Fivers live stream. We are here every Monday, Tuesday, Wednesday, and Thursday from 9:30 a.m. to 3 p.m. UK time every single day, every Monday to Thursday. And this week we have got a special giveaway. We are giving away 5 10K high stakes accounts. Every single day we have got a link in the description, and we've also got a link pinned to the chat. All you've got to do is go to that link and type in the secret code. Now the secret code is the answer to the question that you will find there. So you just log in, type in the secret code, and that'll give you an entry into the draw. You then have opportunity to get multiple other entries by liking and subscribing and all those sorts of lovely things. Every single entry gets you into the draw for one of these 5 10K high stakes accounts. All of the draws are going to take place this Thursday afternoon after 12 p.m. UK time. And what's even more impressive is if you go back to watch yesterday's live stream after this one is finished, of course, you will find that the link for yesterday's stream is still active. So if you missed yesterday's, you can still get in with that draw, answer that question, and you can get an entry for that one as well. So tons of opportunities for you guys to win. We hope you guys will enjoy that. We're just waiting for Victor to come back online. Victor, the legendary masked trader. So he'll be taking over from us very, very shortly. But yeah, Griff, thank you ever so much, mate, for joining us. Thank you for your transparency and honesty about your trading and sharing us a little bit about your journey. I think it's been a while since you've been on the live trading room, but a lot of people have asked, hang on a second, I want to know a little bit more about Griff. So yeah, thank you for taking us into the world of the Griff. Much appreciated.
Thank you for your questions. I really appreciate it. It was fun. And next time we got to talk about you, Mike. We spent 45 minutes talking about me.
Oh my God, I'm not sure that's a good idea. I'm not sure that's a good idea.
We'll do a Mike interview next. Let us know, guys.
That's going into the talk of degenerates and all sorts of madness. So yeah. So hopefully we've got Victor waiting in the background and ready to join us any minute now. So we will be handing over to him. Guys, in the meantime, trade well, trade safe, and we will see you next time. Take care.
Bye.
Well, hello, we're back and without a graph. Yes, I know. How is everyone doing? I'm going to put Mike's graph in the meantime. Thank you, Mike, for thinking about the same. I was all prepared minutes ago to go live and just waiting, obliviously, not putting up my screen and, thinking I'm completely prepared. Prepare is half preparation is half the work. Only to find out that I don't have my graph on. But that's live, right, Mike?
That's the world of live streaming, Victor. That's the world of live streaming. Oh dear. How you doing, my friend?
I am doing well. Thank you. Thank you for asking, Mike. I enjoyed your interview with Griff. I think that is that is the basis, one of the pillars, I think, of our stream. It's about showing reality of trading, showing raw reality, how it is, the struggles, the ups and downs, the mind, the train of thoughts behind the process. And Griff is a wonderful example of a good trader, and I love that interview.
Absolutely. Before I go, I know you've got your chart up, so I'll bring it up for you. There we go. Guys, we are at 74,844 subscribers. So that means we are just 156 away from the 75,000 mark. I reckon we can do that today. If you guys all hit that subscribe button, we have got plenty of you in watching us. If you're watching over on Twitter, jump on over to the YouTube channel, hit that subscribe button, and make sure you click that bell to get all of the notifications, so you know when we're live, you know when we're doing giveaways, and you know when this is all happening. So make sure that you hit that subscribe button, get us to 75,000. Jonathan, who is on holiday this week, when he is back next week, he has promised wild and crazy celebrations, which could mean anything, frankly. So I wouldn't hang around. We all want to know that we've got those celebrations coming. So yeah, make sure you subscribe to the channel. And the sooner we hit that 75,000, the sooner I can message Jonathan on his holiday and say, Jonathan, you've got to go and plan your giveaway or competition or celebration or whatever he's got in mind for for celebrating 75,000. Victor, I'm going to leave you to it. I know you've got Dr. Deanna Cole joining you very shortly, so I shall hand over to you, and I will see you guys later on.
Thank you, Mike, for all the announcements and the heads up on the activities we, the Fifers, our team has prepared for the audience. Thank you, Mike. All right, so Dr. Cole, there it is. That's what I've been anxiously waiting for, that okay to bring you on for our audience. Yesterday we had a great discussion, but before everything, how is your day so far?
So far so good. Just enjoying the beautiful summer and just excited for the day. It's been interesting time in the market, and I'm looking forward to being here with you all.
Thank you for that. We enjoy having you with us, especially when we have you back with the usual connectivity. It's good. Actually, as I was saying that, we lost Dr. Cole, but she will be. I'm sure it's a little glitch. She'll be back with us soon. Sometimes things happen funnily, right? When you mention something, that's exactly the time when it might reoccur. And we have her back. Let me put her with us. Where is I see her? Hi, Dr.
I'm so sorry.
No problem, Deanna, at all. I think it's very funny. I think it was very funny because I know the difference. We can see you more fluidly compared to yesterday, and the sound is great.
Good.
And we enjoy that. And just I was saying that we enjoy having you with this connectivity as usual, and that's the moment we lost you for a little bit.
Well, I have to say it was me. I accidentally pushed the wrong button and just exited out. So no connectivity issues today. Just use your error.
Perfect.
It happens.
Perfect. Yeah, human error. Actually, that's a good topic to talk about today, or maybe something else. But we. So your day has been great. That's awesome. You're from a fixed place, not as mobile as yesterday.
Yes.
And does that mean that do you need some time to transition back to normality, or when you come back? Let's say, I don't know if you're traveling finished, or it's just something temporarily, but do you need time for transition back? Because two different.
No, just kind of keep it simple. I'm still traveling, so I'll travel for another week, and I'm just doing the same thing over and over again. Just try to keep it as consistent as possible, so that even on whether it's vacation or just having to travel for different reasons, it's just the engine keeps going.
Perfect. I like that. Consistency. Yeah. If you want to have consistency in your results as a trader, you got to have consistency in your routines, in your workflow as well, right? In your day-to-day, even if you're not on vacation or if you're not on traveling. And especially if you are, you got to have some kind of consistency, right? Some kind of routine if you want to have consistent results. I like that. All right, so let's look at the chat. I see Vinicius wants us to call Jonathan. Maybe we should do that. Maybe we should call Jonathan live and have the webcam on, the video on, to see when he answers, see where he's at on his vacation. I know you're listening, Jonathan. We're gonna be calling you right now live on the show. No, I'm just kidding. Perfect. Deanna, what can you say? Actually, you mentioned something, human error, and I don't know if we talked about this that much so far, but how do you mitigate that risk? That's a risk that we all have because we're all humans, and we all make mistakes. No one is infallible. So by definition, it's an issue that we all have to some degree, right? Very low or higher, very high. It's somewhere in between. But what do you do to mitigate the human error side of your process?
Yeah, that's a great question. I feel like when I was first getting started, that was with the day trading. It's not so hard on swing trading, but when you first get started with day trading, any little mistake you make can be a huge setback. And I feel like in the beginning, I used to make a ton of mistakes. I still make mistakes, but simple things, even, I'm sure everybody's been there where you mean to go long and instead you go short, or you think you have a certain number of contracts on and it turns out it's totally different, or you thought you put your stops in, but it turns out you didn't. So for me, one of the best ways, or the best way to mitigate that, I still make mistakes, but to keep the process as simple as possible. So that means, sticking to one or a few assets rather than trying to trade 28 pairs. In the beginning, when I was first starting to day trade, I looked at all the pairs. It was really hard to keep up with all that. Keeping the same system, keeping the same process, the way that I journal is the same every single day. And doing the same thing over and over again makes it so much easier. Like, you don't typically make mistakes in your daily routine whatever your daily process is, right? You wake up, you brush your teeth, you get dressed, whatever. You don't typically make mistakes in that, and you don't forget to brush your teeth. But you take yourself out of your normal routine, and you might get out the door on vacation and realize, oh man, I didn't even brush my teeth this morning. So it's the same process applied to trading, just making sure that as much as possible, I'm doing the same thing day in and day out of the things that I can control. I can't control the market, and so that's going to be different every single day. But of the things that I can control, making sure that I'm keeping it as consistent and steady as possible. What about you, Victor?
So you're saying make use of routine. You're saying make use of routines, make it a routine, because once it's something, an item, an activity is part of a routine, the likelihood of missing it or doing it wrongly is minimized. Is that correct?
That's right.
Yes. Do you have before we come back to that? I think that's great. That's awesome, because routines are basically we can perform them on automatic pilot, right? We don't have to think about brushing our teeth, although it's good thing to do it consciously. But you rarely, it doesn't need more CPU load or CPU processing time, right? You're not thinking like what angle I'm gonna hold my toothbrush. You just do it because you've been doing it so many times. How do we build a routine? Or perhaps maybe I should answer the question, because then we will maybe start deviating. We're not deviating, but going deeper into the subject. So let's park that routine question a little bit. Well, what I do is actually what you just mentioned describes a lot what I do. What I did was, I had an issue with, I wanted consistency so bad, because I knew the back testing. I had good numbers when I started seeing profitability and positive expectancy of the strategy, but I wasn't getting that in my real life, in my real trading forward. At the beginning, I wasn't, and I said I was really frustrated, because I know there is edge there. I can measure it. Even when I go back to the week, perhaps that a week before, and apply my rules and everything to the scenario, to price action, to the chart, I would have a different, much better outcome than the one that I got. And one of the things that I said, well, I wanted consistency so bad. So what I did was, I know it may sound a little wacko, but I don't think it is. What I did was I tried to break every step down that I did in the back testing to a very specific objective step that I do. Even what I look at, what I click, what is everything, as much as possible. And it doesn't, in the end, it's not going to be that complicated, but you have to do it. I think it's a good exercise to do it to begin with, to identify the process, the flow. Okay, so I start my computer. What do I do first? Right? I know it sounds very silly, but okay, I start. What time frame do I put my screen? What do I look first? What are the rules? That's basically making your trade plan a plan of action, right? Because your trade plan should be, different questions you go through, different criteria you're looking for, but make it more applicable. That requires a plan of action, really step by step. Okay, what do I do now? I go, I do this, I open that, I look at this, and then I discard it or not, and so on. So that's what I did. And I did that over and over and over again until I don't need to look at the list that I made. And basically, I didn't think about it that consciously, but I think that what I did was I made it a routine. I made it a routine where the next step is, so clear that I didn't need to think about it, look for the list. Okay, so what do I do next? I didn't have to do that anymore. And once that happened, I saw the big difference in my results that, I'm still not perfect. I'm still not doing everything perfectly, but I'm very, very much closer to perfection, although I might never reach that perfection. And maybe that's never the goal, but I'm very closer to the results that I should be getting based on the back testing and so on. So I think I can truly relate to what you're saying, making it a routine, but it doesn't happen just because you want it or because it's automatically. At least it didn't happen to me, and probably it will not happen to many others. You have to do something deliberate about it, deliberate exercise to do it. I think those are the when I refer to this little anecdote that they have of, I believe it was Michael Jordan, that they interviewed him. I don't know the exact words he used, but they interviewed him, what is the process? And he was talking about how people see him throwing, making the points in his basketball career, and he makes it look so automatic, so flawless, so smoothly, graciously how he does and makes. But he says behind that routine, behind that automatism, there is many thousands of hours of him just shooting hoops constantly every day as a deliberate exercise. Even though he's pro, he's been all-star and he's been all there, he kept on doing that to keep that, like you would say, muscle memory. You can call it, whatever it makes sense to each one of us, but it's that deliberate exercise over and over again until it becomes a flawless exercise or an activity. But coming back
Sorry,
to go ahead.
Victor, just to interject there for a second. I think that's one of the most underrated aspects of probably life, well, but also as a trader. And the issue with, I think, or I've experienced myself and hear from other traders, is in the beginning, you don't have that routine. It's hard to follow a routine when you either don't have one or you're not sure what it should be. Or you're not sure if your routine that you're even following is effective. So you're wondering, should I even be sticking to this? Is this worthwhile, committing to? And I think that is where back testing can be helpful. But also when you're doing those types of things, when you are establishing that routine, it's important to give yourself grace to understand that is sort of this growing pain. Like, you don't have to worry about feeling like you're not following a process yet, because you may not have one, and you'll get there, but you don't have to have a process day one. I think it's really important to understand that it takes time to get to that point where you're like, I do this and then I do that and I follow a process. And it's kind of like getting married, right? When you get married, you don't have a new routine and you don't instantly hop into a new routine. It takes time and takes energy and effort. So I think that's important. But the other thing is, when you were saying that you were very specific about, even you mentioned turning your computer on as a step. When you ultimately get to the point that you do have a process, those little tiny, seemingly meaningless things become a part of your wins for the day. So when you follow your routine, even if it's I sit down at my desk, I turn on my computer, and then I do this, and then I do that, you're stacking up wins for yourself that are sort of like the springboard for the rest of your day. It sounds really crazy, and it sounds like it has no meaning whatsoever, but that kind of adherence to your system, I mean, it really is part of your system of how you behave yourself, how you behave as a trader is really, really important. Even my husband was a fighter pilot, and he said that even when they would go and fighter pilots have an extensive checklist when they're in the jet that they have to follow, safety and otherwise. But even before that, when they get dressed, when they arrive to the site and they get dressed, they have a specific way. Most of them have a specific way that they get dressed, an order, a process. I mean, most of us put the same leg in our pants every single day, the first and then second. Those are all little wins that you can stack up for yourself as a trader. And then by the time you're ready to trade, you've had 5 or 6 or 7, however many wins for yourself. And I think that's a really important way to establish, knowing that you're not going to have it all figured out at the very beginning, but you'll get there and then you'll stick to that.
I like that. How you are, by doing simple little tasks, part of your scoring system, right? You're actually building up a higher score, which, lifts up morale, and it makes you feel, and we all know how feeling good about yourself helps you in many ways, right? Isn't that right? We talked this, I think the very first conversation you and I, Dr. Cole, where you said that smiling, even though it's forced
Fake.
smiling,
Yeah.
it's fake, right? It still has benefits, right? It doesn't sound right, because who wants to do something fake? But the thing is, it's tricking our mind into thinking that we should feel and we should be, we are doing well, even though we're not doing well yet. But that little hack, if some people don't like to call it hack, but that little trick that we do, if it helps you and it makes you better, then by all means, why not use it? So that's something similar to what you're explaining, having every step, which may seem meaningful, right? Like simple task that is, difficulty level is very low. While we go through our system, our checklist, we're building up that score, and that score, as we look back and say, it tells us something about, adherence and how well we are performing that day in following that checklist. And that is a very nice stepping stone psychologically to when you actually confront things that require, has a higher level of difficulty. I like that very much, because these things are within our control, right? Like forcing a smile is something you can do. Everyone can do that.
Right.
And scoring these simple tasks, that's something you totally can. So basically, it is completely up to you to use something to elevate, your chances of performing well that day. I like that a lot.
Good. Yeah, and your brain associates. So the reason, I know it sounds crazy to think that anything can be changed by just smiling when you don't feel like smiling, but if you think about it, it makes a lot of sense. Those muscles in your face, your brain associates with, oh, that's what she does when she's happy. And, you have a chemical release in your brain. And so that's the same with other behaviors that we do in our regular life, whether they're related to trading or not. our brain makes a lot of associations. Our posture is another example. Having a really proud, big posture is that is how animals across species, they show dominance and they show strength and they show threat. So you're posturing externally, but you're also telling your brain with your body posture, I feel confident, even if you don't. So there's all kinds of tricks like that you can use. And, we do that in our interactions with other people, but we can use it to our advantage with ourselves as well.
Yeah. And for those who are skeptical, we understand that, forcing a smile is not going to make you profitable, right? And making
if only it was that easy.
if only it were that easy. And making the pose, and I like to call it the superhero pose, where you stand up tall, you put out your chest, and you stand with your hands on your waist, right, looking like Superman. I know it sounds silly, and if other people will see that, will think you're crazy. And if that is what it takes to become better, then that's what I'm going to be doing. I know those things on their own are not gonna. That's not the substance, right? That's not the strategy. That's not the risk management, but that is part of the psychology, right? So it is part that will put you in a better place psychologically, making it just a little bit easier to perform or to go through, let's say, drawdowns period, right? How do you pep yourself up when your strategy isn't performing, or when your psychology is breaking down, your mindset is fragile because of other influences in your life, other events, and you got to put in everything you got to your disposal to help you become better, more resilient, more everything. I mean, and why not do things like that cost you very little, but can help you? So for those who are skeptical, just try it at home. If you're too conscious about the other people watching you, go to the bathroom, do the Superman pose, put your hands on your waist, and feel that you're strong. Perhaps some affirmation as well. That's the same thing. And
that's
go
right.
ahead.
And Henry made a great comment: fake it until you become it. I tell that to my daughter when, she's a little grouchy, and I'm like, look, you don't have to feel happy right now. You don't have to feel confident. Just fake it. And I mean, that happens to me all the time. When I'm angry or upset, do a fake smile, and pretty soon, it feels genuine. It doesn't last forever. Emotions are fleeting. They come and go. So it's fake in the moment, or it's forced in the moment, but it's not forever. I'll be happy again. I'm just angry in the moment, or I'm upset in the moment. And eventually that will change.
Yes. And fake, I think, has to me as well, it has like a negative connotation of false, of not being true to yourself or things like that. But I think you have to reframe, not you, Dr. Cole, but I mean, people watching us, and especially those critical of these tips, if there are any in the audience, let me know in the chat. Let us know in the chat if you agree or you don't agree. We want your opinions, even if they are against. If you don't agree, actually, we want to have these conversations with you. We would like to know your arguments and your experience, any way you're thinking. But what I was going to say is that, the word fake has a negative connotation to it, but we could reframe that into thinking that when you're forcing a smile, for example, it's not a reflection of current situation, but it is your conviction of future positive things to come, right? And you think about that, it's not fake. You're actually thinking, and you're actually having it's a conviction, it's a hope, it's a there's a lot of difference between hope and conviction, but that's the direction that I'm going with. You're looking into the future, and you're that things will turn out to be all right and gonna get better.
Right.
All right.
And
So
desire too. You can have desire to be happy, even if you're not happy, and it's okay to want that and to try and achieve it. So even if you're not happy in the moment, it's okay to desire it and work toward it. So I have my chart up there, Victor, too, if you want to pop over to the chart and
Sure.
can
Sure, for sure. UK Swing Trader says reframe your emotion is fine as long as you put the actual work into effect, the change you need to improve. Totally agree with that, Swing Trader. No one is going to get payouts by faking smiles. Let me put that out right away. You're not gonna make much profit if you just leave it in. You only add that step. That step is only to help you feel better about the beginning of the process.
Yeah, you
Let's
still need
switch.
an edge for sure. You need an
Yeah.
edge, but that can help you with your edge because even though your edge works, there are times when you need a little bit of a boost in your psychological edge too, right? So I've had strategies that have worked really well, but then when I've encountered a series of losses, for example, then maybe my confidence gets shaken a little bit, even though that's well within the realm of the strategy to experience that many losses. Doesn't mean that it's easy to do. And so absolutely, this is just a cheat code to make things easier and to make things better, but it does not mean you can operate without some kind of edge.
Absolutely. We have someone, Arpit. I don't know how to pronounce your name. I'll skip it. Says ask about the giveaway code. There is no giveaway code. What you need to do, my friend, is check the description on YouTube, and you will find a link. That link will lead you to a place where you can answer four multiple choice, one question which has four multiple choice answers to it, and you can try until you get it right. We'll make it really easy for you to get into the game, the giveaway activity we're going to be having every day this week, including yesterday. There is a chance. There is one specific link, right? And that link is still active, right? We're making it really, really, easy for everyone to play along. So you can still go to yesterday's stream and find the link, enter it, and answer the question, and you will have options to sign in with more platforms so that you can get extra entries. It'll all be in that through that link. You will get more instructions, but through the link you can have a chance to win one each day. There are going to be 10,000K, not 10,000K, 10,000 or 10K account, high stake account. And on Thursday, after midday UK time, the winners will be drawn, right? Thursday will be 2 accounts as well. So there's 5 in total. So there is no giveaway code. It's about the link in the description of the YouTube. Don't let this pass you by, this opportunity. All right, before we switch to your screen, Deanna, I would like to I want to say this to everyone watching the screen. I've let it on the screen for some time. On the lower time frames, we can see that there is a bearish order block on the H4 sellers, and that's not surprisingly, because it is at the upper edge of a bearish order block, right? That's where the market is trying to break through that level, that structure. We can see it here. Let's indicate that's the bearish order block that was created. That's I don't have it correctly put in, but that's the order block that was created, and that move, that H4 order block, was created as we for the first time tried to break it, and it still hasn't succeeded. And I understand that the market is very, very bullish, no question about it. Actually, I'll tell you a little bit about it afterwards. But the thing is, we did have an H4 order block, and we did have a refinement in the H1 time frame telling us that if we don't, I'm not saying it's going to happen, but if we are going to have a much more deeper retracement in this bullish trend, this is the area you want to see market reverse from. And if we go to the lower time frames on the 15-minute, I had a 50-minute order block there, but upon further inspection, it's not a valid one for me. although it was at the right place. There is a lower time frame structure right here, and you can see this is, to me, where you should this is the structure that should be respected in that particular time frame. As long as that is happening, I want to short it there. Does that mean that I think the market is going to turn around and break that daily bullish trend? No, I don't think so. But in the meantime, this is understanding the different time frames. While we're still bullish, there will be retraces. There will be retraces into demand zones, and this could, and the fact that we took some liquidity as we pushed beyond that daily order block, tells me that there is a little chance. I agree, it's not very high probability that we could go a little bit lower. And actually, that's my TP, my first trouble area of this trade. As you can see, it is not assuming a lot, a lot of bearishness, right? It's just going to the next structure on a relevant time frame. And later on, I will come back maybe in half an hour or so to talk about the bullishness in EU. But first, we'll go to Dr. Deanna Cole chart. Let's see what you have in store for us today. Deanna, go ahead.
Yeah. Before we take a look at that too, Marina had asked about if I could talk about triggers, and I would be happy to talk about that. I do have a couple videos on my YouTube channel that I think probably address what you're looking for. So I know you know my YouTube address or my YouTube handle or whatever, Marina, but for anybody else interested, it's at Dr. Deanna Cole. And the videos that I'm specifically talking about, Marina, are titled, they have the thumbnail says Trading Psychology 101. There are two. One says habits and self-sabotage, and the other is trading behavior, emotions, and thoughts. And I think that is a nice deep dive into triggers and how triggers impact behavior and what you can do about it. So there are a couple other videos in there as well. So you might want to look around and see if you can find what you're looking for, and maybe we will have time to come back to that as well. So looking at the S&P, this is the S&P. Let's take a look at the daily to start. So price has had, monster move forever, been going up forever. And then back in February had this huge tumble. So right now we're actually getting pretty close again to all-time highs. And what I'm liking about the S&P is seeing that yesterday price went below the previous day low and then closed higher. And not only did it close higher, but it created a bullish outside day, meaning that it dipped below and then ended up above the previous day high. Today, price has kind of done the similar as far as momentum goes, pushing higher. So it opened and continued higher. So we have the swing high here and price is staying above it. There's another swing high here. We can add that as well. And so price has been really strong. Oops, let's put this on there so we can find. Price has been really, really strong. So as far as entering right now, price is pretty extended. So this is the daily. And if we're looking at the 4 hours in the lower right here, and this is the hourly on the bigger chart on the left. So right now, price has been holding really nicely. We got just barely a dip below this hourly swing low. So this could be a potential area of opportunity. The New York Open is in about 40 minutes. So I'm going to be keeping an eye on that. I, again, was able to take a trade last night. So I'm done trading for the day today. The Asian session actually has been really good for trading the S&P, which is not always the case. Usually I prefer trading the New York session, but it's been pretty conducive to trading overnight. But this is an area that I'd be looking at. It wasn't much of a sweep below this hourly swing low, but it kind of dipped below and stayed above. So, this is an area that I would consider a valid entry potential. However, it could, we could see a bigger sweep lower, especially because price is up, near the highs of for sure the week, but it's closing near the highs. Let's pop over and take a look at gold real quick. Gold is interesting. This is not something that I would want to be trading right now. Somebody had asked about maybe going long in gold, I think they were saying, and that seems a little scary to me. Right now, we talked about these periods of time when gold is really pleasant to trade. When it goes up, it continues to go up. When it goes down, it continues to go down. And so we see these times where there's like long continuations with the momentum. And then, since about April, it's been not been the case so much. There have been a few in here, but they've been short-lived. Mostly it's just a lot of chop, sideways action, even kind of like this flagging action that never really materialized. And now we're getting a pretty nasty drop. So I would not personally want to catch this falling knife. I want to wait on gold until times are easier. And if you are inclined to short gold, that might you could probably make a case for that. That is definitely where the momentum is. But this is a pretty strong move down. So I wouldn't want to be buying gold yet. I would want to see more evidence from gold because there is such a nice tell in gold when it does start to trend. And I'm not seeing that yet. So for me, it would be a little bit early.
Awesome. You mentioned scary to short gold, right? That's or long, going long, you said.
No, sure. Scary to go long gold.
Yes, I see that. And that is because of that last candle that is basically we're breaking that slowly upwards the curve. I would describe that. It's a little bit like a little bit of a very known pattern that escapes my mind currently. But that's yes, cup with handle. That's it. Thank you.
Are you looking for cup with handle?
No,
mm-hmm.
Yeah. I was.
It is starting to look a lot like that.
Yeah, it does. Where would you be interested to look for a long? Where is that? Because obviously gold is up front and center, right, in the spotlight with everything that's happening. And yes, there is a fragile ceasefire. You will see gold retreating, but there's going to be plenty of things happening and everyone is on their toes. So gold is going long. Gold is the fundamental idea of that is solid. The only thing is, where do you see value for us to start looking for a long on gold?
Well, I would want to see the price action clarify a bit. So, if we do have now, looks especially like, I drew it as a cup, not thinking of it necessarily as a cup, but just as like a chop area. And now you're right. It absolutely is looking like a cup with handle. So per traditional, what I'm thinking, like Investors Business Daily type, the buy point would be all the way up here for a daily chart. So it's going to be a while before I think I would be interested in buying gold. I think the trading has been a lot friendlier in the S&P, the NASDAQ. That's where I'm focusing my energy and attention until, gold starts to produce some of these really nice, like look at this here. If you were long gold, and especially if you were trading it and maybe held a couple of runners, the going was good until you got stopped out. And then maybe if you were shorting, same thing. This would have been a little bit trickier, but there's these long trending activities that happen in gold. That's just much friendlier price action than what we're seeing here. If you have a really short time frame, you might be able to do well in gold. But for me, I'm just giving my attention where it's just a little bit friendlier, which for me is the S&P or the NASDAQ. Specifically, I've been trading the S&P, but the NASDAQ too. So if you look here, we're coming up on all-time highs on the NASDAQ. That's not that far away. So all-time highs around 22,008, and we're at 22,300, so about 500 points away. But yesterday's move alone was a span of about 500 points. So we're one yesterday away from all-time highs. I mean, to me, this is just a lot easier right now than what we're seeing in gold. But like I said, we are at not all-time highs, but we are at the highs right now. So really would want to see a bit more of a flush. We did get a sweep below, but I think what would draw me in more is to see a really kind of violent move below some of these lows. So you can see there are quite a few of them. We did get this here. This low was taken and then price pushed up. So that's good to see. You could take a small trade there. But we have a bunch of swing lows and a lot of room here where price may want to revisit before having the energy to push higher, unless something in the news happens. I know overnight was some excitement in the news, not necessarily good excitement, but was a news driven some news events, I guess. So yeah, I think for right now, I'm not necessarily looking at a level in gold, just more or less looking to see a little bit cleaner price action. And it's kind of like if the other assets are presenting opportunities in the spirit of simplifying, I don't really see a lot of reason for myself to be looking too much to get involved elsewhere.
I see that. Thank you for your analysis on those assets, gold and NASDAQ. One thing we had while we were talking about 9 minutes ago and 30 seconds, we had the Canadian CPI that was released. Let's take a look at the chart. If anyone was thinking, let's take a look at the numbers. No, I don't. I don't look at the numbers. I don't check the numbers. I have no expectation whatsoever about the numbers, and I don't trade the numbers. I just look at the chart and its reaction, price action reaction. That tells me everything that I need to know. Right? The news was right. Let's see. Right, was right here. That's the candle. No, that's not the candle. This is the candle of the news right here. And we can see that's the 1 minute chart. And it wasn't really explosive, typically isn't, but we can see a clear change of direction. We were going sideways before. And actually, let's look at the higher time frames to see it's a continuation in this case of the previous trend, right? We had a two strong moments of impulsive movement to the upside, which were held nicely, and we had some continuation in this trend. There's one thing I want to I want to show you guys something very interesting. And for those who are traders who are fading, like to fade moves, what we have with EUR/CAD has been quite spectacular. If you consider the fact that yesterday, this is the daily time frame, yesterday we had yesterday the reading on the ATR was 110, but yesterday's range was 175, right? So that's about 170% is 100. It's a daily range. So in that idea, you can understand, or considering that, you can understand that we are on the higher time frames, the daily, the 4 hourly, etc. We are quite, the momentum has kind of got ahead of itself, and we could see some reverse. Whenever I see that, I get some. Actually, I was looking into this. I didn't take this trade, but this was something that I was looking for. When I see these extended moves, I'm looking to see if there's a reversal pattern coming in, and there was one very beautiful. I don't trade EUR/CAD. I mainly trade euro dollar and pound dollar, But as you guys know, I've said it many times, you can use the same principles, the same order block, the same quasi, same fresh order block concepts to any asset. It's just an expression of price action. So if you go to the H4, you can see there's a bearish outside bar, right here. And if you go to lower time frames, you can find some structures as well. The initial immediate retest, and then the actual first retest, and you can see how the market moves away from it. In this case, I would have 2 TPs, right? The fact that I'm going against the momentum may sound very scary, and you have to understand, as I said, the same thing as with euro dollar. I'm not looking for a complete reversal. I'm just looking for that push down because we're overextended, right? You don't want to be too ambitious when you go against the main momentum. So, and if you go lower time frames, you will find some very beautiful areas where to look for. Look at that beauty of a quasi. That is something you want to hang on your walls at home. Look at that. It creates that left shoulder head, breaks the neckline, leaves a very clear objective area where you want to be shorting from, right? It does its thing, goes whatever low it wants, comes back there, exactly there. It does its thing. And of course, you have to give it some time, and it goes right away to your first TP, and that will be which of these TP I would take, because I didn't take the straight. Depends on the overall picture, right? If the market is very, very bullish, you don't think it's going to even do the completion of this pattern, then you want to be more conservative about with your TP, and you'll have your TP here, which would have hit. And if you think, well, we are, there are more reason to think that this could go a little bit lower, then obviously you can allow yourself to have the much deeper TP, or you can have a combination, right? Half or whatever distribution you want to use, right? So that this is exactly what this is a pair that I don't trade. Too bad I didn't see this beforehand, but I did trade this pair in terms of the ATR because it's quite expanded, but it's not with my main strategy. All right, so that is something that I wanted to show. Let's see if it had the same kind of. This is the news when the news was released, and you can see this is actually very very nice to see, because we talk about this. Many people ask ourselves, how do we handle news economic data releases? This is not uncommon, where price comes in and the market, think, or maybe the numbers are good for this pair to go up, right? In this case, it's bad for Canadian dollar because there was a Canadian news that came out, and this pair goes higher, right? But it's sometimes these initial move are kind of fake move. There you have that word again, and then the actual moves comes in where it just turns around and continues on its previous way. And that is, in this case, it's at the top, so it's not a downtrend. It's all right. So we have yes, we had a little glitch there. I don't know what happened. I hope you still have us watching and talking alongside. All right. So this is those are the two pairs that I wanted to show you guys before we continue to the chat. Let's look at the chat to see if there's anything. Somehow yes, there we go. All right, let's go to the chat. In the meantime, I'm gonna look at EU to see if we have anything happening with that possible little reversal. You have to understand, I mentioned this, it's a possible reversal. It's not a huge reversal that will last for days. It's just a couple of hours, sometimes even less than that, even if it happens. All right, so Dr. Cole, so you took your trades, you said, in the Asian session, and the Asian session has been quite good to you, because last time we talked, which was yesterday, you also mentioned that you already had your profits in your pockets as you're traveling, and you shouldn't be too greedy. You already had what you wanted from the market. Does the Asian market always is this good to you?
Definitely not. I mean, it's a lot slower than the New York session when you're trading the indices, but lately we've seen a lot of really good moves in the Asian session, which has worked out really well. Not only am I traveling, but my kids are home from school for summer vacation. So it's been really nice to be able to take a trade in the evening. The Asian session is evening for me, and then just be done for the day. So trying to practice good discipline. Like I said yesterday, I would love to trade all day long, and I can get myself into trouble that way. I know many traders talk about the experience of like having being green and then giving back and going red, and that is the worst feeling. So that is definitely not what I want for myself today. So I will be done trading today. I see that Louis. I would love if you would tell me in the chat, Louis, if you pronounce your name Louis or Louis, but it looks like he is a long gold from 3308. So I think, this just highlights how everybody has a different style, and everybody can make money in different ways. So also the US Open is in a half hour, so that could change things, could shake things up a little bit, or maybe not. So not so much in gold, but more in the NASDAQ. I see a lot of people asking about the NASDAQ, and I wouldn't be surprised to see kind of a shake-up move. I think somebody mentioned too, they think that the NASDAQ may tumble or something like that. Let me see.
Was it this one?
Yeah, there we go. Thank you. And that could be a possibility. I mean, if that happens, it could either be a falling knife scenario, or it could be an opportunity to get long. So we'll have to wait and see and find out what happens.
Awesome. I like that. Before we finish, because we are at the end of our the last couple of minutes before we enter into a new segment, Dr. Cole. I think we have about a minute or two. Before we finish, we said we were going to touch upon the routines, how to build them. Is there anything you can give us in maybe a minute or two, tips how to build routines? Because we talked about the benefits of having routines, but how do we build these routines?
Well, if it's okay with you, Victor, if I can do a variation of that. So Marina had asked before about triggers, and triggers are a big part of routine, or are related to routines. So a lot of times we talk about like the behavior loop, where you have a cue or a trigger, a behavior, or sometimes it's called a routine, and then a reward or a payoff. And so that is a really important process to understand, especially when it comes to unwanted behaviors. So if you're doing things that you don't want to do as a trader, if you are trying to avoid FOMO or revenge trading or over trading, something like that, thinking about that process as a loop. There's a trigger or cue that starts out, then a behavior or what we call a routine, and then a reward. And really kind of analyzing that for yourself can be helpful to figure out how you can better enact your routines and behaviors and stick to them. So if something is triggering you or cueing you to do something other than the behavior that you want to do, and again, I just would say it's really important for traders to recognize it just takes a lot of time to establish the right routines, and just really important to give yourself grace. Again, I said yesterday, finding a friend or a buddy that you can kind of share in the highs and lows with, and kind of encourage one another to stick to your routines, stick to your desired behaviors, and then troubleshoot when you're not enacting the behaviors that you want to be as a professional.
Awesome. We need a lot more of you, Dr. Cole, because I think that is extremely difficult to do well, right? It's
For all of us,
I know
for sure.
for all of us, right? It is. We need a lot of your help. I'm gonna confess, all of us in this room, watching you from wherever they may be, I will talk for them in their name and say, we need you, Dr. Cole. So please come back. I know we have a schedule, but we'll be looking forward for your time with us again to talk about these very important topics. We have Ashley in the waiting room waiting for the next segment. Before we switch, I will put on, or actually we will switch by having a little clip played out. And I would like to thank you, Dr. Cole, for your insights, and hopefully we can have the opportunity to dig deeper into these topics, which are so important for the success of every trader.
Thanks, everyone. Have a great rest of your week.
All right. See you again, Dr. Cole. We were going to come back in just a little while.
Listen up, traders. We got a new competition with massive prizes launching at the Fivers. The top traders, they will win high stakes accounts, and everyone in the top 100 will get a prize, including hub credits and bootcamp accounts. And we're actually doing this every single Wednesday, week after week, so you will always have a chance to win. It's fast, it's free, and it's easy. All you have to do is just sign into the Fivers Hub, click on the contest on the left menu, and join the upcoming competition. We hope to see you all there. Good luck.
Not only we have the competition, we also have a link to this week. Is a week of giveaways. We have everyday giveaways waiting for you to be won. Only thing you have to do is look in the description section. There is a link. Go there, click it, answer a very simple question. And actually, even if you don't know the answer, try another one until you get the right one. See how simple we make it for you to succeed. And you get in and get a chance to win one of these accounts. You see it already, 5 10K accounts for you to win. And besides giveaway, much more valuable, we have with us today Ashley, our weekly dose of good information, knowledge, and experience. Ashley, thank you for joining us today. Again, happy to be part of your company. How are you doing?
Good in yourself, Victor. Hello to you, and hello to all the viewers. Hello to Louis and Vinicius. Thank you very much. I appreciate the welcome, and doing well. I have been away the last week or so, but it's good. It's good. A break is as good as a change.
Yes, there has been a number of people asking for where is Ashley? They were asking in your absence, is Ashley coming on? When he's about to come on, right? But here you are. That's what it counts. You are with us today again, and the group, the audience is responding nicely to your presence. Awesome. Ashley, what has been, how has this week been for your EAs, considering the volatility surge, right? There is a volatility surge. There has been, there has been a gap at the beginning of the week to begin with. Have everything to do with, what's happening in the Middle East. I just mentioned how EuroCAD had a very large yesterday, a very large trading range, which is a sign, is another expression of the volatility that is heightened. How are your EAs faring under these conditions?
The EAs and the strategy itself is faring pretty well under the current conditions, but it's designed to be that way. And again, pretty well is a relative term because one needs to understand the different details and the performance and the weaknesses and strengths of the strategy itself. So what I mean by well, it's operating within the prescribed parameters of the strategy itself. To give some context in relation to that, just before the volatility increased with the Iran and Israel war and that feud that's been happening the last 12 days, just before that, one of my Fivers accounts did draw down. But now since then, through all this geopolitical tension, it's recovered quite nicely. So it's within standard operating parameters. As another term to say. So I'm fairly pleased, I'm fairly happy, not nervous at all, and allowing the strategy to pan out. Monitoring its performance, looking at the weaknesses, looking at the strengths, and making sure it's within acceptable parameters.
Perfect. So actually, the volatility helped you to come back from a drawdown. I have to confess, that's the same thing. I wasn't specifically in a drawdown, but the volatility did help me catch some great moves. I did have a couple of losses, being transparent about it, because obviously these a lot of volatility, they break ranges that typically aren't broken, or where price tend to start reverting to the mean. And of course, on days like this, they don't. So I get in, sometimes get triggered, and these are stopped out. But on the same token, as I had a couple of losses, I also caught some great moves, which is, that's how the market is, right? It comes and gives, and you have to. That's the importance of having a when you're doing your testing, having a long period where you have low volatility, high volatility, different regime circumstances, because that's how the market in reality is. It's not just one one regime, either low volatility or trending sideways market on uncertainty. That's why you need a longer period to backtest on. And on that note, I got a question for you, Ashley. I don't know
Go
why,
ahead,
but I
Victor.
have a question. May I ask my question?
Of course you can.
Thank you. Ashley, this is more for perhaps these the EAs traders among us, those who have either automated their manual trades, or those who are looking into that, or might consider it later. But actually, it's for all traders, because we all need data, right? We all need data. Even if you're not automated, you need data, and that data needs to come from somewhere. How long, right? I know it depends on the time frame you trade, because it takes into account how many trades you need and things like that. But how long? Let's say you are backtesting something on let's say something in the middle, not on the daily time frames and not on the minutes, on the hourly, right? H1. Let's say you have a strategy on the H1. How long in the past does your in sample testing, right, needs to be to account for the different regimes that the market typically has? How do you go about that? How do you make sure that different types of markets are included in your period? What do you do to include that? Does it have to do with the duration of the period, or do you have certain years that you want to be included, certain years that are representative of certain markets?
That's a very good question, Victor. I definitely get what you're trying to get at. It can be certainly a complex question to answer. However, at the same time, it is also very simple. And I'll give you the simple version in terms of understanding from a top-down approach. And that is, by default, whether it is a single time frame or multiple time frame that one is testing or back testing or even forward testing on a strategy. Specifically, the back testing, you should be looking at a minimum of a 1 year period of data. Now, meaning 1 year physical time. So if, for example, taking your question into account, during the hour time frame, I'm not talking about an hour, a year's worth of data, physical data points. So if we take, for example, the anchor time frame, that in my opinion is always the anchor time frame, the daily, a year would be about plus minus 250 to 260 physical data points. I'm not saying 250 to 260 data points on an hour, because that's too little. That equates to basically a couple of days or so. So you'll be looking at least a minimum of a year, if not preferably 3 to 5 years. And more, to be more, not necessarily complex, but to layer it and understand the different scenarios, you would do a year, 3 and 5 years. So that's what basically I do with my back testing. I take a year, 3 and 5 years, and look at that period. And the reason I do that is because, don't forget, when you're looking at a data, specifically a back test, it's giving you the results from this period where it starts to this period where it ends. What you need to do to get a more rounded view and a rounded understanding of your strategy and the data is to look at also varying starting and ending points, not necessarily the same start point. same start date and the same end date, but necessarily a different start date and a different end date. So at times when I do my back test, I'll take a year's data. I'll take, for example, a year to date, 1 year ago from current date, and then I'll take a 3 or 5 year view from the beginning of the year, beginning of the month, or beginning of the quarter, depending where we are. So there's various ways to get a nice, well-rounded approach in relation to understanding the different market conditions that a strategy is going to be subjected to, whether, like you said, low volatility, high volatility, surprise announcements, surprise interest rate moves, surprise geopolitical moves like this, surprise global events like the pandemic in COVID. So one needs to cater for a wide variety of areas.
I understand. You mentioned 1 year, 3 years, and 5 years. And
Yes.
When do you use which?
I use all three at any point in my testing. So personally, I use all three depending on the strategy. So let's just take a single strategy. I would do all of it to give me a more rounded view, because sometimes you could be subject to slight curve fitting if you, for example, take the same period. So what is quite common and popular is, for example, to take the COVID period. Most people, if they're starting to trade now, would probably take a COVID period. Obviously, there was high volatility at that point in time, but that's not going to be reflective of all the different scenarios the market's going to be subjected to. So you do need to alter your start and end dates. You can include the COVID period in all 3 and 5 year, but don't have the same start and end dates, because then that will give you a more rounded view or rounded analysis of your strategy.
I understand that. We are while I'm not figuring out, but I'm trying to put on a screen that I have.
Okay.
I see that I not actually be able to do that, but it doesn't matter. The one question that I have is, okay, so you take the five years. So do you use the 1 year, to skim initially the data, and then you go for a longer time? Let's say you're trying to see if something is positive, like a change is positive or negative for your strategy. And does that, like the initial, before you spend the 5 years, just first go to the 1 year, and if you get, if it's interesting enough, you will go on to go to the 5 years, or you're gonna do the 5 years right away?
Okay. First of all, before I answer that, thank you very much, Victor, always as we speak, and I appreciate what you do. You always try to help the audience by illustrating. That's always a good thing. Sometimes I would like to do that, but as we speak, I'm busy speaking. So first of all, thank you for that. Second of all, is to answer the question is, that's using the 1, 3, and 5 years. My objective is not what you described. My objective for using 1, 3, and 5, and I use it all. I use all three at the same time. My objective is to get as I mentioned, for lack of a better word, a well-rounded view of the performance. I don't want to see. I basically want to see that a certain stats or parameters in the 1, 3, and 5 is basically similar. That one period that I've selected, that is not isolated, there's not a once-off event that is skewing the results. So my objective for the 1, 3, and 5 is to get a broad-based average understanding that there's not one period that's under or outperforming. If there's one period that's significantly under or outperforming relatively in terms of ratios, then it means that there's something I do need to go back and look at the strategy itself. If they're very similar, they're not going to be identical, but they're very similar, then the key thing is then move on to forward testing. So the execution is correct about 1, 3, and 5, and I use it all the time. But the objective, what I'm looking for, is different from what you were asking. I'm not focusing purely on the exact result. I'm trying to get a broad-based understanding.
Awesome. I like that a lot, because that illustrates, that clarifies, because You mentioned 1, 3, and 5, right? And why? How do you apply? When do you use each one of them? But now I understand. It's not about efficiency. It's not about your making it using the 1 year just to be faster, and then you go in deeper with more testing on the 5 year. It's about consistency. You want to see consistency throughout the different periods that you measure. You don't want to see like a 1 year being very positive and the 3 years being so-so and the 5 years again very positive. You want to see either all of them, relatively well or very good, but you want to see the similar, or you want to see consistency in the results. You want to see similar results on different time frames that you're taking out, and that is a filtering, right? A filtering exercise that you're doing to find out which strategies are likely in the future to have consistent results, because that's what you want.
Correct. Well, thank you, very Victor. Very well said and well put in terms of what I explained. Exactly that point. The keyword is consistency, but one can adjust in what type of consistency one is looking for. And the reason I say that is, as traders, as beginning novice traders, or even experienced traders, we are often subject to sometimes too much focusing on the profit. So when I look at the results, I'm not necessarily looking at the bottom line, the profit. I'm looking at different other areas along with the profit. The profit is one of the factors, but not the factor. And I think I've said this before, one of the key higher ranking factors than the profit or profit factor is the recovery factor. So again, the keyword is consistency. But again, you can alter as a trader, depending on your strategy, depending on your personality, you can alter what are you looking to be consistent in terms of that back testing period. But my highly recommendation, use 1, 3, and 5 and alter the start and end date so they don't really coincide, so you get a better overall view of different market conditions the strategy will be subject to.
Would you say this is a practice that is also applicable for manual traders who do their backtesting by hand?
Oh, indeed. Absolutely. By principle, absolutely. However, they are associated challenges to be as efficient as possible when you're doing manual. So you may not be able to do as much and as quick. And that's why some type of automation is going to be much more efficient for you. So principle-wise, 100%. The same principle applies. But because it's manual, one can naturally understand there's going to be efficiency challenges along the way to get to your results, to get to the outcome.
I understand. Yeah, it makes a lot of sense. And I'm just thinking right now what you would do in case of moving your starting date is taking away having, doing only backtesting on the extra fuse, and you move your start and end date with your data. If you have it in, let's say, an Excel sheet, and you have a base where you have all the data, you can pick out, let's say you have between 1 and 500. I know that sounds a lot, but I mean, that's the kind of the numbers you want to be having, at least. Let's say you have 500, and then you take, the last 100, and then the next 100, and so on. And even if they're overlapping, you're breaking down your data into different periods, right? Because you want to see that consistency. I like that very, very much so. Ashley, yes.
Perfect. If I can just give some context for what we're discussing, the principles that we're discussing are very important. However, practically, both for a manual hand trading or semi-automated or even automated trading with EAs, what I think is more important than that principle is to apply that principle in a forward test environment. And what I mean by that is through all types of trading avenues or mediums, whether it's hand trading, semi-automated, and automated, what's very important is to try and, alongside your live or Fivers account or your personal account, is to have some type of demo account And what you do is then you take either the identical trades or you adjust. You have different parameters in terms of strategies. For example, you could say you take a simple manual or hand trading strategy, a 2 moving average crossover, or a bounce, or a break and retest, or whatever the case may be. And let's say you're not too certain if one parameter, if you change, what the result would be. So, for example, one parameter could be add in a trading stop. So if you're more prone to not add in a trading stop, trade a non-trading stop or a fixed stop loss on your live account, run a demo having that trading stop on with identical trades. Then at a certain period, you can then look at the results and say, actually, hang on a second. The data shows that having a trading stop actually was better or worse. That gives you conviction to move to the next areas and to refine whatever strategy. So it's very important because then you can compare like for like, exactly the same market conditions, and then you can slowly adjust. It's very important to have that parallel process, no matter what stage of a trader you are. Obviously, with the hand trade or manual trading, it will be more challenging again. But obviously, that's just the natural environment of a manual trader. So just something to note in terms of perspective from what we're speaking about.
Earlier, I mentioned the term in sample, and I failed to explain what it is for those who are not familiar with the idea. In backtesting and basically in the scientific way, what you do is you build your system, right? Your strategy. In this case, if it's automated, you code and you look for those parameters and those variables. You put them so that you can get whatever goal you have. Typically, it will be profitability, recovery factor, and so on. And all of these things you do is based on a certain period, a certain body of data you have, right? So let's make it very simple. Let's say you backtest last year, 2024, from the first day to the end to the last day, right? And you backtest your strategy that you have, and you start tweaking it, right? Based on the results. You start, okay, what if I do a trailing stop? Does it make it better or not? What if I expand my TP? What if I bring it in? How does it look? How does it change all the parameters that are relevant for my choosing until you have something that you're satisfied with, right? When you're doing that, the period you used to build your system would be considered your in-sample testing, right? Because that's, you tested, you build, you optimized, you changed, you made the decisions based on that data. Now, when you let go of optimizing and developing your system, and you go and apply your strategy, no matter if it's manual or automated, to a period that you haven't used in your building of your strategy, right? That would be out of sample testing, right? So you have in sample testing and out of sample testing. Now, the next question, and that's my introduction for the next question, Ashley, what ratio or how long should we test out of sample?
$1 million question, Victor. If I could also relate it, it's the same thing as how long is a piece of string. So that one is more challenging to answer, and the reason being is it highly depends on the strategy and what you're trying to get out of it. So to give you some broad parameters, to make it very relative for everybody so they understand, is let's take the example I mentioned about that trading stop, or even like you mentioned, adjusting TPs. Let's say you would run it for, and again, time is relative because different strategies, it doesn't mean that everybody's going to have the same amount of trades within a week or within a day. So now we got to adjust a guide parameter to say the number of trades. So as a benchmark, a guideline would be at least a minimum of 100 trades. Okay. Why 100? it's statistically what I have researched and understood. 100 trades is a reasonable amount for the data to be relative and to have some merit. You can't look at the data if it's a couple of trades or less than 10, because you got to be aware, even whether the data is good or bad, the sample that's out of sample data, it's going to be too insignificant. The total's too insignificant in order for the results to have any merit. So you got to have some merit in terms of the data. So at least 100 trades. How long that 100 trades takes really depends on your strategy and how you trade. For my trading strategy, that 100 trades is very easy within probably a couple of hours or less than a day. But again, that's the strategy itself. But if you cater for a wide variety of different strategies and different ideas, it could vary. So the first thing is change the timeline from when you do backtesting to forward testing from now, not physical time, like we said, a year, 3 years, and 5 years, but now in relation to the number of trades. That's number one. Number two is the first parameter of number one of 100 trades. It's not a hard and fast rule. It's not set in stone. You could take 50 trades, and at the end of the result, if the data is showing that adjustment or that variance, that difference, when you compare the two accounts is significant enough and you are confident enough, you can already implement in your live trading, or you can then go on to the next parameter you want to test. So that's why I'm saying is that it is very difficult to answer, but you've got to bear in mind of that, because at the same time, balance is key, meaning that when you forward test, you can't forward test forever, because then you're not going to make changes to your strategy. You've got to forward test and change the strategy as a ongoing process. So that means that each area that you are comparing and testing needs a reasonable amount of time for the data to reflect that information for you to make the change. And the key thing is allow a balance of your knowledge, your skill, your experience, and your expertise along with the data to know when that change can be made, in saying, for this area, I have enough data, I can make the change, or I can go to the next area that I want to adjust or analyze in my strategy. And hopefully that gives a well-rounded answer to the question, Victor.
Thank you, Ashley. You shed some important light there on the topic. I like that. And I don't know, I want to have people in the audience engage us as much as possible. I know we are going deep into the technicals of backtesting, and that may not be something that everyone can relate to, because let's face it, backtesting isn't sexy, it's not dramatic, it's not flashy. It's much more entertaining watching someone on YouTube, driving a rented Lambo than talking about backtesting. But guess what? Guess which one is going to help you improve your trading skill? I'll let that guess to be for each audience, so that they can think about that. We have in the background the reversal trade that is going nicely. We showed this before already, and I try not to interrupt your flow, Ashley, and I showed my terminal taking that trade, and it is posting 26 pips right now. It is which is about 3 Rs. For those who wondering, that's 1,300 of profit.
Sorry, Victor, to make it relative, if I'm not mistaken, if I'm seeing correctly, because I've got my side a small screen of the live stream, are you short on euro-dollar? Is that correct?
Yes.
Okay.
In the sense that my setup, there is a reversal, has alignment, and I got a reaction. It came back to a certain structure. I got a reaction, and yes, I'm short euro-dollar. Let me put it in. Maybe it makes it more easier for those who are wondering, right? I'm short euro-dollar, and I'm targeting at least this area. You could move it up to that low, even a few pips before that. That's up to you, depending on, other things as well. Or you can even have, I wouldn't recommend going beyond that H1 structure, but that's something each trader has to decide for themselves. And where exactly the stop is irrelevant. It can be anywhere that, each trader can decide that for themselves, and where they enter exactly is also irrelevant. That's why I have it in the middle of nowhere. But the point is that you want to be seeing a reaction of this order block, and what that reaction could be. If it's even, sometimes I get it inside the order block. That's up for each trader to figure out, to do that expedition in their data, that very sexy backtesting expedition, to get their own rules and their own edge. Ashley, we have someone from Chile. That is hello, Miguel. Thank you for watching us all the way from Chile. Beautiful country. All right, so we have also a question here from Brian. Brian Cisneros asked, when is the, let's see, we had a question here. Let me see if I can put it on. When will be the draw be of all these giveaways? It will be this Thursday, after midday UK time, right? We will have 5 as on top. You can see in the video, we have 5 10K high stake accounts that are going to be given away each day. Each stream from Monday to Thursday will have in the description, in the description, a link, a unique link for every day, right? So you have 4 different links, one for each day, where you can click and you will be able to answer a very simple question, multiple choice, to get your entry, right? And even if you log in with your platforms, you can have a chance to have more entries as well, more than just one per link. Also, another thing, the link will stay active, or the one, in any case, the one from yesterday is still active for you to take advantage of, right? Whether it's a glitch or whether we want to have you give you more chance, I'll not tell you, but the fact is you can still use that link to get into the drawing, and that is going to be on Thursday, right? So I hope that answers the question for those who were still wondering. All right, so let's continue. We have one question here from let's see, one from Vinicius. I don't backtest, Vinicius says, but I use EA to review my trades using MT5 tester, and sometimes I use simulator EA on tester to check specific situation. That's awesome, Vinicius. What do you say to this? A person, this trader, doesn't backtest, but it does use different EAs to review, and also simulators to refine their strategies. What do you say to this, Ashley?
So to answer the question, firstly, the great thing about trading is that it doesn't discriminate. You got a lot of freedom as a person to express your own personality, your own views, etc. And that's what the markets are. The markets are collectively that. So in relation to what Vinicius has said, that's great. Excellent, Vinicius. I commend you by actually doing something related to what we're speaking about. However, I would suggest that you start to slightly explore some area of drawing some data out, whether it's backtesting, whether it's forward testing, like I said, to run a parallel demo account, even if it's for a week or two or a month, etc. So I would always highly encourage and recommend for traders to start broadening their horizons in terms of understanding more about allowing certain data and combined with your experience and expertise to guide your way through this journey of trading, and not necessarily to think that from certain aspects that it's going to be a given, because of the market and analyzing technical analysis is not an exact science. So we also need to be humble at times to go, what is the data showing? Allow the data to guide the way. Very similar, if I can say, and again, it's a nice analogy, similar to the FOMC chairman, the US Fed chairman, Jerome Powell. He's allowing the data to guide his way in terms of interest rates and not be influenced by geopolitics or Trump, etc., in terms of pressure to reduce interest rates. Allow the data to guide the way. And that's also a good sign of humility.
Perfect. I think it's not only in trading, in life, right?
Correct.
Everything, we don't have that luxury to have data on everything, right? In life,
Correct.
When we take decisions. But the more data you have, the more information you have, the better decisions you can make. And that applies in life, in your daily life, in your life in general, but especially in trading. So back testing, you can be profitable without back testing, right? But it will serve you, can be even more profitable. Define your the nuances of your rules much finer if you have hard data on it, because the thing is, common sense and what seems logic only takes you so far, and learning through experience takes a long time. And by having data, you can actually make that process more quickly. And the other thing is, there are times where a certain rule may not look or feel common sense to apply. It may not look logic. I've had it many times in my strategies that it doesn't make sense. It does not make sense to do it. But I've tested over and over again. It is more profitable. When I have a situation like that, it confirms me that, doing back testing it's something quite important, because you would miss things like that. If you only use, experience and what seems logical. So I really recommend everyone watching us to gather as much data as you can, and as good quality data, right? It's not only about doing back testing for doing back testing. It's about doing it nicely, in a controlled manner, in a consistent manner, objectively, to gather high quality. It's the same thing as nutrition, right? Your health is a function of how good quality food you ingest, right? If you want to have a healthy life, you look for good quality nutrition, and that's the same thing with your back testing. If the quality of your data will decide how good of a back testing result, and how much that can help you on your journey to refine your edge and find perhaps newer edge, things you may have not considered before. We have we have someone asking about the subtitles, Miguel. Understand, from my understanding, the subtitles they are put in later on, right? So YouTube, I think, will do it after the stream, if I understood correctly. So even though they're not available live for you to see, you will be able to see this after we close the stream, with the subtitle in the desired language. And that's why I always say, I also say this in English, because this will be translated as well when that time comes. All right, thank you for watching, Miguel, and keep on watching. From Chile, we want everyone from not only Latin America, but from all over the world, because we are one big family. We're all brothers, right? These lines between different parts of the world, they're man-made. It's one human race. So we are happy to have you from all over the place, because here we talk about trading, and we want to help as many as possible. On the same note, I want to say we have a Discord community. right? Everyone who is watching and is wondering, this trading is a lonely job or activity. I want to have some more, activity, interaction. I want to learn from other people. I want to know their experience. Perhaps I'll have a little exposure on their strategies and their ups and downs. Maybe I want to have someone I can share my ups and downs with. Well, the Discord community is one of the best places to do that. Have an account, get an account with the Fifers, and you will find in the dashboard lower left corner a little icon where you can click and be part of our beautiful tribe we have at our Discord community of the Fifers. Awesome.
Victor.
Go ahead, Ashley. All yours.
Perfect. Thank you. Victor, two things. There's two comments I've seen that I want to respond to. The first one would be Lord's Merrick, and the other one is Venetia's again from what we've talked about earlier. And so if you can, that's perfect. Thank you very much. I'm going to respond to that comment in a moment. You can just keep it up there. But what I wanted to mention to the viewers is to get a perspective, and I always enjoy our engagement with you, Victor, and the audience in terms of the EAs and backtesting. However, I think it's important to mention that as a trader, in my opinion, in my experience, it's always a very positive thing to be a well-rounded trader. And what I mean by that is I don't necessarily only specialize in backtesting and EA. It's also understanding the charts, and we can go through at a point in time, and there'll be plenty of time for us to engage in terms of physical charts and analysis, in terms of fundamentals as well, what's happening, etc. So to be very broad-based is a very important aspect that a trader needs to be very wary of. So if there's something that you always focus on, always try to think of expanding your horizons, because that expands and progresses you on your own personal journey in trading. So that's the first thing to note. Second thing, in relation to Lord's Merrick, I hope I pronounced it right. Your message, I don't think, needs to be a negative message. The markets are always at any point in time challenging in their own right. And losing an evaluation account is not the end of the world. The one thing I think sometimes that currently in terms of traders get sometimes a little bit not wary above, but forget, is that before prop firms became popular, the most common natural normal area was to fund your own personal account. And there you didn't have any necessary restrictions. It was personal, meaning that you could lose the whole account if you wanted to. And that's even worse. So remember now, with the prop firms, there are certain guidelines like 5% or 10%, and that is actually very good. It trains you as a trader, if you haven't been exposed to trading your own personal account, to be within certain reasonable limitations. So losing a valuation in account is not the end of the world. It's a mindset set change, but look at it as positive. And what I mean by positive is focus more not on the result, focus on the process. What did you do that resulted there? Maybe your strategy is fine, but it does require more drawdown. Okay, for example, that's normal, that's natural. Don't be disheartened because you lost your valuation. One would be disheartened if you funded your own personal account with a large sum of money and lost everything. Have done it a few times and you haven't learned. So it's a learning process, and that's some things that sometimes I detect that some traders neglect. That prop firms are actually a very good training ground to train you correctly in terms of risk management, in terms of managing your own personal account. So hopefully that helps. Thank you very much. And then Victor, Venetia's, thank you. Venetia's great. You say you use the data to review and apply stats and probability on an indicator based on your indicator based on reviews and simulations. That's great. Highly commend you. You are doing something that is good. It's in the line with what we spoke about, me and Victor. However, again, I always like to encourage you to broaden your horizons, go outside of your comfort zone, and just look at a little bit of the forward, let's say the forward testing, for example. So always try and broaden your horizons, but highly commend you for, and it sounds like you consistently do it, consistently applying that task. And it is a task, and it is part of being a trader. So thank you. So I commend you there. Thank you very much, Victor.
No problem, no problem. We're here as a team, so no problem. Vinicius, when you say simulator or simulators, how long of a period are you talking about? Because actually, when you do simulation, that's backtesting, right? Simulation by definition, although if you use random price action, that could, that's not backtesting. But if you're using previous, historical data for your simulation, that is backtesting. So you previously said you're not doing backtesting, but that is backtesting. Backtesting is exactly that. You're simulating as if you were in the past, back in time. It's like a time machine, and you get your entry, you fast forward with that, those little buttons on the simulator, or just scrolling with your graph. You're going forward with time and see what is the result. It is the same. Thank you for sharing that. And Vinicius, we can see from the engagement you have and from everything you have shared with us that you are on a very good path. And it's awesome to have you on board as a great member of our community, Vinicius. And so many as well, not only Vinicius, so many as well. It's awesome to see you all here in sharing our passion, because that's what it is, right? Trading is our passion. And that's why we have different people coming in, telling their side, right? Their perspective, their approach of trading. Always when Ashley comes in, we talk very, technical. I consider that to be, perhaps more technical than other periods of our stream, but it's because of everything is important. There are so many things, little bits, a little section of trading, and you can't say one part is more important than the other. They're all there, but you need to have at least a little bit of understanding of each one of them, right? You shouldn't be lacking in knowledge about each one of them, because there are many ways to be profitable, and knowing how to think about your backtesting, your simulator, your data, in sample, out of sample, these things can be very helpful for whatever approach you may have. Even if you're not automated, if you're only manual, like Vinicius is telling us, he's doing it slightly different, right? With simulators and simulating specific, I suppose, specific periods where there's a specific thing that happens. I think that's also a way of backtesting, right? It is, even though it's not sequential, right? It's not going bar by bar until you have a setup, perhaps, or maybe it is. Vinicius, do let us know. But the fact that you go back, the fact that you go back and you look, for example, if you look at the last not 500, maybe it's a little too much, last 50 NFP days, and you only backtest those, that's a backtest too, right? Even if you don't do the backtesting on other parts of the period, there are only specific, and you simulate even if you're discretionary trader, and perhaps that's the best way to gather some data, even if you don't have a systematic system or a rule-based system where you can backtest easily. You do those simulation and you gather data on your performance. I think it's much more difficult doing it discretionary, because you have variances more, and you always have variances anyway, so it's going to make it a little bit difficult. But hey, as we say, there are so many ways to be profitable. It's only up to you to find your path as a trader in this industry. Awesome. We have 9 minutes to go. Ashley, I will give you the word. Before I do so, I want to remember everyone to hit the like button. If you like the content of this stream, and even if you don't, I recommend you in both cases to just hit the like button, subscribe to the channel, and make sure that you're part of this movement where we're trying to empower the viewer with as much information as possible. It's all yours, Ashley.
Perfect. Thank you, Victor. What I also wanted to bring it back to was what you got in the chart, and just to share as well something different with the trades itself. Currently, I'm also short on euro dollar. I'm short on all the dollar the dollar indirects, euro dollar, camel dollar, Aussie dollar, Kiwi dollar right now. I'm long on dollar yen and dollar CAD. I am short on Bitcoin and Ethereum, and I'm short on all the international indices, S&P, the Dow, the NASDAQ, the Nikkei 225, the FTSE 100, and the DAX 40. Those are my current open trades.
Perfect. Thank you for sharing that with us, Ashley. I didn't mention, but we are ever so slightly reaching 70,000 subscribers. We are, I think, 100 and something. I can't see it from from where I am right now, but I know we're very, very close. Hit the subscribe button, because if we as a collective effort, when we reach 75, it's just a matter of time. When we do reach that, we will have next week. Jonathan has promised to have a very a great surprise for all the viewers in the audience. So let's see what that is. Hit the like button, subscribe, but especially subscribe so we can hit that 75, and we can organize another celebration for reaching a nice milestone as we did on the 50, and I'm sure as we will in many other milestones ahead of us before actually there is an end game, right? We're gonna keep on hitting those milestones as we continue. All right, so Ashley, you're short. Of course, you're short, but that is because your indicators, your strategy told you that the market is ripe for a short. Is that correct?
Yes. In relation to the strategy, I've entered some of the trades a while back, a couple of hours back. Some entered a couple of minutes back, and then some came out as well, either on trailing or exit or TP. So it continuously trades. But what I shared earlier was just my open trades right now, etc. And then some of them, just to give you the insight with the technical analysis and the understanding, some of those trades, depending on the daily and what trend it is in, some I'm trading with the trend, some I'm trading against the trend. So I'm aware of that. Or if there is a bit of a slight consolidation like we're seeing in gold, then I'll be trading within that consolidation as well. So some trades are with, some trades are against. And I take that from always the daily trade. So for example, the US indices, I'm short right now, so I'm going against their daily rising trend right now.
Awesome. I like that. The fact that you trade all of them, some of them, as you said, are with and others against the trend, but all of them are US pairs, US dollar pairs. Is it because the Dixie gave you the signal, or is it each one of them in their own merits and their own rights who are giving you signals?
So that's interesting, and it also ties in with what Mike was mentioning in his session about the currency strength meter. So I posted a slight comment earlier that for Mike, that there is value and there is significance about what I call dollar indirect and dollar direct currency pair analysis, which is basically the strength currency meter that he's mentioning, and just in a different way. So to answer your question, on those currency pairs, I always have in my arsenal of 18 symbols that I trade the majors and the minors. You hear very little that they're called majors and minors now, but I'm kind of used to that going back to when I started. But basically, there are 7 main currency pairs against the dollar. All the other 21 currency pairs, if you take the 21 plus the 7, that makes the 28. All the other 21 are the cross pairs of those 7. And those 7 are the majors and the minors, or the dollar indirects and directs. So I always trade that. I don't take my signal from the Dixie, but what I do is on that 7, I'm able to get a sense without looking at a external third-party currency strength meter to get an idea if one of those 21 cross pairs is going to be in a strong trend or not. So that I use that 7 as a filtering to go into the other 21 pairs, and that's the like the scalability, or that's the layering effect, where I've got several base accounts working on a base core strategy, and they trade the 18, and then there's other different accounts where there are selected symbols and that vary depending on what the 18 is showing. So there is merit to it. So that's what I do. So I don't really necessarily look at the dollar index itself, but I look at them as the 7, and then I combine them for the other 21 currency pairs.
Perfect. And let's scratch that surface as much as we can, actually,
yes.
without you spilling the beans, without you
Yes.
sharing, your proprietary secrets, top
Yeah.
secrets on your strategy. How do you, without an external source like Mike is using with the forex, with the currency strength index, how do you do that without that external? What is it, your process, or what can you tell us about your process to find and identify the currency that is going to be stronger or weaker without using anything else, just price?
Okay, so first of all, it's not really proprietary. It's actually just a lot of logic if you understand currency pairs. So basically, very simply, with the time we got, currency pair, you're looking at 2 pairs, and it's an exchange. So it's a pair, they're joined. So for example, the dollar indirect is where the dollar's at the back, is the term. The base, you got the base and the term. The term is at the back, the last currency. So the dollar indirect is where the dollar is the term. So euro dollar, cable dollar, Aussie dollar, Kiwi dollar. Generally, as I'm sure most traders know, you're either going to have that dollar strength or weakness. So if euro dollar, cable dollar, Aussie dollar, Kiwi dollar are all moving in rising trends, they're all moving up, that's an indication you got dollar weakness. Then generally dollar yen, dollar CAD, dollar Swiss are going to be moving down if there's general dollar weakness, okay? And then vice versa if there's dollar strength. Now, what happens is the following: is you got Euro Aussie, Euro CAD, Euro Swiss, Euro Cable, etc., etc., etc. If, for example, you have Euro dollar in a rising trend, that means Euro is strong, dollar is weak. Okay, let's take, for example, dollar CAD now. Dollar CAD generally, if it was pure dollar weakness, dollar CAD would be in a falling trend, meaning that dollar weakness, CAD strength. However, if dollar CAD is in a rising trend, that means that the dollar is not necessarily strong, but that means that CAD is actually quite weak. CAD is quite weak if it's in that rising trend. So now you combine Euro strong, CAD strong, and that's despite the dollar. If you join those two together, being Euro CAD, there's a very good chance that's going to be in a rising trend where you got Euro strength and CAD weakness. Okay, so it's understanding the dynamics. It's really going back to basics with currency pairs and understanding how their makeup is, that one can actually lead to that. It's actually very logical if one tackles step by step. But I am going through it quite quickly now because of time. But basically, that's what it is. And I call it a double whammy. So if I don't get a double whammy, meaning I've got from the 7 pairs, real evidence that Euro is strong and CAD is weak despite the dollar, then I'm not going to be looking at Euro CAD, for example. Okay. So that just gives you a very brief synopsis. Hopefully that does answer the question as concisely as possible with the time that we have.
I think you did it very nicely, Ashley, within the seconds. I think it's also because I understand and appreciate the fact that, when we talk about the pairs, it's a little bit, it's another level of complex. It's not that complex, but it's just one step further from being very obvious, right? You have to think about it, and people in the audience, especially if you haven't thought about it before, if you're new to trading, thinking about, okay, if this one is strength, if this one is strong, will the pair go up or down? It's very simple, very fundamental. But by the way, Eduardo, you are officially spamming the chat. If you keep on doing this, you're not going to be part of the chat, so you will not be able to catch the giveaway you want. So please stop right away before you face the consequences. All right, so yes, coming back to the maybe that's something that I think it is a great topic, right? To discuss this in more greater extent, and perhaps more depth in the coming sessions we have together, talking about correlation and cross correlations, and how to find, which pair is more likely to move in a certain direction, because you have that double whammy, as you call it, to both of them, indicating on, by combining different pairs and different correlation, you get both of them, the currency before, in front and in the back, telling both of them, pointing us in one direction. You have double the chance of being correct on the direction. That's something we can certainly talk about for the next couple of sessions, if that's okay
Correct.
with you.
Correct. No, that's fine. And if Mike wants to, you can also rope in him. I'm sure he'll be interested to hear. And also, it's just briefly, it's not necessarily also the objective of what most people think to which currency pair to trade. It's all about also efficiency as a trader. So it is possible to analyze 28 pairs. I've done it for many years, but you want to be as efficient as possible. It's like a business. You want to be efficient in your business in terms of efficient input and maximum output. And that's the objective that I apply when I apply that technique.
All right. On that note of
Perfect.
efficiency, we're going to close our stream. Thank you, Ashley, for all your great insights. We love it when you come on and share with your generosity the experience and knowledge you possess. Thank you for that. I want to invite everyone. In about 41 minutes, we're going to have another workshop in our Discord community. All of you watching us, I don't know how many thousands are watching us. You're all invited to come in our Discord server and be part of our discussion. We're going to be talking about everything and anything related to trading. You want to be part of it. That's for sure. How do you get in? Get an account with the Fivers. In your personal page, you will find a link, a little icon that is a Discord icon, where you can get in free. It's completely free. Get your access to that server and be part of our group session that we're going to be having. All right. I want to thank everyone for watching and paying attention. Ashley, a special thank you for being part of this session, and all the hosts that made today possible. Don't forget, there is that link. Don't forget your chance of getting a free account, 10,000 account, a 1 and 10,000 account, high stakes account. Just go to the description, hit the link, and follow the instructions and get your ticket into the raffle, you could call it, on Thursday, this coming Thursday. On that note, Ashley, I wish you a very productive way and a very efficient day. And for everyone watching us, I hope to see you tomorrow again, and I'll be here together with the rest of our team to assist you, help you, accompany you, and make the best trader out of you. Take care.
Thank you, Victor. Thank you, everyone. Bye-bye.
Bye.